governor. That's going to be important. And the second factor is SBI. We know, that's a mover in terms of its numbers. You normally get a big move out there. And just looking at the counter yesterday, it seems the street is factoring in, maybe a subdued set of numbers, just going by the price action that we saw yesterday. So if the numbers are not too bad, then maybe the stock doesn't get such a hard hit. We'll keep an eye on SBI. At around 2 p.m., I think we should get those numbers. That's going to be the important one. The stock that I'm tracking today is Avalon Tech. Stock is corrected close to around 30%, I think, from the recent peak. All this in a matter of a month or thereabouts. It went dancing away. And then, in fact, from the peak of around 1,000 rupees, it's come down to around 700 rupees. The numbers look pretty good. It beat consensus estimates by close to around 10%. The EBITDA numbers around 35 crores, which is the best that we've seen in a quarterly performance. And the margins as well in excess of 10%. So good set of numbers. Valuations at around 50 times. I'll keep an eye on this stock because of the correction we've seen, because the numbers are pretty good. And the valuations not extremely expensive. It was trading at around 80, 90 times earlier. So at around 50 times, we'll keep an eye out on this set of numbers.
Okay, Avalon Tech is going to be on the radar as well. Let's start off then with the equity call of the morning. Surendra Goyal of Citi says, headline trends in the third quarter of the current financial year so far are in line with subdued expectations, with EBITDA growth at 5% year-on-year. He says misses and subdued earnings in consumer and energy, while healthcare, industrials and utilities continue to deliver robust double-digit EBITDA growth. He says financials have reported largely double-digit operating profits or earnings growth, slightly ahead of estimates. And he adds that with a pickup in central government's capex in the past few months and budgetary support to consumption, growth should pick up. Surendra says after a 10% decline from the peak with valuations at about 19 times forward earnings, FII positioning at the...
Also, since the last time we spoke, there's, I think, been a few things dominating, right? When the weekly news cycle has changed and how there was DeepSeek thrown in there somewhere as well. What's the dominating driver over the next few weeks, Lynn, according to you, for global equity markets, in your opinion?
So thanks for having me. I think probably the biggest one still to watch is tariffs. A lot of that has been delayed, not all of it, but some of it. And I still think that's probably the biggest wild card to watch in the weeks ahead, the months ahead, perhaps the rest of the year. We'll see how that timeline goes. I think that's very big. I also think one of the ones that went under the radar is the recent announcement by the Treasury Department. So the new Treasury Secretary used to be critical of the prior Treasury Secretary's policy of issuing a lot of treasuries on the short end of the curve, so excess T-bill issuance during this time of heightened deficits. And yet he's signaled so far that they plan on continuing that policy in the first half of this year, which all else being equal is fairly good for liquidity. And that's probably under the radar, another thing to watch for markets, because as long as that kind of pro-liquidity policy continues, it offsets some of the ongoing tightness from the Fed and is, all else being equal, pretty good for financial markets.
Lynn, so, how are you expecting now U.S. equities to shape up? They've been trying to withstand all these confusing headlines on trade wars, tariffs, etc. But largely, the up move has been intact, at least so far. Do you see more of the same?
I do. I think that I'm less likely to expect as strong of a year for 2025 as we saw in 2023 and 2024. But there's valuations are mixed across the board. So there's a lot of valuation bubbles in some of the more defensive assets. There are stocks like Costco and Walmart trading at 50 or 40 times earnings. There are other tech companies trading at pretty reasonable earnings, in the 20s earnings multiples and elsewhere. And liquidity conditions look pretty good. In addition, the debt ceiling ongoing issue in the United States is ironically pretty good for liquidity while they sort that out, because it potentially means the Treasury has to drain some of its cash into the system, in addition to them not wanting to issue extra coupons at the current time. So with liquidity conditions looking decent, the biggest wild card still is tariffs. We could have any number of disruptions among large cap equities, but when we look at financials, they came in pretty strong. And so I think this is probably going to be a choppier year, given more headline risks and things like that. But I wouldn't say there's major calls for concern yet.
All right, Lynn, that's $1 million question, right? What Mr. Trump is going to do next with regard to tariff as well as policies. So we'll have to wait by for that. But what about coming back home to the Indian markets? We had discussed this in the past that India was in favor a few months ago, while China, Latin American markets were ignored. From the emerging market basket, given that the Indian markets have pulled back as well, How are you viewing it? What's the preference out there? And in India, I think you were looking at financials because valuations, well, they were more palatable. Your view now?
Yeah, I'm still generally pretty constructive on the Indian market. Obviously, the valuations are higher than many other EMs, but generally speaking, stronger fundamentals, at least long-term, to go with those higher valuations. India is also, at least at the current time, less in the crosshairs of some of these potential tariff announcements. There's lower overall export risk to the U.S. in terms of the size of the numbers compared to China, compared to Canada, compared to Mexico. And so that keeps India fairly well positioned in this year where there's a lot of headlines that investors can wake up to and find various disruptions on their positions. It doesn't mean that there's no headline risk, but overall, I think it's rather well positioned and still has all the structural uptrends in place.
I think that's a good point that you make. By the way, Lynn, there's been this constant chatter. We don't have any timelines on this, right? We've seen some. I don't know what to make of it. The news flow out of the Middle East, right? But at least there is a ceasefire, and we'll see what happens next. But Russia-Ukraine, there is a summit which has been planned for some time, and apparently there's a plan which is going to be unveiled next week. How significant and is it going to be for asset markets, for oil prices, and I mean generally the environment for equities, if that conflict also gets resolved, or if there is some sort of a ceasefire?
So I view it as obviously very consequential for human lives. I think the impact on financial markets might be smaller than assumed because it's already had a lot of time to absorb in markets. I mean, oil's trading well off its highs it experienced back when the war began. Generally speaking, a lot of Russian oil is still finding its way to the market. And while this can reduce some of the tail risks in the oil market, I generally view it as probably one of those ignore the news events, which is to say that can take away some degree of uncertainty once it happens. But I don't view it as a major market driver at the current time, even though it is, of course, a very significant geopolitical ongoing issue.
Okay. All right, Lynn, we will wrap it up on that note then for today. Thank you very much for joining in and giving us some perspective on how you're reading the situation right now. All right, let's move on. Lots of corporates and lots of commentary coming up on the show today. So here's the lineup. At 8:30 a.m., we'll have Deepan Mehta joining in. We'll talk about a lot of these results that have been pouring through and the big ones that are expected today. At 9, we will be speaking with the management of Sula Vineyards, talk about their third quarter performance and demand trends going forward. At 9:20, our market master of the day is Ravi Dharamshi. We'll find out what he makes of the market now. Is this stability going to last? What do you do in this kind of an environment? At 9:30, we are in conversation with the management of Birla Corporation. We also will be speaking with Mangesh Badang of Centrum Broking, talk about Birla's numbers and, of course, the outlook for the cement sector overall as we are going ahead. After that, we have the management of IKS Health joining in to talk about their outlook post the third quarter. At 9:50 a.m., Rahul Bothra of Swiggy joins in. Swiggy, like I said, could be the big debating point today, big talking point. And we'll see what their outlook is after the third quarter. And then in our special segment, it's the economy. Lata today is going to be in conversation with Chetanaya of Morgan Stanley about the US-China tariff war and the upcoming RBI monetary policy.
आदरणीय सभापति जी, आजकल मीडिया में ज़्यादा ही चर्चा हो रही है, सोशल मीडिया में और अधिक हो रही है। कुछ नेताओं का फोकस घरों में जकूजी पर, स्टाइलिश शावर्स पर, लेकिन हमारा फोकस तो हर घर जल पहुंचाने पर। आदरणीय सभापति जी, हमने ये जो अलग अलग कदम उठाए, उससे लाखों करोड़ रुपए की बचत हुई, लेकिन उन पैसों का उपयोग हमने शीश महल बनाने के लिए नहीं किया। इसका उपयोग हमने देश बनाने के लिए किया है।
Welcome back. You're with us on Bazaar Morning Call. And like we've been saying, it's going to be all about individual stocks because so many earnings are coming in and more are expected today as well. So we have our team standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Let's start, I think, with a bunch of IT names, Rima, that you're watching. What's the news here?
Well, Cognizant came out with their Q4 calendar year 2024 numbers, and the numbers were strong. They were ahead of consensus expectation on revenue and margins, but it's fallen short of the next year guidance. For CY25, the company is guiding for a 3.5% to 6% constant currency revenue growth, and that, according to some on the street, is lower than expectation, which is why the stock is down 1.9% in after-hour trading. That said, there's still a recovery compared to what the company clocked in this year. So last year, the company did a growth rate of 1.9%. Now they're talking about 3.5% to 6%. So yes, growth is picking up, but the pace of acceleration, has still got question marks. Is it going to be a much stronger pace? Can they push towards, higher single digits or mid single digits? I think that's where, the street is still a bit worried, confused about when it comes to IT. But for Cognizant, the key takeaway is Q4 strong. Next year's guidance falls short of street expectations.
Rima, thank you very much for that. So keep an eye out on the implications as IT stocks open up, and we'll do that in the pre-open as well. Swiggy reported numbers and lots of interest around quick commerce, food delivery, but well, what fired, what did? Mangalam is here with details. Mangalam, morning.
Good morning. So, Swiggy reported a mixed set of numbers if you look at it objectively, largely because there was strong performance in the food delivery business. It was offset by higher investments in quick commerce. And if you look at the quick commerce GOV growth itself, it's lagged peers even after reporting 88% growth. So, a quick snapshot, if you look at the B2C total GOV, as compared to Zomato, it's grown at 38%, Zomato's grown at 57%. But food delivery, that's where it's led Zomato. It's actually outperformed Zomato with a 19% growth. Zomato did 17% growth itself. And quick commerce, Swiggy grew 88%, whereas Zomato grew about 120%. So the outperformance for Zomato came in from quick commerce itself. On a reported basis, they reported a 31% revenue growth, EBITDA loss of 726 crores and a net loss of 800 crores as well. The management said going forward, food delivery GOV growth is sustainable at around 18 to 22%, and they maintain their guidance of contribution margin break-even by the third quarter FY26. So that's a positive, given all the others have, postponed their profitability outlook itself. So will the street like the food delivery outperformance versus the quick commerce underperformance? My sense is yes. Why? Because the quick commerce underperformance is already priced in. Ever since Zomato reported numbers, Swiggy is down 13%. It's down about 32% from peak as well. And at peak, Swiggy's valuation discount to Zomato was 35%. Right now, it's 50%. So maybe some green is what we see on Swiggy.
All right, Mangalam, we'll keep an eye out on Swiggy, and in fact, we'll have the management at 9:50 a.m. to tell us about how they, chalking out their path ahead. So Rahul Bothra will be joining in. Well, let's go back to Rima. She's here to tell us about Redington's numbers that look quite good, and Sagility as well. Rima, good news from both these two?
Indeed. So let me start with Redington first. The company's top line has gone up by 7.3% quarter-on-quarter. Year-on-year growth has accelerated to 13.7%. The company's had a couple of soft quarters last year, but now things seem to be turning around. Margin expansion has been very healthy, 2.3%, which compares with 1.8% in the prior quarter, and that's driving a 36% jump in the company's profitability. Sagility too, it's a new listing. The company had listed. The issue price was closer to 30 rupees, and now it's at 50 rupees. Strong quarter. The company's top line growth is 9% on a quarter-on-quarter basis. EBITDA margins expanding to 27% versus 22.7%, and that's driving a big jump of 85% in the company's profitability. So numbers are strong. Margin expansion is very, very heartening. Now, the question is, are these margins sustainable? Back to you.
All right, absolutely. Thank you very much, Rima, again for that. Well, Cummins India and GE Vernova T&D are the next ones we want to focus on. And Vamakshi is here with details on these. Vamakshi, morning.
Well, good morning, Prashant. Cummins reported a strong set. When you look at the revenue, margin, as well as the net profit, all of them have come in above the street's expectations. In fact, the revenue from operations saw an uptick of 22%, and this is coming on the back of a higher base, so which bodes well for the company. In fact, the company has also recorded the highest ever quarterly revenue, and they report robust demand across segments. When you look at the gross margins, they have contracted by 227 basis points, but the EBITDA margins have contracted by 179 basis points and have come in above expectations of nearly 16 basis points. Net profit came in at 514 crores. This is an uptick of almost 13%, came in 6% higher than street expectations. Largely, the revenue growth is being driven by both the domestic sales as well as the export sales. Domestic sales have seen an uptick of almost 18%, and export sales are finally rebounding for the company. They're up nearly 43% year-on-year and 5% sequentially. The management said that the Indian economy is recovering well after slower growth seen in the second quarter. They remain cautiously optimistic about the demand outlook for the near term. However, they're also optimistic about the recovery in exports as well as their long-term potential. So overall, going with a green for Cummins. Apart from that, keep an eye out on GE Vernova T&D, going with a red for this counter, and that is because the revenue has missed expectations. EBITDA margin is largely more or less in line with expectations, but the net profit is above expectations, but this is largely being driven by the tax credit. When you look at the revenue, it's up nearly 28%. EBITDA margin has improved by 523 basis points, and substantial jump in the net profit, but again, this is slightly below expectations. When you look at the ordering activity, order inflow has declined. Order book is up nearly 84%, came in slightly better than expectations, but overall, going with the red for this counter.
Okay, so GE Vernova red, but Cummins could be green. Got it. Let's go back to Mangalam then and talk about Kansai Nerolac. This one's definitely painting some red, Mangalam.
Well, some red, but maybe, afterwards we see some green as well. The reason I say that is because absolutely flat when it comes to revenue. Gross margins have declined pretty much in line with the industry. The EBITDA margins too have come off by about 50 basis points. The net profit saw a sharp jump from 150 crores to about 660 crores, but that's largely on account of the gain that they got on the sale of land, their Lower Parel office itself. The company said that demand in decorative was impacted due to higher inflation, but what supports them is that nearly a third of their revenues comes in from automotive, where the growth was better than the market, and they are seeing gradual recovery in demand out here as well. Apart from numbers, there was a management change announced as well. The MD, Anuj Jain, retires with effect from March 31st. And at his place, we have Praveen Chaudhary, who's been appointed as the MD from April 1st, which is the next year. He's currently the head of India business at Kansai Nerolac, has been at Pidilite in the past as well. So the stock opens in the red by virtue of these numbers, but it has corrected about 20% from the top already. So maybe at lower levels, because of improvement in demand scenario going forward, we see some green.
Yeah, okay. Mangalam got it. Thanks for that. Let's see. We have now Sudarshan joining in. Gujarat Gas. How did this one look, Sud?
So overall earnings are looking weak but on volume growth, while growth for 9-month FY25 growth has come in the guided range. It's basically lower end of the guided range, but Q3 volume growth is lower than estimated because of weakness in the industrial side, while CNG volumes in Q3 have seen a growth of 12%, but industrial side, it has seen a decline of nearly 1%. Also, one key metric, that is EBITDA per SCM, it is coming at rupees 4.37 versus an expectation of rupees 5.10. Talking about the overall numbers, revenue was up 10%, while EBITDA has slipped 26% and margin has come down by 150 basis points to 9.1%. But downside in the stock looks limited because restructuring process is underway. Also, company has announced that it has received no objection certificate for the same from exchanges. As far as brokerage are concerned, Citi has a sell call with a target of rupees 440 per share, and Morgan Stanley has an overweight call with a target of rupees 614 per share. I'm going with mild red for Gujarat Gas.
Okay, all right. Thanks a lot for that, Sudarshan. Well, Wellspun Corp came out with its set of numbers, and this quarter was supposed to be a weak one because from here on, that US orders that they have got will start doing well. But these numbers actually look good, and it's come as a pleasant surprise. So on a year-on-year basis, the numbers look weak because the revenue is down by close to 25%. What's heartening, though, is the EBITDA number. And the EBITDA number came in at around 430 crores, which in fact on a sequential basis is a little bit lower. Keep in mind, this is with the absence of any kind of big contribution coming from the US business. So the product mix has worked in their favor, and the standalone business as well. Very, very good numbers is what we have seen out there. Higher amount of LSAW pipes is what they have done. And that's why that looks quite good. The order value has moved up to around 15,000 crores from around 12,000 crores on a sequential basis. So that gets a thumbs up. And the management has said that as per their estimates, the EBITDA number that they charted out for the year of around 1,700 crores, that's going to be easily achievable. And they're saying that, in fact, the ROC of around 20% as well, they're going to be able to achieve that. So the stock opens up in the green. The management commentary will be hearing at around 10 a.m. or thereabouts. And remember, from here on, the growth trajectory will only improve because of President Trump talking about drill, baby drill. Their pipes will be used. And there is optimism that there'll be more orders in store for Wellspun Corp. So going with green on that one. Let's hop across to Upasana, though. She's here to tell us about data patterns. Upasana?
Well, overall, the numbers were a miss on the street estimates. The revenue continued to fall for the second consecutive quarter, down about 17%, 217 crore on a Y-on-Y basis. Now, revenue of the company was impacted mainly due to deferment in the delivery schedule of completed products by the customers and also execution delay of the current order book is what the company has indicated. Now, EBITDA saw a downtick of about 10% on a Y-on-Y basis and margins expanded about 320 basis points to 46.2% versus 43%, mainly due to change in the product mix of the company. Company's order book stands at 1,095 crore, and also company has given a guidance for FY25. It remains optimistic. It says that it has maintained a revenue growth of 20 to 25% for the full year basis, and even EBITDA margin the company is guiding to range between 35 to 40% for FY25. So overall, weak set of numbers, miss on the street estimates.
Okay, all right, got it. It's not looking that great in terms of numbers for data patterns. We'll keep that in mind, Upasana. Let's quickly get through the commodity cues as well. We have Manisha joining in with a roundup of all the action. Manisha, I was looking only at gold. No matter what, continues to sparkle. But you tell us, what's the latest?
Well, thank you for that, Sylvia. I'll start with the crude oil prices, though, because we've seen a 2% decline overnight. The U.S.-China tariff tensions continue to weigh. But what the markets really are looking at is the U.S. inventories. Those have surged by 8 million barrels in the last week, which is the largest build in an year. Apart from that, the U.S. private payrolls data also coming in on the positive side is something that the street is looking at. But then U.S. is calling for tougher enforcement on Iran. Oil export sanctions, etc., could be coming in on Iran. So various things to watch out for. But what really continues to do well is the metals, precious metals and base metals. Gold is trading near its all-time highs. We have silver prices trading at a 3-month high. The metal prices also have gained because of the U.S. dollar decline. So copper is at a 13-week high, lead at a 6-week high, aluminum trading at a 2-week high. So metal prices today in Asia are doing better.
All right, Manisha, thank you very much for that. So metals doing better. They were doing better yesterday as well. The metal index did well as far as stocks are concerned. We'll take a quick commercial break here. We're going to come back. Deepan Mehta, director at Elixir Equities, will be with us and we'll talk stocks. Swiggy will be in focus and so will be many other earnings-related names. Stay tuned.
selling Ukraine. They have very valuable rare earth. We want what we put up to go in terms of a guarantee. We want a guarantee. We're handing them money hand over fist. We're giving them equipment. European is not keeping up with us. They should equalize. And look, we have an ocean in between. They don't. It's more important for them than it is for us. But they're way below us in terms of money. And they should be paying at least equal. They should really be paying much more than us. But let's say equal to us. And they're billions and billions of dollars below. So we're looking to do a deal with Ukraine where they're going to secure what we're giving them with their rare earth and other things.
Welcome back. Hope you're having a good morning. Well, let's get straight to some fundamental analysis on all the stocks we just discussed. Deepan Mehta, Director at Elixir Equity, joins us on the show. Hi, Deepan. Good morning and good to see you. Let's talk about Swiggy. The stock at around 600, maybe it extended itself on the upside. But at around 418, are you interested going by these numbers, which had some kind of positive, cues that we got from there? What's your take?
Good morning, Nigel, and thank you for having me on your show. I think the discount that Swiggy has over Zomato still pretty much remains over there. And these are one of the few growth avenues within the entire consumption space. So either you have Zomato or you have Swiggy. As a measure of disclosure, we are invested in Zomato. So I think even at these levels, if you have a long-term view, 5-10-year type of a view, these companies are going to grow exponentially from these levels, and they could turn out to be great multi-baggers and give compounding returns as well. I think corrections like this, you can take advantage and get into Swiggy. Why Swiggy over Zomato? Because it's just trading at a mild discount over Swiggy or Zomato. That's the reason. But I think the internals of the company look on path, and the growth remains pretty much intact. It's only a matter of time before it starts going into solid profit.
Okay. So you're retaining the faith on Swiggy. Got that. Deepan, hi. Good morning. Now, the paint stocks, they've been falling, quite badly for very obvious reasons. We had, Nerolac also come out with a very sluggish performance. There's hardly any growth. There's some 50 basis points pressure on the margin. Would you buy these stocks now when the business is struggling? Or do you think that, no, it's too early maybe to look at an upcycle again?
Yeah. Good morning, Swiggy. I think paints, good morning, Swiggy. I think paints ones need to avoid completely at this point of time. I think we have not seen the kind of a slowdown in the paint industry for a long, long time. Coupled with that, we have competition really building up over there. Just too many uncertainties. And I think given the kind of industry profile, it's just best to stay away from paints. Very tough question to answer is whether to keep holding these stocks or to exit. And I would say that every rise in any paint company is a good opportunity to exit out of the paint industry.
More questions coming your way, but let's just sort of tie in that consumer bit off. Deepan, lots of numbers today, and we'll see numbers from ITC, Britannia. So let's get Mangalam back in to talk to us about what the markets are really watching out for from these two. Mangalam, morning again.
Good morning. So, well, let's talk about Britannia first. There has been weak urban demand. Even though the revenue growth expectations are at around 6% the EBITDA falls by about 5% and margins compress by about 200 basis points as well. And on the back of that, we are expecting a 4% decline in the net profit of the company, with the domestic volume growth assumed between 4 to 5% itself. About 1% comes in from price hikes as well as product mix too. The most important thing here would be the management commentary on some of their new product launches, but most importantly on raw material inflation itself. For ITC, the good part was that there was no change in tobacco taxation in the budget this time around. The company went ex-hotel business with effect from the 1st of January. So this time around, they will report their hotel business in the consolidated, rather standalone numbers as well. Just keep an eye out on any sort of one-off expenses which may accrue on account of the demerger itself. The most important number to watch out for ITC is the number that they don't reveal. That's the cigarette volume growth. But analysts assume that this number this time around could be around 3 to 4%. 5 to 7% growth in the FMCG business. Hotels, because of seasonality, grows between 12 to 15%, with faster growth coming in their operational performance. Agri revenues grow 15 to 20%. Sluggish performance in the paper business. All of that put together means overall revenues grow just shy of double digits, 9.5%. This is the ex-excise. EBITDA grows at around 3%, margins hold steady at around 34.5%, and the net profit comes in at around 5135 crores. Optically, the net profit for ITC would be lower, largely because of a 470 crore tax reversal in the base quarter.
All right, those are expectations coming in. Britannia and ITC. Mangalam, thanks for that. Coming back to you, because we've got Trent coming up as well, but let's just ask Deepan if he's got any interest in these two, ITC, Britannia. Deepan?
No, not really, Prashant. I think for us, entire FMCG pact is a complete avoid. And I think these levels also one could look at switching out of FMCG. A lot of products have reached maturity, and these kind of growth rates, 2-3% volume growth rates, they really cannot create wealth from an investor's perspective. I was just checking in the case of ITC, its 10-year sales growth has been 7.22%. That's about it. And profit growth also around the same level. So with these kind of long-term growth rates, you cannot really expect the stock to outperform, and the base effect keeps growing for both these companies, so it's going to get even more challenging going forward.
All right, fair enough. Trent is the other one, right? Last quarter was pretty consequential because growth rates were not 45%, they were just under 40%. Stocks saw a big move on the results day. I'm talking about Q2. Back to Mangalam with what are expectations now? Mangalam.
Well, for Trent, Deepan's alluded to mid-single digit, low single digit sort of volume growth for companies in the staples. Trent has been reporting very high growth, but, valuations ran up ahead of the company as well. So, the valuations for the company peaked out in the previous quarter. The stock has corrected about 31% from highs, but still trading at around 81 times two-year forward earnings. This time around, the revenue expectations have been moderated from 50% to about 35%. There is mild compression expected in EBITDA, largely steady around that 17.9, 18% mark itself. The net profit for the company grows at 40% as per analyst expectations. There is moderation in revenue expected. Revenues would be led by Zudio. But this time around, even if the company does go ahead and beat street expectations, moderate expectations of the street, the question is whether the stock gains its past glory, largely because between last quarter to now, competition has, spiked as well. We have U-Star from Reliance, you have Intune from Shoppers Stop, Aditya Birla Fashion, and a lot of others have amped up their value fashion portfolio as well. So with all of this, is the runway for Zudio ahead, still ahead or not, is the big question. And as a result of which, we'll watch out for Trent. Will be one of the most interesting result reactions to track today.
Oh, absolutely. Mangalam, thanks very much for that. Deepan, what do you say? Is the best over for Trent, given the dream rise? Or is this just a pause and you think they'll prevail come what may, despite all the competition that Mangalam alluded to?
Yes, I'm not worried about the competition as much that, a company which has a physical business just cannot keep on growing at those growth rates. At some point of time, the same store sales growth, the number of new stores is going to slow down. But look, the stock is priced to perfection at about 150 times trailing 12-month. And although it's corrected by about 30% or so from its top, I don't feel inclined to buy it. But selling it is a very tough decision because you're still sitting on a lot of profit and there's still a lot of underlying growth. So I think you just kind of remain pretty much invested and, hope for better results going forward and hope that the P multiple remains at around these levels, because then at least whatever growth rates are there in the earnings per share, that will be matching the expected returns going forward also. Where the P multiple starts to compress, as we have seen in a company like DMart, which is also similar kind of a line of business, then you could have a long period of underperformance.
All right, Deepa, and there were a lot of numbers that came out from the broader market. Stocks like Redington, the numbers look quite good out there after a while. Sagility as well, the numbers look good. Wellspun Corp was another one. Avalon Tech. Any of these numbers that came on your radar, any of them, are looking good from here on? Because all of these stocks have corrected a little bit from the top.
Nigel, haven't really looked at these three numbers, but I thought TVS Motors came with a very good set of numbers, and we're getting, I would say, quite positive on the two-wheeler space. I thought Aisha's monthly figures also are very impressive, and the same is the case with M&M as well. So what earlier the impression was that automobile industry is slowing down, and it did so for a couple of quarters, but I think we are seeing again a mild reversal taking place over there. And this reduction in the tax, which we paid, exemption up to 12 lakh rupees, that can certainly be a booster for big ticket consumption items like automobiles. So I think that entire pack where investors were quite, including us, were quite negative, and there were fears of volume slowdown and discounting. I think we are seeing the end of that particular phase, maybe a few months from now.
All right. Deepan, the one space which was a standout performer yesterday was capital market plays. We've discussed this earlier. The Nifty Capital Market Index was itself up some 4.5%. So you had brokers like Angel, which did one, RTAs like CAMS, etc., which were shooting higher. Nippon was up 10% from the AMC pack, and so on and so forth. What's the view here, Deepan? I mean, generally the fear has been if markets go sideways, P's will derate. Stocks, many of these stocks have already come up 10, 15%, 15% on average from the lows. Anything you like here?
No, Prashant, I think that further correction can be expected in the entire capital market, financial services space, be it wealth managers or asset management companies, stock brokers, even depository like CDSL, because these are cyclical businesses, and their present valuation does not reflect the cyclicality of these businesses. Also, eventually, new account openings, new IPOs, new NFOs from mutual funds is going to slow down. The base effect also is fast catching up for the industry as a whole. So I'm not that positive, although it's a great space to be in over like 5-10 longer term period because of financialization of savings. But you need to buy them when the markets are really corrected and the volume of business is at a cyclical low. Only then you can expect to make good returns. And I don't think we have reached over there. Valuations, I think, are still pretty much quite rich.
There was this name, I don't know if you've seen, it's the smallest of the solar plays. Vari is the biggest. There's Premier, and Acme Solar is a small company, but there was a Kotak institutional equities initiation note. Stock ended 10% higher. Anything you like in this space, Deepan?
Yeah, I think we like the entire solar equipment manufacturing space, as is also with the wind energy. We saw what our largest player, that being Vari Energies, exceptionally good set of numbers. Valuations are reasonable. Stock has corrected from its peak significantly, and a very strong order book position provides earnings visibility as well. You could also look at Tata Power. I thought the numbers, especially on the renewable business side, were quite impressive. I think it's a kind of a safe stock in terms of the other businesses. They give a lot of visibility to the earnings for Tata Power and stability as well. So these are the two stocks which come to mind. But I think across the board, whether it's Acme or whether it is Premier Energies, these are all great stocks to remain invested in. It's just that at corrections, I think it may make more sense to buy them. But one has to have a slightly longer term view. And there's just one issue over here, that being what Trump decides and what US decides on renewables. And that really is a kind of a threat, as also is the Chinese, lower Chinese prices because of intense competition. But nonetheless, I think the prospects are great for entire solar equipment manufacturing companies.
Okay, well, absolutely. Domestic demand remains very, very strong. So that's the tailwind here. Deepan, stay with us. We're going to come back with more questions, but we'll take a break here. There's about 13 minutes to go for the pre-open session. More coming up. We'll get you those technical trading ideas as well. Mitesh and Sudarshan on the other side.
Welcome back. Cues across Asia have actually improved. We should pull up the Chinese markets because they're suddenly soaring away. The Hang Seng, which was at a flat line when we started, is now 1% higher. The mainland Chinese market is also doing really well. So there's a fair amount of green across the screen. You can see there about 0.5% higher on the Hang Seng at this point in time. Japanese markets are also doing quite okay. So what does it mean for us? So what is the direction of trade today? Well, let's discuss that with our technical experts. We've got Mitesh as well as Sudarshan with us. Gentlemen, good morning. Great to have you on. So Sudarshan, let's start with you. Now, yesterday was a total day of consolidation at the index level. All the trades were individual stocks. What about today? Would you look at a long move on the Nifty at all, or the Bank Nifty maybe ahead of the policy?
Yeah, good morning. Actually, yesterday was a consolidation day, and that was good news because markets should not and are not expected to, make new highs and keep on moving. They need some rest, and we got that rest yesterday. So that tells us that after the consolidation, another up move is hopefully likely. So today's trade is very easy. Chances are that you have carried long positions because I had suggested keep long positions, keep on buying on these small consolidation dips. If you don't have it, don't worry. This is the day when you can initiate long positions for next peak. So the trade is for the Nifty, go and buy. And for the Bank Nifty, since I never trade in front of news, you have your own choices. But the Nifty is certainly a buy.
Okay, Nifty is a buy for Sudarshan. Got that. Mitesh, morning. What about you, Nifty or Bank Nifty? And also the levels, because I think now gradually, if we sustain above 23,700, eventually we're looking at moving closer to the 50 DMA, I guess, right?
Good morning, Survi. We have been maintaining this kind of view that we will not only sustain here, but even try and attempt higher levels. Though the monthly charts are yet to show any signs of reversal because we have had 3 months of decline and now we are going through a few weeks of pullback. But the short to medium term charts are quite encouraging. One, staying about 23,600, 630 will be a big plus. Two, I think the 200 average is at about 24,030. So that should be the first target, though I think 24,200, 250 looks like to be the logical target on the upside, looking at the extension possibilities. So stay positive. Both the Nifty and the Bank Nifty, the charts are good, and both should not only test their 200 averages, but maybe, test high levels beyond them as well.
Got it. Okay, sounding optimistic then. Mitesh, you go first. Tell us about individual stocks. What do you like?
So on the stock side, Nigel, I have an all buy list today, just like yesterday. I have a buy on CDSL with a stop at 1324 for targets of 1395. A buy on MCX with a stop at 6,000 for targets of 6,300. A buy on Power Finance Corporation with a stop at 405 for targets of 429. And Lawrence Labs is a buy with a stop at 616 for targets of 660.
Sudarshan, what about you? Good morning.
Good morning. It's also an all-buy list for me. Infosys is a buy, and that comes after a long time with a stop under 1860. IGIL is the buying opportunity with a stop under 195. There are a number of pharma stocks which are now doing the right things. I've chosen Lupin. Lupin is a buy, the stop under 2145. And Granules, another of those pharma stocks, is a buying opportunity with a stop under 565.
Granules, Lupin, and which was the first one, Sudarshan?
Infosys and IGIL.
Okay, we should just put those names up as well. Infi and IGIL, which is what Sudarshan has mentioned. So 1897.
That's Gas.
IGL, sorry, yes, IGL. No, I'm sorry. IGIL, the diamond rating, the lab-grown diamond rating company. But IGL is what Sudarshan is talking about, the pipe gas company, CNG company. So 204, 205 on that one. Okay, all right, we'll take a quick commercial break here. Mitesh and Sudarshan, thank you very much for joining us. We'll come back with more in a bit. We are back. There's about 5 minutes to go for the pre-open session. We'll have the management of Sula Vineyards also with us to discuss their third quarter numbers and the outlook. Stay tuned.
I think we are now getting into a phase where growth will surprise to the upside. The budget reaffirms that. I think this is a growth-oriented budget. In fact, the phrase I've used for this budget is that it's a magic budget, and I'll come to that in a moment. And my expectation is that the monetary policy will back this budget, and the monetary policy will also become growth-oriented. So as far as India is concerned and what we control, I think things are looking up.
I think it is one of the best budgets that we've seen in many, many years, and I tweeted it's a dream budget. So first thing is that you normally want money with the public rather than with government. It should just be the general thumb rule of looking at anything, that money with public is better than money with the government. You have not said that, oh, you cut a tax rate across the board, therefore the rich will get much more. It has come to the correct audience in that sense. So it has to be travel, it has to be savings, it has to be these car consumer durable types. As I said, we are not buying those, but they could.
Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. Detail the indirect tax reform.
Welcome back. Hope you're having a good morning. In the next few minutes, we'll be getting the pre-open rates. We've got an action-packed next couple of days where we have results. We have the RBI policy. On the global front, we'll have the jobs data as well. And then we get into the election verdict coming in from Delhi as well. So lots to track. But for today, SBI will be top of mind in the second half of trade. Abhishek will be crunching those numbers. For the time being, he joins in to help us out with what he's looking at in terms of a preview. Abhishek, morning.
Morning, Nigel. So this is the last of the large cap with respect to the Q3 FY25 results that you will get. Deposit growth will be lower than the industry average. Advances growth to be healthy. Kotak Securities estimates advances growth of 13% YOY and about 3% sequentially. Watch out for the net interest margin. It's expected to decline by 1 basis point on a YOY basis and improvement of about 3 basis points sequentially as per Kotak Securities. OPEX can remain low and that can aid the operating profits. However, operating profits will be, impacted from the treasury gains that they had last time. They had about 4,400 odd crores of treasury gains in Q2, and that cannot be repeated. So treasury gains will be on the lower side. Slippages can rise sequentially. Kotak Securities estimates slippage ratio of 1.5% versus 0.5% in the previous quarter. However, recovery and upgrades will be on the lower side. So write-offs can aid the asset quality. Asset quality is expected to improve as per Motilal Oswal estimate. Gross NP ratio is to come down to 2.04 versus 2.13% in the previous quarter. Net NPA ratio will also decline to 0.5 versus 0.53% in the previous quarter as per Motilal Oswal estimate. Now watch out for management commentary with respect to business growth, net interest margin and return ratios going ahead. Our poll suggests NII growth of 7% YOY and about 2.3% sequentially. We are working with a profit growth of nearly 76% YOY and a decline of more than 12% sequentially. Back to you.
Okay, Abhishek, thank you very much for that. That's a comprehensive snapshot view of what to expect from the country's largest bank. Remember, Ritu spoke with Mr. Sethi of SBI just a couple of days back, and he kind of outlined that, I mean, demand is not a problem. I think the number he used was some 2 lakh crores in terms of pipeline for disbursement. This was just 2 or 3 days back. SBI is starting about 1.5% lower. That's, of course, the pre-open session. Deepan is still with us. Deepan, SBI or any other financials ahead of the RBI tomorrow?
No, I think pretty good numbers can be expected from SBI, and it is fast narrowing the gap with the private sector banks as well, and still valuations are attractive. I think anybody wanting to increase exposure to banks, which they should, because almost 30% weightage in the benchmarks is from banks and NBFCs. I think the PSU banks is a good segment within the banking industry to kind of increase exposure if you don't have adequate exposure to banks.
Deepan, are you a wine drinker? Not in the mornings.
Not really. I saw that Sula Wines is coming on your show. That is one company which has kind of disappointed. I don't think it's operating at its full potential.
So tell us, we have the management joining us in just a bit, right? What is the one thing you want asked? We'll ask them.
I think that as a category in the entire alcobev sector, wines should have the highest growth category, but somehow the numbers always fall short in terms of volume and top line growth. So I just feel that it's got as a story, as a segment, as a business, it's fantastic. But why don't the numbers come through?
Let's start right there, Deepan. Let's start right there, because that's exactly what was crossing my mind, not just looking at the third quarter, looking at overall the performance this year. Rajiv Samant is already there. I think he can hear all the tough questions coming his way. Rajiv, morning. Before we get started, for the benefit of viewers, let's put the numbers up. Good morning. Good morning. Let's put the numbers up. For the third quarter, Sula, the revenues down. It's about 1.4% lower. The margins have also come under pressure. Year on year, when the company was growing at over 30% margin, now that levels come down to about 26.5%. And this is not just a third quarter story. Yeah, those are third quarter numbers that are flashing in front of you. We should also pull up the 9 months numbers. It's been a really sluggish year for Sula, and I guess that's where Deepan's question comes in. Look at 9 months, revenues up about 1.2%. And again, 9-month margins also are way lower than where they were in the same period in the previous year. So that's where I guess the street's disappointment is coming from. Rajiv, there you go. You have all the questions up there. What's happening? This whole talk of urban consumption slowdown, this is only a couple of 1-2 months old, right? But why has it been so sluggish? And do you see anything improving in this quarter, Q4?
We do see things improving. Let me put it in context. This urban slowdown, we have definitely noticed it. And it's definitely more than 1 or 2 months. I mean, I would say that this story is one of the last 6 months at least. Look, I want to put things in context. About a year ago, for a couple of years, we had terrific growth. Our margins went to unprecedented levels. And I always maintained, even at that time, that the margins had reached unsustainable levels. We had everything coming together perfectly. I had said, even at that time, that these margins are going to come down in the future. That's what's happening right now. Perhaps things have moderated a little bit more than we would have expected or would have liked. But I do definitely see the green shoots for the future. And we are very hopeful for the future. This budget that's just happened just a few days ago will definitely put more money in the pockets of our consumers. We have been seeing stress among our consumers and among the consumption of wine overall across the country over the last 6 months. And we definitely hope to see a turnaround in that.
So you're saying it's only linked to the environment and nothing else. If you could just break this down, the green shoots, if you could break them down further, because in the third quarter, even the value segment, I mean, not prestige and above, but even some of the, the economy segment, as you call it, even that didn't fire up. You would expect that maybe at that end, things are better. The premium, I think volume growth was about 3%. The economy segment, the volumes were down about 5.5%. So then where are these green shoots coming?
So, when you say it's only the environment, I would like to say, I mean, there are other things as well. I mean, definitely regulatory this year has been an issue. So our fastest growing state, for instance, Telangana, there have been, I'm sure you've seen the news recently, a lot of issues with payments from that government. And so we've had to slow down, purposely slow down our sales in Telangana. That's been something that has definitely hit us in this quarter. A state that was growing for us 25% plus, we've had to purposely bring down the sales in that state due to payment issues. Very happy to state that those issues seem to be getting resolved. So we again had a perfect environment of regulatory tailwinds a couple of years back. But over the last year, states have been increasing taxes across the board. Wine has been hit because states, unfortunately, are not distinguishing so much for wine versus spirits. So we are beefing up also our regulatory affairs.
Rajiv, sorry, since you brought up Telangana as a specific state, what's the contribution to your overall sales pie from Telangana?
So Telangana has now crossed 10% of our overall sales, but it has been the fastest growing major market for us over the last 2 years. So, where it was something like 7% 2 years ago, it's crossed 10%, whereas Maharashtra and Karnataka, our top two states, have been coming down. Our issues have been very specific in Maharashtra, in Mumbai and Pune. These are the two markets which have been really lagging for us. I must say that the rest of the country, apart from Maharashtra and Karnataka, is close to 10% growth for us in Q3. So the good news is that the consumption of wine is diversifying across the country. People used to point out that we were sort of a two-state horse, you can call us, but that is no longer the case. So Telangana sales have now equaled Karnataka sales in the previous quarter. That's a big deal. You can see definitely the diversification of consumer demand for wine across the country.
Got it. Rajiv, morning. Prashant here. Another investor I was speaking with was telling me that they've got to ramp up distribution in a big way. I mean, the products have to be distributed much more widely. I mean, that's it. The demand is there. So could you tell us what's the strategy?
Yeah, absolutely. So look, over the last few years, we were very much focused on premiumization. Now, I do believe that we have reached a level where, further we have to focus on our entire portfolio. To get the distribution going, we have to talk about our value wines, the lower value wines. Unfortunately, profitability does tend to be constrained when taxes are very high. So we do have levers to pull. We have a lot of levers to pull. One of the reasons for this margin fall is that the nature of winemaking, the whole setup in terms of expenses, is very sticky. You can't just pull back from grape contracts, etc. But moving forward, given the sluggish demand, we're making a lot of changes. So we hope to bounce back in terms of distribution and in terms of margin pretty soon. The comparatives are now getting much better, in fact.
All right. Hi, Rajiv. Morning. Good to see you in. Rajiv, what about imported wines? Are they plaguing your sales? Is that a risk? Because there was some talk on that front.
Imported wines, of course, they are very much a part of the market, but I would not say that they are plaguing. In fact, I would say that among the domestic players, there was a level of unsustainable discounting. Now, Sula has taken the lead to start pulling back on the discount, and that's going to make the biggest impact, in fact, in terms of margin. And I hope that we'll be able to show something better in terms of margin in Q4 itself. We've already begun from January 1, pulling back pretty significantly in some of our key states in terms of the unsustainable selling and distribution expenses. And we do believe that we can do it in a very focused manner without hurting sales. So,
all right, Rajiv. Got that. So you're sounding a little bit optimistic, but the street would like to see some numbers. On a lighter note, a lot of people looking at the budget, but a lot of them packed up from the budget and rushed to the Sula Fest. I believe after a while you did host that. So I think next time around, try not to clash
after
it.
After 5 years, and we had a sold out. It was the only sold out music festival in India this year. We had a terrific turnout. Thanks to all our attendees.
All right, let's get two numbers before we let you go. You said margins will improve in Q4. Earlier, they were not sustainable. To what level do margins improve? And FY25 will be a washout year. No growth has come about. FY26, give and take everything, the pieces seem to be falling in line. What kind of a revenue growth can you guide the street for?
So I don't want to give anything specific, but I will say that definitely FY26 we see being much better than FY25. That's what I would like to say.
Margins?
In terms of margins, Q3 has probably been our lowest point in terms of the degrowth in margins. I would like to point out that in Maharashtra, the VAT subsidy, the capping of the VAT subsidy, that has definitely hurt us in Q3. So that's out of the 800 points or so decrease in margin, around 250 basis points is directly related to the VAT subsidy, which flows straight down to the EBITDA line. And that moving forward, we have put things in place. We now have more units, so we can up that part of it as well. So we definitely see Q4 itself, the fall in margins is not going to be anywhere near as dramatic as Q3.
No,
Rajiv,
so should we
just one
expect
thing,
28%? I mean, you said 200 basis points. If I just, do the math,
250
is
basis
at least
points, yes.
250 basis points. So a recovery towards 29%, 28.5%, 29% margin possible in Q4 itself?
Look, I always said that 29-30% margin is a bit unsustainable. Sorry, I'm not going to guide towards that. But what I would say...
Okay, Rajiv, let me, so on the margin front, what you said earlier, you basically said that you kind of hitting the limits on premiumization. So the focus is going to be on, because last many quarters, last 2 years,
you've... the limits. I said that the focus that we put on now, we have reached a stage, we've got about 75% of our revenues now coming from our elite and premium range.
Right.
Now looking at it, what we really need to, relook at the lower priced wines, find a way to pull the levers there on the cost.
And
there.
push
We have
them,
a lot
right?
of good ideas.
Yeah, so, but you also said pricing will be a little bit under...
Focus on all equally.
Yeah, but which means, I mean, there's no dramatic increase in margins. You in that 28-29% kind of range, right? I mean, as you continue to focus on everything else, the lower end of the portfolio as well.
We see our margins improving pretty significantly from where they are in Q3. Let me state that clearly.
Okay, in that, you're not guiding to specific numbers, but I think as my colleague said, in that around 28-29% back to those kind of levels.
I'm not one to give specific guidance, but I think I've already said what I said.
Okay.
Improvement in margins.
Rajiv, is a buyback something that you would consider?
No, we are not in a position to do that right now. That's not on the cards right now. No, we hope to for our share price to go up with all the moves that we are doing.
All right, fair enough. Rajiv, we'll leave it there. Thank you very much for joining us and hope FY26 is certainly better as you're saying. And we'll speak to you again. Swiggy is what we want to focus on. Mangalam is standing by just to put the spotlight on it once more before markets open. Mangalam.
Well, you've got to look at Swiggy in comparison with Zomato, and two things really stand out. One, the quick commerce business has lagged Zomato, whereas the food delivery business has done better than Zomato. Food delivery for Swiggy grew at around 19%, for the same for Zomato, grew at 17%. Quick commerce at 88% was lower than Zomato's 120% itself. What's interesting is that the management of Swiggy sounds a little more optimistic than that of Zomato. They said that food delivery GOV target at 18 to 22% is sustainable. The adjusted margin in the food business could be about 5%, and they maintain their guidance of contribution margin positive by the third quarter of FY26 itself. Compare that to what Zomato said. They said Blinkit losses will continue in the near term. Food delivery revenue growth slowed down due to weak consumer sentiment. While they can cross and sustain food delivery margins upwards of 5%. That's no different from what Swiggy has said already. And they've said heightened competition in quick commerce has led to a temporary pause in margin expansion. Swiggy, after Zomato's commentary and results, the stock had fallen about 13% since then. And from the peak itself, it's down 32%. Valuation discount with Zomato currently at 50% as against 35% at the peak. It'll be very interesting to see where it goes from here.
Okay, well, it's a good-looking start on the markets. Mangalam, thanks very much for that. We'll have the Swiggy rate come up as well. So 65 points in the Nifty is what the index is opening up. At least the pre-open showed us. What do we have? I think it's 40 to begin with. So 23,740 on the Nifty. The Nifty Bank is up about 75, 50,400 plus. And the IT index is up about 1%. So it's a strong start, that Cognizant rub-off or whatever you want to call it. And advanced decline is pretty solid as well. But we're just opening up, so keep that in mind. And many more stocks, etc., starting higher at this point in time. The Nifty heat map will come up on your screen, gives you a quick sense of how at least the larger ones are opening up. Mid-cap index a quarter. I think the small-cap index I saw about 0.2% or so as well. Remember, the small-cap index, of course, caught up with large caps. While the large caps took a bit of a break, the small-cap index was up almost about 1.7, 1.8% higher yesterday. So those are first trades coming up right now. So
looking at Swiggy, completely take Mangalam's point on the positives, but the thing is the market's just looking at the loss, and that loss has increased quarter on quarter, year on year, and that pain is still playing out on the stock. Let's see if buyers come in at some point in time, but the bottom line is that there's a loss, and the loss is increasing instead of diminishing, which means there's something happening with the business, competitive intensity, investing more in quick commerce, whatever it is. market's not too comfortable with it right now. That's the stock of the morning. Let's quickly move on. On the Nifty, gainers include some financials and some tech. So Bajaj Finance, 1.5%. There's SBI ahead of numbers, about 0.5%, which is up and about. There is tech in the form of Wipro, which is doing very well. Infosys, Tech Mahindra, TCS. It seems a Cognizant read-through for tech seems to be fairly optimistic. Most of these stocks are seeing some early buying. Dr. Reddy's, Tata Motors, Hero Moto ahead of numbers, by the way, also about 0.5% higher. And then some of the consumer names are recovering as well. I can see Lever about 0.5% higher to begin with. Asian Paints, after the huge drubbing it's got this week, trying to now find some stability as well. On the lower side, Trent is still down, by the way. ITC is also a little cautious ahead of numbers. Then there's the Britannia, again, little bit of a red on that screen as well. So it's a little all over the place. Trends are not very clear. Bank Nifty is flat, so is the Nifty. Probably best to be with individual stocks.
Well, that's right. And just take a look at a few of these names, Surbhi. VRL Logistics, the stock is up close to around 16%. The margins have come in at around 20%. That's the highest I've seen in multiple quarters, just plotting a chart out there. From around 12-13%, it's gone to around 20%. I don't know whether there's a couple of one-offs there, but the street likes it. It's up close to 16%. Aarti Pharma, that's the other stock that I'm looking at. Big up move is what we're seeing on that stock. And out there as well, the margins at multi-quarter high. It's coming at around 24% in comparison to the 20, the 17, 23% that I've seen in the last 8 to around 9 quarters. So this is the highest margin that we've seen. I think that's why the street is, appreciating those set of numbers. Avalon Tech, we had made this point early this morning that in fact the stock has corrected 30% from the top. Valuation-wise, it's trading at 50 times, which is not very, very cheap, but at least it's cheaper than what we saw at the peak. And the margins came in at multi-quarter highs. So that's why that stock as well is up and about in today's trading session. Wellspun Corp is more or less flattish. Those numbers are good. In the next 50 minutes or so, we'll have the, the analyst call. So we'll have to hear out what they have to say out there. And I think a few of these names like DigiSpice Technologies, I think Reliance Infra, they are moving up because there's a, circuit change out there. So I think sometimes that, helps sentiment. That's why some of these stocks are reacting, I think, to that flex that we have seen on the circuit filter. So keep an eye out on a couple of these names.
Okay, well, I think let's just look at the market at an aggregate level. We're up about 34 points on the Nifty, 23,730. You've got the Nifty Bank, which is up about 120 points. That's basically about 0.25% higher on the indices at this point in time. VRL Logistics, big move. It's at the bottom of the screen. It's a 15% pop coming through on VRL. Maybe just run through all these capital market names, right, which popped higher yesterday. The AMC companies, for example, Nippon India AMC was up 10% yesterday. Angel One, Scams was 10% in the green yesterday. And so many more. I think BSE was another one which has basically seen some recoveries back at about 5,700, 5,740. So, yeah, I mean, after yesterday's moves, I think it's taking it a bit easy this morning. But, I mean, these are still stocks which have done well, very well over the years. Let me take a quick look at a few other names here. AG's Logistics is up about 2.5%. And it was up yesterday as well. So it's a big move, 816. Reliance Power is up 6%. 42 odd on Reliance Power. Very large volumes on this one. Look at Indus Tower. Back from the dead in that sense, purely from a stock perspective. 2.5, 370 back on Indus Tower. Slowly, it's starting to come back up as the news flow around Vodafone Idea is improving. There's Azad Engineering. There's that tie-up yesterday. 3%, 3.5%. Again, I mean, from the highs of about 1,900, stock fell quite sharply, back at about 1,500 plus. Hitachi is up about 3% this morning. NetWeb is back up about 3.5%, back to about 1,800 rupee kind of levels. So, yeah, I mean, there's a fair bit, and market breadth is pretty positive as well. 1,500 stocks are higher, and you've got about 600 stocks which are down. Swiggy is the number one volume-led loser right now, although it has come back quite sharply from the lows already. The low on Swiggy this morning is 385, and stocks recover about 15, 16 rupees from the day's low. There is Page Industries, which has fallen about 3% this morning. So Page is sharply down with large volumes. These NBFCs, Shriram Finance and Sundaram Finance, both went up sharply yesterday, and both are pulling back a little bit. This morning, all these hospital names went up sharply. Yesterday, Fortis, Medanta, Max Health, and I think there is a bit of profit booking there as well. I'm not sure what's happening with Exicom, which is a fairly recent listing. Stocks down about 8.5%, 9%, 223 coming through on Exicom as well. So that's the overall picture as far as markets are concerned. There is Naukri, which is InfoEdge, which has suddenly popped up the number 2 spot with volume-led gains. And Naukri is at about 8109 on your screens now. And Castrol was a big mover yesterday. It didn't start higher this morning, but it's 2.5 higher. It's got volumes as well. And I think Kansai, Mangalam was talking about Kansai earlier. It started lower. I think it had a bit of a move, and now it's up about 3.6, 3.7% or so. So that's the overall picture on the market with stocks, etc. Nifty has got about 15 points to show for all which has happened, but it's just the first 5 minutes of open that we are looking at.
I was looking at Page Industries. Now, for Page Industries, the issue is that I think the volume growth, which was around 4.5%, the momentum has kind of waned again in the third quarter, and that's what the market didn't like. They had a decent Q2, but Q3 it seems that with the the bulk of the festive season impact out, perhaps that revenue growth number of around 7% is not in line with the market's expectations, and therefore there was some selling that came in yesterday. But let's talk about stocks that have actually, reported good numbers. And Cummins is one, like Vamakshi earlier also pointed out, that it's pretty much a beat across the board. Let's get her back to understand what's worked for Cummins this time around. Vamakshi?
Well, Surabhi, yes, it's a beat across the board this time around. When we look at the revenue, the margin, as well as the net profit, all of it has come in above expectations. In fact, the company has recorded the highest ever quarterly revenue due to robust demand across sectors. Now, keep in mind that revenue from operations saw an uptick of 22%, and this growth that is coming on a year-on-year basis is already coming on a very high base, so that bodes well for the company. The gross margins have contracted by 227 basis points. The EBITDA margin too is down only 179 basis points year on year, but the EBITDA margin is slightly above the street's expectations. When we look at the net profit, that has come in at 514 crores, a strong uptick of nearly 13%, 6% higher than the street's expectations. Revenue growth is largely being driven by both the domestic sales as well as exports. Domestic sales have picked up by nearly 18% year on year. Export sales have also managed to recover both on a year on year basis because it was a very low base to start with, but on a sequential basis as well, exports are recovering well. When we look at the management commentary, they say that the Indian economy is recovering well after slower growth seen in the second quarter. They remain cautiously optimistic about the demand outlook for the near term. The long term, they are quite optimistic on, and they're also optimistic about the recovery in exports demand. So overall, a good set coming in for Cummins India.
Okay, all right. Got it. Thanks very much for that, Vamakshi. Must add, though, today the market's very quiet across the board. It's not even like the mid-cap index is surging away and there are big moves out there. It's really a quiet Thursday morning, you'd have to say. The Bank Nifty is now blinking a little bit of a red. And the Nifty has, just a 4-point gain. There you go. Bank Nifty is already sold off a little bit. And Nifty is also just dipping into the red territory. We've got Mangalam joining in back with us to go over Kansai Nerolac's numbers. Just jog our memory. Not looking too good, but what are the positives?
Well, the numbers were weak, but the question was how much of that was already in the price. And that's exactly what's taking place in Kansai Nerolac as well. If you look at the revenues, largely flat. There was a mild compression in gross margins, but the EBITDA margins came off. There was a big boost on the bottom line led by a one-off gain on sale of land in Lower Parel. The company said that demand in decorative was impacted due to higher inflation. The good part about these numbers is nearly 45% of Kansai's results or revenues comes in from industrial. 70% of that comes in from automotive. And automotive growth was better than the market, and that's more sticky when it comes to demand itself. And even decorative, they are seeing gradual recovery in demand. The management change is something that the street is keeping an eye out on too, because Anuj Jain, who's been with the company for almost 35 years, will retire as MD by the end of this financial year, will be succeeded by Praveen Chaudhary, who's currently the head of India business at Kansai Nerolac. And also, importantly, we'll keep an eye out on, the valuation for Kansai Nerolac itself, which is at a discount to all the other peers in the industry itself. So on the back of valuation support, good diversification in revenue coming in from the automotive business, gradual recovery foreseen in demand, and, the management change, the stock has recovered despite weak numbers.
All right. Thanks very much, Mangalam, for that. Ravi Dharamshi is now joining us, Chief Investment Officer at ValueQuest Investment Advisors. Ravi, good morning. Good to have you with us here. Thanks very much. The overwhelming narrative locally has been the slowdown that we've been in, but markets try to look ahead. And when you do that, there is a small minority which, I mean, the view is only emerging that maybe, you know, when we talk about a slowdown, it's we're looking back. You got to look ahead. And that is already sort of self-correcting in some cases, but maybe with some help from the government and maybe the RBI tomorrow. Do you believe that, Ravi, that it is starting to turn already after a quarter, 2 quarters of slowdown? What's your sense?
Thanks. Good morning, Prashant. No, I agree with that viewpoint that, you know, this, I won't even call it a cyclical slowdown. I think it was more a seasonal slowdown led by factors like election, which kind of halted the capex machinery. The problem with the Indian economy was that it was firing in only one engine, which is the central government capex. And the moment that kind of took a pause, that kind of led to a dramatic slowdown in the previous quarter. However, now that is correcting itself. The spending is back with a bang. Even the budget, even though the headline number seems smaller, but it is continuing 3.2% of the capex to GDP ratio. So the capex levels are being maintained. I won't say that is an issue. So one more thing that budget has done is it has added probably one more engine of growth, which is consumption, which has not been doing well since a while. So now capex maintaining its pace. And see, even within the capex, the bigger pieces are private capex and household capex. Now those two pieces need to fire rather than the central government bearing the entire load. So I believe that with some help from RBI and some help from government, we should be able to get out of this seasonal slowdown that we have been witnessing.
Ravi, so hi, great to have you on the show. I think the consensus now, a couple of days after the event, is that capex maybe is not entirely going away. And yet there is this bit of a consumption boost. And that's what you point out as well, right? That this is this troika of real estate, private capex and the consumption cycle that is really important to take this market higher. What part of this troika are you most optimistic on? If you were to put fresh money to work, would it go towards capex stocks, consumer? I mean, and give us some sub-segments as well, because they're very large segments, right? So what in capex or what in consumption would you back?
So I think 2-3 things we've been trying to anticipate in the market. One is that this passing of the mantle within the capex cycle from central government towards private sector capex. This was regardless of the budget. I mean, we were looking forward to it. Second thing we were anticipating is the broad basing of the real estate cycle. I think real estate cycle has been kind of very skewed towards the premium end of the economy, and we need to see broad basing of that. This budget and the previous budget, I think the government has done enough to reignite the real estate cycle. They have kept enough elbow room for the RBI to cut rates or at least bring the interest rates down. So from that perspective, I think real estate should see a boost going forward. So those two are the bigger engines of growth. So we continue to remain bullish on certain segments of capex, and incrementally now we are looking to consumption-oriented stories also are beginning to get featured in our portfolio. It has been missing since a while in our portfolio. We have not bet on consumption since probably last 4-5 years. But now I think that is going to change incrementally. And we are more betting at this point of time on smaller ticket items, not necessarily staples, but consumer discretionary. So without naming any company, but apparel companies, retail companies, footwear companies, quick service restaurant, these are the categories and segments that we would be keen on looking at to see where the pickup is showing up first.
Okay, all right. Hi, Ravi. Good to see you in. Ravi, the other big debate is on renewable energy. And you all were early in, on a couple of those stocks. But could you give us your comment on this? Because this government is focused on renewable energy, and there are various measures as well that are being taken in that direction. There is this debate about overcapacity, maybe in the globe, but in India, there'll be still a lot of demand for modules, for chips as well. So give us your comment on this. How do you think things are panning out? Is there a shortage of these modules, these cells as well? And do you think the theme still has legs from here?
So India is but one piece of the entire jigsaw puzzle. The larger question remains on the global markets. No doubt about it that China dominates the supply chain, and no doubt about it that there is a oversupply situation in China. China has invested ahead of the curve. It has been a geopolitical strategy that China has been running to crash the prices. and with their, with the prices crashing, then it becomes unviable for most other countries to put up their capex. But strategically, it would be a mistake for countries like India and US to not do the capex and develop their own supply chain, because then they will remain dependent on China for probably forever. So from that perspective, the world will develop into a China-catered market and a non-Chinese catered market. And in the non-Chinese catered market, India will have a large role to play, whether it is India and US, and maybe some other markets might also become part of that. But these markets will remain non-Chinese. They will put tariffs and non-tariff barriers to ensure that the other supply chain also develops. So again, Indian scenario looks very good from the next 2 years perspective, but the entire sentiment right now is being driven by what happens in US because of the kind of steps being taken by the new Trump administration, which has put pause on Inflation Reduction Act led funding. That is what is creating the uncertainty. And I strongly believe that it is only a pause, and soon enough it will turn around, and in some or the other form, Inflation Reduction Act, maybe it will become a Make America Great Again Act, and it will come back with new overalls. But I don't think solar as a technology is going anywhere, and renewables, the move towards renewables is going to be paused even by the new Trump administration.
Okay, interesting. Thanks a lot for that, Ravi. A short but effective chat. Appreciate you joining in and giving us your comments on how you see the market shape up from here on. That said, let's get to another old economy. That's the cement space. Aditya Sarogi, the Chief Financial Officer at Birla Corp, joins us on the show. Hi, Mr. Sarogi. Good morning, and thanks a lot for joining in. Well, if I look at your year-to-date numbers, it's more or less flattish in terms of volumes at around 12.8 million tons. But you're guiding for better times ahead. Now, in the base year for Q4, you did around 4.8 million tons. So what kind of a growth are you guiding for Q4, and what do you end this year with in terms of volumes?
In Q4, we are expecting around 7 to 8% growth in volume terms.
Okay.
And we should, with those kind of numbers, we should end the year with a total volume of around 18 million tons.
18 million tons. All right, you're sounding quite optimistic on that. And on that base, what kind of a growth are you looking at for FY26?
It's slightly premature. We expect it to be in single digit, but I think I'll be able to give you more precise estimates in the next phone call.
Okay, all right. So single digits at least is what you're working with. The other important point is the EBITDA per ton, Mr. Sarogi. You are guiding for better times ahead, but the street is a little bit cautious on that front because your EBITDA per ton is sub 600 rupees per ton. But now we know that, you have various levels in place. You have taken some cost-saving measures as well. So what is the outlook on the EBITDA per ton for Q4? What is the improvement you're factoring in? And for FY26, do you get back to this 800-900 rupees EBITDA per ton mark or even more?
So for Q4, for H2, we had actually guided 150 to 170 rupees increase over H1, which was at 536 rupees. So that translates into EBITDA per ton of around rupees 700 for H2. Now in Q3 we have done about 570 rupees, and in order to arrive at a 700 EBITDA per ton for H2, we'll need to do about 800 rupees per ton EBITDA in Q4, and we are fairly optimistic that we should be able to reach there.
All right, 800 rupees. So that will be a big improvement from what you've done in the past quarter. A quick question on Mukutban. What is the current profitability difference between Mukutban and the core Birla Corp business?
We are not giving a separate breakup for Mukutban number because it's slightly difficult to give those numbers. So, but it is quite profitable. Last year it was making losses. And this year, with incentive also coming in, it is now pretty much a profitable unit and contributing significantly to the profitability of the organization.
All right, Mr. Sarogi, the street will want to know what about the balance sheet, because you have to give them some triggers, right? Growth is very mediocre, EBITDA per ton is improving as well. Now, the debt number in the books is 3,100 crores is the last number we have. And I think you've scaled down your capex guidance for this year as well. So give us an update on both those two numbers. Where do you see the debt headed For this year, I think the scale down guidance of capex is around 500 crores. And what about next year?
This year, the debt should be pretty much below 3,000 crores. And next year's capex number we will be able to give an estimate in the next quarter call.
All right, got that. I want to ask you about pricing, but first let me get in Jyoti Gupta, the Senior Research Analyst at Nirmal Bang Institutional Equities, who joins us on the show. Hi, Jyoti. Thanks a lot for joining in. Jyoti, last few days, a lot of buzz. I've spoken to a lot of sell-side analysts, a lot of market participants as well. There's been this buzz about price increases. What have you heard, and how much do you think is being absorbed?
Good morning, and thank you for having me here. Good morning, Mrs. Sarogi. Exit quarter three, there's been increase in price. In fact, month of January has been good. Feb has been a little lukewarm, but we still have at least 21 days still to go. Feb, we have not seen maybe marginal increase in prices on an overall basis. So non-trade has been a bit better because of obviously project, the demand, and retail has also picked up. So last quarter, we saw some 200 per ton improvement in the non-trade prices and 100 in the trade prices, which is actually reflecting the EBITDA per ton numbers. This quarter, I believe the prices on an overall basis, improvement could be around anywhere between, on a net basis, trade, non-trade should be around 100. So more or less on a flat, fourth quarter, we should exit with flat because pricing, because Feb, we've had good demand and pricing, but March we would exit with literally the prices are going to roll back. So net basis, maybe 100 rupee per ton in terms of realizations.
On a sequential basis?
On a sequential basis.
All right, Mrs. Sarogi, do you concur out there in that improvement of around 230 rupees, 240 rupees of EBITDA per ton improvement? What are you penciling in on the pricing aspect? How much improvement?
So just to give you an update, in the month of January over December, we had a price increase of about 1 to 1.5%. And for the quarter as a whole, we are expecting price improvement of at least 2 to 3%. So on that basis, I would rather concur with the view that it should definitely contribute 100 rupees to the margins in this quarter on a sequential basis.
All right. Final question, Jyoti, before we let you go. What are your top buys in the sector?
So large cap, Ambuja, mid Ramco Cement, and in small cap, JK Lakshmi and Birla Corp. Of course, I'm quite positive on Birla Corp. Basically, the geographical distribution is very, very well allocated when it comes to Birla Corp. So they should benefit because last quarter we've had North region doing very well, and this quarter it has sustained the demand momentum as well as the pricing momentum. So North, West, Central regions are actually doing well, and East is likely to pick up going forward.
Okay, all right. Thanks a lot, Jyoti, as well as Mr. Sarogi, for joining in and filling us in with your take on the sector and how you see things panning out. Quarter four is looking up as per your commentary. For the time being, though, we shift focus away from the cement industries. We'll connect with the management of IKS Health for their quarter three numbers. Stay with us.
Indirect taxes in Part B, financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified.
Okay, welcome back. We've got the market, which I think is now taking a bit of a dip, 30 points lower, but nothing major. But there is that pullback, which is emerging in some quarters. Well, let's keep it with earnings for now. And recently listed IKS Health is on a focus now. Now, third quarter revenue growth has been about 17%. 9-month growth rates look pretty solid. On a quarter-on-quarter basis, of course, they look very muted. Let's understand how to look at these numbers and what the future looks like. Sachin K. Gupta is founder and CEO of the company. Nithya Balasubramaniam is CFO of IKS Health. Thank you both, Sachin and Nithya, for joining us here on the program. Last time we spoke, both of you were in the studios. Not this time. Sachin, how should we look at the numbers? Because revenues, for example, right? On a 9-month basis, I was looking at the investor presentation, 62% growth. On a quarter-on-quarter basis, it's about 2.2% growth. On a year-on-year basis, it's about 16% growth. What will you do for the full year FY25? We'll get to what happened in Q3 and the trends, etc. But just get the basic hygiene stuff out of the way. For the full year 25, what will you end up with on a revenue basis? And then guide us for FY26 as well, given how trends are developing. Go on.
Hi, Prashant. Thank you for having us on the show. So look, I think before I go into specifics, I do want to recap that when we were on our road shows and having our initial conversations, we had laid out very clearly the theme for FY25. And the theme for FY25 was actually a three-pronged theme. One, we were consolidating and integrating a major acquisition that we completed in FY24 that nearly doubled our revenue numbers. And so a big part of this was consolidating that entity, and actually in the process of consolidating, pruning and cutting the tail of small customers that they had, because we went from a 50 customer company to an 850 customer company. And when we had acquired Acuity, we were very clear that really it's more like 450 of their 800 odd customers that are going to be the large customers that we're going to be interested in. So one of the themes of FY25 was we were going to cut the tail on the customer base. Second, we were going to get Acuity's margins to the right place by deploying IKS's operating model, our proprietary technology and our global execution into the Acuity customer base, for which we would incentivize their customers through some discounts. And so those two phenomena, those two themes would have a dampening effect on our actual fiscal 25 growth. In spite of that, we had said that we will be actually able to deliver faster than the growth of the industry. The TAM is growing at 12%, the $225 billion TAM, of which 30 billion has been outsourced, is growing at 12%. And in spite of those two dampening phenomena, we've actually delivered a very successful Q3 in 16% growth. And going into Q4, we're actually seeing even more tailwinds, especially as our cross-sell kicks in. And so we expect to deliver even better performance in Q4. In addition, actually, we've surprised ourselves in the glide path of margin improvement, where our margins, blended margins, were 24% EBITDA when we acquired Acuity. This fiscal quarter 3, we've actually been able to deliver nearly 31% EBITDA margins. And now I think we've inched much faster, closer to that steady state margin guidance of sort of the mid-30s EBITDA. So all in all, I would say a relatively successful quarter, relative to what we had set as the tone for this fiscal, and looking forward to an even stronger Q4.
Sachin, that's very well put. For 26, give us a sense of how to what to expect. Will you be in this 15% top line growth for 26? Will you start to ramp up? And margins, you said, is about 30.5 in the quarter and 29.1 for the for 9-month period. You said you'll be in mid-30s on EBITDA margin. Revenue and EBITDA margin. Go on.
So on revenue, Prashant, while we're not giving formal guidance, our thought process has always been that the industry TAM is growing at 12%, and we will grow far faster than the industry TAM because we are leaders in the market. So while I will not give a formal guidance on revenue growth for FY26, based on our historical legacy IKS growth rates, which were constantly north of 25% year on year, and the activation of the cross-sell in the Acuity install base, I think it would be suffice to say that we can maintain our thought process of growing much faster than the 12% that the TAM is growing at. And on margins, like I said, we do expect to arrive at the sort of mid-30s margin range in steady state. Whether that happens entirely in FY26 or leaks a little bit into FY27, time will tell. But we certainly intend to continue to be on this improvement path from this 31% towards the mid-30s.
Okay, got that. Nithya, hi. Welcome to the conversation as well. Let's talk a bit more about the client additions because, the client add numbers, I think, so far for the first half are about 778. The mix is obviously largely the US. Can you tell us a little more about the concentration of top 5 clients? I think they've been growing at a pretty good pace of about 19-20%. So do you expect that run rate to continue from the top 5?
Thank you for that question. So if you look at the total number of clients, as Sachin mentioned, we are actually deliberately cutting the tail of the equity customers that we had acquired. If you remember, when we acquired equity, we actually had about 850 plus clients. That this quarter has come down to 750. So this is deliberately done in order for us to be able to focus on the larger clients. If you remember legacy IKS, we always had fewer customers and fewer enterprise scale customers where we would then be able to mine and improve our share of wallet over a period of time. Coming to the second part of your question, we have actually been able to grow our top 10 clients as well as top 5 clients significantly. A large part of our growth is actually driven by our larger clients. And I think going forward as well, given that we actually already have such a large customer base, you will see that most of our growth will be driven by our existing customer base. Almost 90 to 95% of our future growth will actually come from our ability to mine our existing customer base, and the rest of it coming from few new logo additions.
So, just to talk about, since you mentioned equity, I mean, how is that whole sort of piece shaping up for you? And an outlook on the debt as well, because you'd had to, increase your borrowings when that acquisition happened, and gradually that debt level has been coming down. So if you could just guide on that as well.
Sure. I think we continue to be able to generate very, very strong cash quarter on quarter. If you look at operating cash flows this quarter, north of 150 crores. If you look at free cash flow generation as well, 109.5 crores. So we continue on that path of cash generation, which is why you will see that we have been able to pare down the debt that we acquired when we acquired equity. And therefore, our interest costs have actually come down this quarter. So our net debt position, you would actually note that has actually slid down to, had it been business as usual, has actually slid down to around 510 crores or so. There was an exceptional item this quarter, which again, Sachin had explained on the earnings call. We have advanced about 140 crores to Palomar, which is one of our marquee clients with whom we have done a one-of-a-kind platform deal where we have upfront guaranteed the economic value add. Otherwise, on an ongoing basis, you will find that net debt continues to come down with the cash generation.
Point taken. Sachin, 30-second response to this, maybe a minute. 2 questions. One, there are all these reports that, the DOGE team in the US is looking at Medicare and the Social Security programs in a big way to cut spending. Is there any fall through because of that? And second is, is there a risk of some startup in the US? I mean, you're talking about a 35% margin business, but is there, all this AI and new technologies, etc., suddenly disrupting the business, the industry?
So I'll try to give you a quick response to both. Look, I think on the Medicare cuts, our entire business model is built on the foundation of being able to reduce total cost of care and improve quality of care. There are specific features on our platform that actually enable the reduction in total cost of care of managing chronic disease lives. So I think pressures from Medicare and even commercial payers on reducing reimbursement actually are a huge tailwind for our business and will drive even better adoption of our platform. So that I think is a solid tailwind for our business.
Okay. We'll get you on a less busy day, both of you, and it's an interesting business. We're on a earnings treadmill here. Sachin and Nithya, thank you very much for joining us. Good speaking with both of you here. More conversation later. Swiggy is the one which we want to focus on. Third quarter earnings came. Losses are wide and Y&Y, but strong performance in food delivery. My colleague Mangalam caught up with Rahul Bothra, Chief Financial Officer at Swiggy. Okay, I think what we'll do is we'll welcome in Mr. Bothra to sort of answer some of the questions. Mr. Bothra, good to have you with us here. Thanks very much. Food delivery, you seem to have gained market share in the quarter. Can you tell us what geographies have you grown faster in?
So I can't specifically talk about market share. I think what really has happened is our trajectory of the growth in the food delivery business has improved. I think our guidance has been that we can grow at 18 to 22% over the medium term. Last quarter, we grew at 19%. And we do believe that a lot of some of the innovation, pipeline that we had, which has now gone to the market. We launched a new initiative called Bolt. Some of the places where we were behind in terms of our overall penetration from consumers, so that's continuing to increase. We added users, continuously. We continue to add users on the platform. So it's a combination of both the innovation funnel, our user acquisition funnel, as well as the ordering baskets improving has meant that we have grown 19% on GOV and even higher on the revenue side.
Okay, all right. Rahul, let's talk about Bolt, your latest offering, which is causing such a flutter. So, how much of the volume share came in from Bolt, if you could tell us that, and how is the contribution stacking up against overall regular food delivery?
So, we really launched Bolt in October, right? And when we had met last time in our earnings call, we had mentioned that in the first month of launch, it had gained to close to 5%. We are now currently at close to 9% of the overall food delivery volumes, which is pretty, good considering that it's just 1 quarter of launch. I think the overall restaurant ecosystem has benefited and they have taken it very nicely. I think a lot of restaurant partners are now curating specific meals which can cater to the 10 to 15 minutes food delivery, use case. And we do see, continuing traction. We are now present in 425 cities on this proposition, and we will continue to expand at the back of this. Now, talking on specific margins, I think there is a little bit of competitive sensitivity here, so we'll not specifically talk about the margins under Bolt. But overall, at the portfolio level, as you have seen, we have expanded our contribution margin by close to 80 basis points, and almost all of that has, fallen back into our EBITDA, line too. So EBITDA improved to 2.5%, of GOV in the current quarter.
Got that. Do you think that you will at some point hit the triple-digit growth mark in your quick commerce business?
So we are not very far behind. So our growth in quick commerce also accelerated. So from 6% to 88% on a YOY basis in the December quarter. One of the things that happened during the quarter was, if you see, our overall guidance for H2 was to double our square footage in the quick commerce business. So from 2 million square feet to 4 million square feet. Now, this has meant that there has been a certain pace of store additions. In Q3, we've added 96 stores. Just in the month of January itself, we've added 86 further stores. So some of the expansion activity was slightly back-ended, which has now caught up. And we are still sticking to our guidance that we will be doubling our overall square footage of the quick commerce business in H2. Which means that Q4 is again going to be pretty, it's going to be a pretty high growth quarter in terms of number of stores coverage. And therefore, you should expect accelerated, growth in the coming quarter.
Okay. Now, Rahul, what is making you so confident that you will achieve the contribution break-even by the third quarter? That's something the market is eyeing very closely.
So the guidance on EBITDA break-even is at the corporate level for third quarter of FY26, and in the quick commerce business we are guiding for contribution margin break-even. So the contribution margin break-even is of course a combination of mature stores as well as the new stores that take a certain time to maturity. So because we are now front-loading the store additions in the current financial year, we do expect in 6 to 9 months a lot of these stores hit break-even volumes. And they start accreting cash. So our guidance means that there are structural levers at play here. If you look at some of the KPIs that we are disclosing on average order value, that has gone up by 14% on a year-on-year basis. So while we had guided that we will be able to deliver double digit, it is already ahead of our guidance in terms of our average order value increase, which is a key component of the profitability path for this business. The other, structural levers like our cost of delivery continues to go down because structurally we are getting a lot more closer to consumers with the densification of the network. So, the overall portfolio margins are, is what we are guiding that by, Q3 of FY26, we will be able to break even at the portfolio level because a lot of these store additions that are currently happening will hit that maturity or at least the break-even stage at that point in time.
No, absolutely. And that's exactly what the market has a laser focus on, that break-even point. You know, what is the mature contribution margin? Like you said, a lot of stores will achieve this state. So what would be that steady state contribution margin then at a store level?
No, so it varies. It really varies around, both the maturity and, what also happens is sometimes a mature store, we also have to break down the store into, neighboring stores because to manage growth, right? So when a store hits, say, anywhere between 2 to 2,500 orders per day, we do, open another store in the vicinity, which makes structurally, us being able to service the consumers better. But in the very short term, both the stores, contribution margin does take a hit in the short term. So if you kind of normalize for this, mature stores are already hitting 4 to 5%. If you normalize for the breaking of the stores that I just mentioned.
Okay, all right. Rahul, I have to ask you about competition, because this is something that even your peers Zomato acknowledged in their earnings call. But what about you? What is the strategy going forward to mitigate maybe competition from existing players heightening up, maybe new players coming into the system?
No, I think we have a bunch of things which are going, in our favor, right? So if you look at, our singular app strategy that has, continued to give us significant benefits. So if you look at the number of users on our platform who are using more than one service, so that has increased by more than, it has increased to now 30% plus, right? So close to 1 in every 3 users are now using more than one service on our platform. At the same time, we have launched a separate a standalone Instamart app. We believe that the overall, user acquisition funnel is very early, is in an early journey if you look at the industry. And probably only 10% of the users that, the category will acquire have only been acquired till now. So a large part of the, overall growth journey is ahead of us. There are market, expectations that this industry itself will evolve to anywhere between $30 to $40 billion in the next 3 to 4 years. And therefore, you should expect that, competitors will want to take a certain share of this pie, and there will be heightened investments in the very short term. So I think we are well placed. I think with the current scale that we are operating and, some of the benefits that we have as a singular app, we have also a subscription program that gives benefits to users across the, multiple services that they, operate on. Our expansion strategy in terms of coverage of SKUs, our presence in a large number of cities. As of December, we are now present in 84 cities, and we'll add a few more in this financial year. So there's a combination of, I think the network is already laid out. We have a very strong customer base, existing customer base. Our new customer acquisition continues to, accelerate. So yeah, we find ourselves in a good place and, pretty confident that, we want to be in a position where we can dominate the overall category in the times to come.
Got that. Any specific guidance on quick commerce when it comes to growth and margins from here?
Yeah, it's hard, right? Because the category, as I said, is so early in its journey. I think in food delivery, if you had asked us, 2 to 3 years ago, it would have been hard to kind of put down a number. But because it's reached a certain maturity stage, we are able to also guide as well as, execute on that, guidance. I think on quick commerce, a lot of the evolution is still ahead of us. We have to remain agile. I think we are responding to, the customer's needs, and we are getting to what the customer wants in terms of selection, in terms of, coverage, opening new cities, opening new geography within the, larger cities that we operate, opening newer areas which are hitherto unserviced. So there's a lot of, levers at play here, which will determine, the overall growth for the category and, consequentially to us as, as Instamart. That, ultimately, I think this will evolve. So it's very hard to put a number, market expectations suggest 60 to 100% growth, for the foreseeable future, which will mean that the category will get to, close to like $30 to $40 billion in the next 3 to 4 years.
Rahul, finally, you do have obviously a large amount of cash in the balance sheet right now. So to what extent or over how many quarters does it cover you in terms of growth, and any plans, any specific use for that cash apart from store rollout?
A need for cash, I think we are well capitalized. As you've seen, we have close to 8,200 crores of cash balance. As you also see, food delivery delivered 184 crores of positive EBITDA in the last quarter, and that will continue to grow. So I think as a combination of the acceleration in the food delivery margins, and as well as the Instamart stores maturity, as well as the business maturity reaching a certain stage, we don't expect that we will need to raise further cash, at least in the foreseeable future.
All right. Well, I think that'll be well taken. Thanks very much, Rahul, for joining us. Stocks coming off the lows a little bit, but we still got a bit of a cut at this point in time. The market's down 60 points on the Nifty. 23,640 is where we're at. Back to Mitesh for a quick review of things. Mitesh, hold the view that it's more up from here.
Oh, I do, Prashant. In fact, this area is the support area which I was looking for, 23,630, 600 zone. As long as we're not breaking that, I think, we should be good. And therefore, I would even be comfortable saying long positions can be taken with a 50, 60 point kind of a stop loss from here. On the Nifty, on the Bank Nifty, the support is slightly lower at about 50,001. And
any trades here?
I have a buy on HDFC AMC, which I would recommend buying with a stop below 39.75 for targets of 4,200 or thereabouts, maybe slightly higher than that. And the other stock which I like, sorry, I just complete that. The other stock which I like is IndusInd Bank, which I recommended earlier as well. It's had a good pullback, but the indicator suggests that we might have made a temporary low. So fresh entry can be taken with a stop below 1,045 for targets of 1,095.
Mitesh, just for the benefit of people who would have opened long trades, maybe yesterday or maybe even this morning, what are the support levels to keep in mind for both the Nifty and the Bank Nifty?
So the Nifty, I think the first support is this level, this 23,630, 600 zone. We are right there. And then the bigger supports, come in at 23,400 levels. But I suspect that we might not break 23,600 decisively, and we might, by the end of the day, might be trading slightly positive. So I would be okay to take a 60, 70 point kind of a risk and take a long position here. And once we get past the 23,750, then I would even look at 24,000 plus levels on the Nifty. So very positive on the Nifty. On the Bank Nifty, slightly lower, 50,100, about 50,050, so about 150 points lower.
That's the watch zone for the Bank Nifty. Got it. All right, Mitesh, thanks very much. We'll touch base again later in the day. Right now, we do have to take a break. Come back on the other side and the latest commodity action coming up with Manisha Gupta.
India post-payment bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped central KYC registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before?
Welcome back. Well, let's quickly take stock of the commodity markets as well. We have Manisha Gupta joining in with the latest. Manisha, what's catching your eye today?
Well, even as gold is trading near all-time highs and silver is trading at multi-month highs as well, but the base metal prices are not left behind. It's a second straight day today that we are looking at stronger gains coming in for this one as well. But the US dollar has declined to around below 108, and that has been supportive. And the US private payrolls data has come in much better at 183,000. That in turn also seems to be supporting the COMEX and the LME metal prices there. Apart from that, the US and China trade tariffs is something that the street is watching out for, which is set to take form from Feb 10th. And until then, the markets do believe that some kind of conversation perhaps could happen. China also has launched a dispute at the WTO. We also are looking at the US metal prices trading at a premium at around one-year highs for copper and aluminum especially. This is what the metals are doing on LME right now. So you look at copper prices, we're trading at a 13-week highs onto this one. Lead is at a 6-week high, silver trading at a 3-month highs, aluminum at a 2-week highs as well. So multi-week and multi-month highs in sense of many of these metal prices. I also want to talk slightly more about aluminum there, because we're looking at a deficit there into the international markets. When you look at this year, 8,000 tons is anticipated, but next year could be much higher at 3,65,000 tons of deficit. And that really seems to be worrying the markets, is the reason you have seen aluminum perform quite well into this year. Take a look also at the nickel prices, and this continues to lag behind. 4-year lows onto this one. That's exactly what we did see nickel prices trade on. I want to start on copper, and this is what we've done in this year until now. This is what we did last year. So as you can see, copper continues to outperform the overall metal pack, which wasn't really the case last year. Zinc, which did outperform last year, has declined by nearly 5.5%. Aluminum prices continue to trade in positive, doing better in this year as well. And then you have lead, which has been on the sidelines, and nickel prices trading flat as well. So major metals like copper, zinc, aluminum for 2025 are trading positive. Barring zinc, aluminum and copper is what most people are right now betting on.
All right, Manisha, thank you very much for that. Well, we're going to take a quick commercial break here. It's our segment is the economy. My colleague Lata is here. She'll be talking with Chetan Iyer of Morgan Stanley. And the topic is US-China tariff wars, the upcoming RBI policy, and everything else in between. Stay tuned. That's coming up.
Strategy. How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
We've had a lot of evidence so far that Trump's tariffs are looking transactional rather than actual tariffs. In other words, we've seen tariff announcements for Colombia, for Mexico and Canada, all either reversed or delayed. And the only country where we really do have increased tariffs with retaliation, of course, is in China. And so I think that's generating a huge amount of uncertainty. I mean, investors do not like uncertainty. Companies don't like uncertainty. It's very hard to say where we go from here. I do not assume that we've seen the end of any possibility of tariffs on countries like Mexico and Canada. But my word, the speed.
Welcome to It's the Economy. It's the new governor's maiden monetary policy, and it is baptism by fire for him. The rupee is the worst performing currency this year, having fallen 2.2% since January, as you can see on the chart. Indeed, 1.2% of that fall has just come in the first 6 days of February. Does that give the governor much elbow room to cut rates and the cash reserve ratio, as people have been demanding? I have with me a veteran India watcher and economist par excellence, Chetan Ahya, Chief Asia Economist and Emerging Markets at Morgan Stanley. Chetan, good morning. Thank you very much indeed for joining me. And that is the first question. People want a CRR cut, they want a rate cut, and they want, push back on those LCR rules, benign credit deposit ratio statements. Can the governor really go all that easy when the rupee is falling so much?
Well, Lata, I think you are looking at year-to-date INR movement, but ideally what you should do is to look at it over a 12-month period. And especially since September of 2024, what we've seen is that the broad-based dollar has appreciated. We've seen a lot of other currencies in the region also depreciate a lot more relative to INR. And so we think that the INR had actually moved into overvalued territory if you look at the real effective exchange rate basis. And what the central bank is now doing is to let this adjustment take place, let the currency depreciate a bit, but ensure that in the meantime, they inject liquidity in the domestic economy to ensure that growth gets that support. So from an outlook perspective, we think that the central bank still should be able to cut interest rates and inject liquidity. And if need be, let the currency adjust and take some steam off. Of course, it's not going to be possible to keep the currency stable if you're going to ease monetary policy. But we don't think that the depreciation is too much in INR, that should worry the central bank.
Yeah, I take your point that depreciation, if you look at it from October, is not... in fact, we have the October table calculation as well. October to December, I think the INR depreciated by about 2% only. But then from Jan to October, it had depreciated by only 1%. Let me give you the other calculation. In November, when the REER table was given to us, the rupee was overvalued by 8%. But since then, India's inflation has fallen as well. There has been a decent depreciation from 84.1 or thereabouts to 87.5 as we speak. So how much more do you think we are in danger of depreciating? What's the MS view?
I think it's a function of the dollar and what happens to tariffs on China and some of the other emerging markets will matter, because that immediately has an impact on dollar and therefore INR. And you mentioned the overvaluation number for INR. We wouldn't just look at the 10-year mean as the fair value. We think that the RBI will be comfortable as long as it gets between 10-year mean and 1 standard deviation above that. And if we see some more depreciation in INR, which is higher relative to its trade partners, you can very soon get the INR into that below 1 standard deviation plus mean range. And so, yeah, I think rupee will be a function of what happens to dollar and then in turn what happens to tariffs.
Okay, fine. Then what's your expectation from the Reserve Bank governor in the policy?
So we are expecting the central bank to be easing monetary policy in three areas. Number one is we've seen them already beginning to relax the regulatory tightening which they had done on the non-bank financial companies. Number two, inject liquidity. That's also happening. And the third part is cutting interest rates. That comes on February 7th. So we think from a dynamic where monetary policy was relatively tight, not just necessarily from interest rate perspective, but from liquidity and regulatory perspective, right now we are looking at all the three areas of monetary policy support coming in through from February 7th.
Oh, that is the ask of the market. Liquidity, regulatory and rates. Let's see whether they go the whole hog just because the rupee is creating some panic. Chetan, what's your sense about the tariff war itself? I know it's an unfair question because we don't know how talks will proceed, but are you expecting an all-out tariff competition with China being just the start and, India at some point in time coming into the reckoning? What's the view on Asian growth as of 2025?
So the way we are parsing this tariff story is sort of trying to think whether there is going to be targeted approach of lifting in tariffs on China imports by the US, or they're also going to take up broad-based tariff increase on multiple trade partners eventually almost at the same time. This is a very important difference in terms of the actual actions, because my experience from 2018-19 tells me that what happened during 2018-19 is that the direct effect of tariffs on China were not that big in terms of contribution or drag to growth. But the corporate confidence globally got affected. Global capex came down, and that affected Asia's exports, including India and China. So what we are now thinking is that if there is a targeted approach of just focusing on trade tensions with China, maybe the corporate confidence will not get that big a hit. But if we do see eventually multiple trade partners getting into this dispute, that will have much bigger negative effect on trade and therefore region's growth outlook. And so if it does turn out to be multiple trade partners, we are right now putting in a number of 1 percentage point loss of growth to region's GDP. China should also see 1 percentage point loss. India will see less to the extent of 30 to 50 basis points. But that's kind of number that we're thinking if there is a broad-based rise in trade tensions.
Then, so where it's 0.5% from what? As in, what is your anticipation of current year's growth itself, FY25, and what's the FY26 expectation, GDP?
Yeah, so we are expecting growth to accelerate to 6.5 on a quarterly basis from March 2025 quarter. Yeah. So effectively see 30 to 50 basis point hit from that starting point.
Oh, so if the tariff escalates, then that 6.5 may not be delivered, is what you're saying.
That's right. But broad-based tariff increase rather than just targeted on China.
Fair point. Okay, if it reaches our shores. Therefore, you think the Reserve Bank has enough space to cut? What are your inflation expectations, and therefore how many rate cuts?
So currently we are building in 2 rate cuts, and that's under the assumption that growth does accelerate to 6.5%. But if you don't see that growth accelerating to 6.5% because of tariffs or other reasons, then we see the risk of central bank cutting additionally in line with declining growth rates.
Okay. Is there not an expectation of fairly serious disinflation in Asia because China is not allowed to import as much to the United States? Do you see that pressuring Indian inflation also down and therefore more than 2 rate cuts?
Yeah, it's not necessarily that China will ship the stuff out to the rest of the region or world, but to the extent to which, you do end up seeing a dynamic where there is broad-based tension slowing down global growth, global trade. What then happens is, and if I just recall my experience of 2018-19, is that there was a big challenge in terms of global goods demand supply balance. And that itself causes decline in prices globally, not just in a particular region. So yeah, I think tariffs are disinflationary. It may just mean temporary rise in inflation on the countries which are, in the case of countries which are imposing tariff, but eventually this is deflationary to the extent to which it does affect global growth as well.
Okay. Yes, so maybe inflation initially and deflation later. So what will be the Fed rate cutting trajectory?
So currently what we are assuming is that tariffs are not going to go up in a broad-based manner, but even to the extent to which there has been a talk of tariff increase on some of the trade partners, our US economics team has taken out 1 rate cut out of the 2 that they were forecasting. So we are only expecting now a 125 bips rate cuts this year.
Okay. Now to come to the budget, do you believe that this consumption story will fire up? And in spite of it, you have only a 6.5% growth?
Sorry, I didn't get the second part of the question.
Sorry, the budget is expected to fire up the consumption pace in India. It's giving away 1 trillion rupees by way of taxes. Will that, in spite of it, you expect only 6.5%?
Yeah, that's right. I think there is a challenge in the sense that the government, as you know, in the budget has decided to push consumption, but at the same time, capital expenditure growth has been relatively less than what it used to be in the past. So considering both the aspects taken together, we think it will be still 6.5% GDP growth. We do expect consumption to get supported with the actions which have been taken. And we also think that the monetary policy support will come through. And the fact that, there is some increase in capital expenditure that is going to come through as well. So a combination of some increase from the government side on capital expenditure, consumption support, and monetary policy easing. And I would also like to highlight one other point, Lata. When I'm thinking about growth outlook, there is a decent pickup in services exports, and services exports have now built up to about close to $390 billion annualized. So that's a pretty big number, and that's growing at about 15% on a 3-month moving average basis. We are kind of building in a support from that as well to discretionary consumption and job growth.
Okay. Oh, that's good. Good to hear that. Anything by way of job growth. Chetan Ahya, always a pleasure having you with us. Thank you very much for joining us. So that's a clarion call for a many-sided move from the Reserve Bank. Morgan Stanley, Chetan Ahya are expecting a rate cut. They're expecting liquidity to be eased as well as some regulatory easing as well. Well, risk weights have been raised on loans given by a bank to an NBFC. Will that be lowered? We will have to see. If that is done, then tomorrow we can see a decent rally in NBFC stocks. Well, a rate cut will immediately be not terribly positive for banks because they suffer from margin drop when rates are cut, at least in the first few months. So we'll have to wait and see. Banks and NBFCs will be on top watch. But before we wind up, let's wind up with something on tariffs. Tariffs is still the biggest talking point among economists and investors in the US. And on that note, let's listen in to what some experts have to say on the impact that tariffs may have. After that, it'll be time for a break and then Chartbusters.
In terms of what have been the results over the last 8 years of these policies is something worth evaluating, and then also seeing about what else can be done to help increase US share in global manufacturing if that's the ultimate aim. one thing which clearly doesn't help is a stronger dollar. So under that environment, the US is very uncompetitive, and that doesn't help its cause. And every time there is news of tariffs, the dollar only tends to appreciate, which is counterproductive and something that's happened over the last 8 years. So that's a very important policy tool the US also needs to keep into account.
Watching laws being made is kind of like watching sausage being made. You really don't want to see it. And maybe that's the same thing with tariffs. It's too visible here. And there's a lot of negotiating going on. And we start out on Monday with the market being freaked out. And by late in the afternoon, Mexico gives Trump something, and he says, "Okay, we'll postpone things." So it's a negotiating game, and I'm not sure it's really all about tariffs per se. It's not just a tariff war. It's a war over national security, a war over drugs. There are a lot of issues involved here, and the market's saying, "Well, what does this really have to do with us?"
Confusing, and investors, I think, are therefore very nervous about it. And it's interesting, the US is underperforming the developed markets this year. As you've noted recently, the dollar's lower. So this is all, I think, creating a lot of uncertainty, which I think will have an impact on investor behavior.
कुछ लोगों को अब जब एआई की बात होती है, कुछ लोगों को अब ये शब्द फैशन में है तो बोला जाता है, लेकिन मेरे लिए सिंगल एआई नहीं है, डबल एआई। भारत की डबल ताकत है। एक एआई आर्टिफिशियल इंटेलिजेंस, दूसरा एआई एस्पिरेशनल इंडिया। हमने स्कूलों में 10,000 टिंकरिंग लैब्स शुरू किए और आज उन टिंकरिंग लैब से निकले बच्चे रोबोटिक्स बना करके लोगों को चकित कर रहे हैं। और इस बजट में 50,000 नए टिंकरिंग लैब्स उसका प्रावधान किया गया। भारत वो देश है जिसके इंडिया एआई मिशन को लेकर के पूरी दुनिया बहुत आशावादी है और विश्व के एआई प्लेटफॉर्म में भारत की मौजूदगी एक महत्वपूर्ण स्थान प्राप्त कर चुकी है।
This was the third consecutive year that the BMC budget was presented to an administrator and not to a standing committee. Why? Because the term of the corporators ended in March 2022 and the elections for the new term and the new corporators are yet to be held. Now the 74,427 crore rupees budget, out of this, an allocation of 43,162 crore was made for capital expenditure. 5,100 crore rupees for roads and traffic department, 5,807 crore rupees for Mumbai Coastal Road project, 3,039 crore rupees for storm water drain department and 650 crore rupees for sewage operation department. For key public services, over 4,000 crores were allotted to education department, over 7,000 crore for health department, 261 crore rupees for fire department, 309 crore rupees for disaster management and 220 crore rupees for the garden department. BMC announced that it's going to start 250 new public clinics, also known as Apla Dawakhana.
Swiggy slips more than 4% on the back of its third quarter results. Despite good performance in the food delivery business, higher investments and wider losses in quick commerce hurt the performance. The management tells CNBC-TV18 that they will see good growth in revenue for food and quick commerce in the fourth quarter.
Sula trades in the red after the company posted weak third quarter numbers marked by a decline in profit. The management tells CNBC-TV18 that they will see margin improvement starting quarter 4 itself.
Page Industries continues to slide for the second day post results, falls nearly 5% on the back of management commentary. Following its results, Morgan Stanley reiterates the management's comments on subdued demand for the fourth quarter as well.
Paints maker Kansai Nerolac trades in the green despite the soft performance in quarter 3. The company saw net profit boost owing to an exceptional gain on the sale of a piece of land. In fact, the management will be joining in a few minutes from now.
And in other earnings, Aarti Pharma and VRL Logistics both rally more than 10% in mid-teens right now on the back of strong quarterly numbers.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Mangalam. And as we speak, the Nifty is down mildly, down close to around 50 points. Some kind of nervousness getting into a couple of big events. You have big earnings today. You have the RBI policy meet tomorrow, then the jobs data, and then you have a state election result as well that lies in the balance. So for the time being, we've got our hands full. Some bit of consolidation, a bit of a downtake. I don't think there's any reason to worry. The Nifty Bank, by the way, is trading more or less in the green, actually, as we speak, as flat as can be. Hey, Mangalam.
Nothing really to worry, Nigel. You know, some bit of mild downtick is what we're seeing ahead of big events. But as we move on, we have a couple of important conversations lined up for you. We get them lined up. Let's get you a few ideas for profit as well from Money Control Pro. Khushbu Rai joins in with the stock that she's tracking.
In today's idea for profit, we are going to talk about Aptus Value Housing. The low-cost housing finance company targets first-time home buyers in the remote cities and is an established name in South India. The market-leading position of the company provides good pricing power and higher yield, which helps the company to protect the margins. If we look at the recently quarterly earnings, the profitability growth of the company during the quarter was driven by healthy business momentum. The asset growth for the quarter increased by 27% year-over-year, supported by branch additions. The home loans, which contributed 60% to the asset growth, also saw strong disbursement trend. The asset quality improved sequentially, led by collection efficiency, which improved on a year-over-year basis. Although the spreads were down, the management expect them to increase in the next quarter. Going ahead, the loan book is expected to grow at a 30% CAGR in the medium term. However, the loan book is riskier and needs continuous monitoring, and hence we believe that Aptus Value is a promising stock for high-risk investors.
All right, with that, let's get talking about earnings. It's time for coffee. CCL Products, the company reported a 14% rise in revenue from a year ago. The net profit remained flat owing to higher depreciation, higher finance costs as well. The important metrics to track for them, volume and EBITDA per kg. Chala Srisant, who's the managing director of the company, joins in to discuss these numbers in detail. Chala, thank you for joining in. Always a pleasure speaking with you. And this time it's before the conference call, so all the analysts have tuned in as well. So let's get the basics out first. Your EBITDA has grown by about 12%. What has been the volume growth in the third quarter, the first 9 months of this year? What can you guide for this year? And even the EBITDA per kg, how has that panned out in the third quarter?
So actually the EBITDA per kg was a little better this quarter because there was a slight change in our customer mix. We were actually focusing more on more long-term customers, more supermarkets that we were able to onboard in this particular quarter and supply to them. So we were not focusing on the low margin, high volume business that we were doing earlier. We wanted to get more sustainable business in the long run as well. So we laid that foundation in this particular quarter.
That still didn't answer our question. What was the EBITDA per kg this quarter? Was it more than 110 that you were targeting earlier?
Yes, it was.
What is the exact number?
I think about 114, 115 approximately.
And volumes?
The volumes, there was a marginal growth, not too much. So it was between, I think, around 4 to 5%, if I'm not mistaken.
All right. But earlier, I think you were guiding for around 10 to around 20% of volume growth for the year. How do you think you'll end up this year at?
We'll still be at that same 10 to 20%. We're confident about that.
10 to 20%. Got it. All right. Could you tell us what is the current capacity utilization levels across your plants?
We are with the expanded capacity that has come online. The old capacity is running at full capacity. The new capacity is running at around 30%. So overall blended, I think around 65% is where we are at right now, 65 to 70%.
All right. Give us some numbers with regard to your branded business, because the street actually is quite optimistic of prospects. So there on a small base, how can it increase? So for this year, what do you end up with in terms of the branded business, and how do you see this scaling up?
So brand, we are expecting about 300 plus crores for just the brand alone, and another 140 crores for the bulk and private label within India. So overall domestic business will be 400 to 440 crores that we'll be ending up.
And what happens to the next year? Because this has been a business that you've been growing. The first half of this year, you did 200 crores. The second half, you did about 250 odd crores. What's the prognosis here? When are you looking at, say, 1,000, 1,500, 2,000 crores from a business like this?
So as of now, we are confident about maintaining around a 40% growth year on year. So it will take a couple of years for us to reach the 1,000 crore mark for the branded business. So
next year you'll be closer to around 600 crores. So by FY28, it appears like it'll be a 1,000 crore business. Going by, mathematically, that should be the number, right?
No, actually, it'll be a little longer. The branded business is at 300 crores right now.
Okay.
Overall domestic is around 440. So the overall domestic business, yes, it'll be 1,000 crores in another 3 to 4 years. But the brand per se will take at least about 4-5 years.
All right, we take that point. What about plant additions? Because you had the Vietnam freeze-dried plant, which was likely to come on stream, adding close to around 6,000 tons in the second half of this financial year. Even the India spray-dried plant, which was supposed to come on stream at the start of this year, where do those additions stand at?
Yeah, so the India expansion has been completed, so that is already online. And in fact, that's one of the impacts that we are seeing on the balance sheet in the standalone, the depreciation, and there's also the SEZ, which has come into the tax bracket, about a 50% tax bracket that it's come into. So there's an additional deferred tax also, which is why the PAT was muted for this particular quarter. And as far as the FD in Vietnam is concerned, we were supposed to come online around this time. So the commissioning is taking place at this point in time. So we should be coming online sometime this quarter.
So once again, for the benefit of our viewers, if you could tell us what is your existing capacity in India and Vietnam? How much of that is spray-dried? How much of that is freeze-dried? And how much comes on stream by the end of, say, next year?
So earlier we were at around 50,000 tons. Now combined capacity is going to around 77,000 tons. There's a 6,000 ton capacity of freeze-dried that's coming online in Vietnam. And the India 16,000 tons of spray-dried has already come online.
All right. And the debt number, because we did see finance costs spike up as well. And that also was an additional, weighing down factor on the net profit. Where does that number stand at?
We're at around 2,000 crores at this point in time because the coffee prices are at an all-time high right now. But the good news is that the effective tax rate has come down from last year. Last year, it was close to around 7%. Now it's closer to around 6%.
All right. And final question before we let you go, if you could give us a sense of your product mix. I remember a large part of your margin appreciation would be coming from premium products like cold brewed, etc. Also small packs. How much did they contribute in your overall mix right now? And what is that likely to go to?
Actually, that is one of the reasons why in this particular quarter, we've seen a slight improvement in our EBITDA margins. Because of the supermarket business, we were able to do more of small packs in this particular quarter.
And where does your market share in India stand at?
Market share, we are at around, brand-wise, around 4% at this point in time.
And in the stores that you operate? And in the stores that you operate?
In South India, we're closer to around 20% in AP and Telangana.
All right, take that point, Chala. Always a pleasure speaking with you. Wish you a good cup of coffee after this conversation, and perhaps we have a conversation at the end of the next quarter as well, where some of your plants would come on stream as well. With that, it's time for Growth Code, an initiative by CNBC-TV18 and Grow, designed to provide you with valuable trading strategies. This week's Growth score, we have CNBC-TV18's Nigel D'Souza sitting down with pro trader Saurabh Sisodia, who's a co-founder, Quantify Capital, to understand the impact of SEBI's new regulations on speculative trading.
How do SEBI's new regulations aim to control speculative trading? And what impact do you foresee? So SEBI did two major things recently. First is they increased the lot size of many derivative contracts. For example, Nifty from 25 has been increased to 75. So what this does is that to trade any derivative instrument, you need to bring more margin. So this basically discourages retail traders to speculate. First is that. And second is what SEBI is trying to do is they is trying to maintain that because earlier when every day there were expiries happening, right? We had Nifty, Nifty Sensex, right? And due to this, what was happening is a lot of speculation was going on. In fact, we were the most traded options market globally. A lot of speculation was going on. There were a lot of spikes which were created every day. So what SEBI did is they made a mandate that every exchange can have only one weekly expiry. So by these two measures, what is going to happen is the speculation will reduce, and what I foresee is going forward, the market will be more stable in terms of options, that we will see lesser spikes, the stability will be there, and retailers, which like SEBI's focus on the retailers are losing a lot of money, they'll be at least discouraged to stay out of the market. Okay, all right, sir. An interesting point you make out there. Also another question, how can traders ensure that they stay within SEBI's prescribed margins as well as rules? So first thing is being updated about what SEBI is doing, right? So SEBI recently put the circular that, okay, like we are going to increase margin. So a trader has to be aware, okay, what all changes will happen in his strategies. The returns will definitely decrease because the margins are going to increase. So this trader has to stay updated what is going to happen. Then he has to basically change his strategies according to these new guidelines. Okay, all right, time to slip into a short break. On the other side, we'll be joined by Anuj Jain, who's the MD and CEO of Kansai Nerolac. Stay with us.
City, one interesting initiative announced by the BMC was the introduction of cyber awareness program for students. It will serve two key purposes. One will be to ensure that the students learn how to use the internet in a safe manner and to keep them safe from cyber fraud. BMC also focused on environment initiatives and projects like promoting eco-friendly cremation and proper disposal of residue from idle immersion. These are the projects which will take place under environmental related initiatives in the next few months. We also spoke to Bhushan Gagrani, the BMC commissioner himself. This was the first time that he presented the BMC budget. Listen to what he has to say about this BMC budget. So your budget also mentioned that you guys are planning on imposing a tax on the commercial properties in slum areas.
That's right.
If you can elaborate that. So from when this new tax will be levied?
It is actually not a new tax. In fact, we are enhancing our assessment net. Under the assessment net, the properties which are in the slum, however, which are being used for the purpose of commercial, they were not covered. So this is for the first time we are doing the survey and bringing them in the tax net. Not necessarily that we will be imposing huge tax. It's a normal tax. It's not a very huge tax. However, the coverage will be given to our commercial properties.
So BMC has not introduced any new project this time. In fact, you have focused. Correct.
Yeah.
But sir, does it mean that is there any cause for fiscal concern, sir?
No, there is no fiscal constraint. We have enough adequate cash flow as well as resources.
I think the underlying innate technology is just right on the threshold, and we'll get there with the next models. But now people have got to go off and build all these services. So someone in this room hopefully will figure out what the AI tutor of the future looks like, and that'll be a population scale thing, and it'll think what that would do if every kid on Earth, this year got an AI tutor that was provided like a better education or helped to provide a better education than anybody could get last year. Think what it would mean if we could have like an AI medical diagnosis system that was better than anyone could get last year. Think what it could mean if scientists could go cure every disease faster. And so, we've been waiting for this moment for a long time. I think we're going to deliver something that can help with it, and now people have to go build with it.
Welcome back. As promised, let's get chatting with the management of Kansai Nerolac. It's been a stock of the morning so far. The company reported a weaker set as reported by peers as well, but there were a couple of positives. One, the management seeing gradual recovery in demand, the auto growth business or automotive business growing better than the market, and the board approving increase in capacity in their Saikha plant as well. But more importantly, there has been a management change which is announced. Anuj Jain will retire as the MD from March 31st, and Praveen Chaudhary will be appointed as the MD from April 1st itself. We do have Anuj Jain himself joining in. Anuj, what a stellar run you've had, 35 years at Kansai Nerolac. Time for you to hang your boots at the end of March 31st itself. But, you'd like to leave the company in a much stronger position given the sort of industry moves that are taking place right now. If you could give us some numbers, the first number that we want is the volume growth that you did in the decorative business. What was your market share there? And the volume growth that you did in the automotive business.
So, Mangalam, I guess you're talking about the quarter three. The quarter three, the decorative volume growth is in the range of 1 to 2%, and the industrial volume growth is higher. So, decorative, as you have seen these results of some other companies also, the growth has been muted mainly because of low consumption. But I think the good part is that if you see quarter-on-quarter basis, there is some gradual recovery. It may be slow, but there is a gradual recovery which is happening. Even in the automotive, that in the industrial segment where we are into automotive, we are also there in the non-automotive. There also quarter-on-quarter basis, we are seeing a gradual recovery. And some of the changes, which has happened in the recent budget, I think this gradual recovery trend will continue. And I think if I compare with the past, I think we are more optimistic about the future.
What does that optimism mean in terms of volume growth for this entire year? If you could give us a sense of the fourth quarter, because some of your peers are not seeing any improvement in the fourth quarter either. So if you could give us a sense on that one. And before you leave, an aspiration for FY26.
So I think my take is a little different. What we have seen towards the end of December or maybe part of January, I expect recovery, as I said. How much recovery, that I'll not be able to comment upon. But I see definitely a better growth coming in the decorative segment. Industrial has been doing well, and I hope that this momentum will continue. And in the coming year also, because we have had in decorative, maybe this year the industry growth has been down. One, because the market demand was low, and also we have seen the entry of some new competition, and to some extent the redistribution of market is also happening. So I think the situation will stabilize in the next year, and definitely I feel that there is going to be the next year is going to be better for decorative. Industrial, we have seen good momentum for last 1 year, 2 years. Maybe now, the growth in automotive sector is stabilizing, maybe in the range of 3 to 5% production growth. But two-wheeler is doing well, and the non-auto segments, on the back of some good initiatives, we are, witnessing a strong growth, and that momentum will continue in the FY26 also.
All right. Hi, Mr. Jain. First of all, congratulations on your stint and wishing you all the best once you move out as well. That said, if you could compare yourself with the industry, how is your growth in comparison to the industry? And also, if you could tell us, what is the updated market share?
So, we are into different segments, but if you're specifically talking about decorative, we are in the high single digit
decorative.
Market.
Yeah, it's high single digit. We have 8.5%, I think so is the number that we had last. Has it improved a little bit? By when do you expect yourself to get to, say, the 10% mark?
So, if you see the last quarter, in fact, we have been talking about some initiatives which we have taken in decorative, which is in the area of strengthening our position through Paint Plus, the services, the new product, the differentiated products. And I'm very happy to share that, all this initiative, we are seeing a regular traction. And in the quarter three, any segment of the business, whether it is in the industrial or in the decorative, because in decorative today, it is not just about paint, there are new businesses, there is a project segment, there's a retail segment. All the segments, we believe, based on whatever we have seen so far, maybe some of the results are yet to be out, but we have definitely done better in all these segments in the quarter three. And I am sure that this momentum will continue, because what we are upbeat is that whatever initiatives we have taken, those initiatives we have seen a good traction, and that gives us the confidence that in the coming time, we'll be able to do better.
So could you define what is better? Is it high single-digit volume growth, mid-single-digit volume growth, double-digit volume growth? If you could give us that sense. And secondly, you said that all these initiatives that you've taken, what does this mean for increased costs? Because I see increase in some of your expenses when it comes to branding, marketing, etc. as well. At what level will your margins, stabilize from here on? And if you could also give us a sense on premium paints. The last time you joined us, you said 30% of your decorative paints coming from the premium segment.
Yeah. So, starting from your last question, premium, as we said that, we have been focusing on the Paint Plus initiative was all about, bringing the premium products in the market. And today we are having almost double-digit salience coming from the Paint Plus product. The premium, which I told you last time, 30%, even in the Q3, it has further gone up. So premium is doing better. And one of the ideas, and when we say that we are going to invest in branding distribution, so one side we are spending, and the second side, when we are increasing the saliency of the premium, and also the cost optimization and many efforts we are doing, so we are able to negate, therefore we are able to maintain our margin. If you see last year, our EBITDA margin for the last financial year, it was about 13.8%. And we have been saying that, our endeavor in this competitive situation, in this uncertain situation, is to maintain the margins. And that is what we are able to demonstrate. Even if you see YTD December end, we are in that range and we are able to maintain our margins. And that is what our endeavor in this situation, that will continue to maintain our margins.
Final question, Mr. Jain. We can't complete this interview without asking you, what's the interest in AkzoNobel? Have you put in a bid?
No comment on that, because so far there's no information, official information, no official information is available. And therefore, from my side, no comment on that.
So officially, you all haven't put in a bid. Is that correct?
No, I can't make any comment on that. I'm not aware of anything.
No, but they did ask for a lot of shows of interest. And obviously, every paint company has shown interest. Some of them have put in a bid. We spoke with Asian yesterday. They said that they haven't put in a bid yet. Parth Jindal told us that he's put in a bid. Berger too, we've reported that, has called for some data, etc. So, which is what we wanted to know your stand here. Because if too many people are chasing one asset, then, the price tends to go higher. So, just wanted your thoughts on this. Because your own premium products are doing well, like you pointed out, upwards of 30% in decorative. But if you add this, there would be a fillip to your market share and perhaps, an addition to your decorative business with a new brand.
So you have a better connect, so maybe you know better. I have no idea about, these things. To me, like, these things we keep reading in the newspaper. As I said, there's no official information available. And from my side, I won't be able to make any comment on this question.
But if it is on offer, you have said in the past that you all could potentially look at it, right?
We never said that. We never said that.
All right, and the increased capacity in the auto plant. Let's talk about that. The 41 crore that you're adding in terms of capacity there. It increases your existing capacity at that plant by 35%. What's the potential revenue asset turns on something like this?
No, this capacity 41 crore. This basically is into two parts. One is the for the green energy solar expansion. That's one part of it. The second is in the automotive where the demand has been good for last 1 year, and in one of our Saika plant we are expanding the capacity related to automotive. So that's only one segment of this. 35% what you are referring over a period of last 3 years. That in a lot of spaces we have added the capacity. This specific part is only related to automotive in Saika.
All right. You've sold a lot of land. You've invested in capacity. You have some cash on your books. Just one question: inorganic plans. Are they on? And not specifically AkzoNobel, but what are your thoughts on inorganic in general?
So we, evaluate the right opportunities anytime, because as I said that decorative space is competitive today. Our strength is automotive. We are also building up a lot of initiatives in the non-auto industrial paint. And there, we are open in our mind, but it depends, at the right time, what kind of opportunity is available.
I mean, there is an opportunity available right now, which is why I wanted to know.
There you wanted to know specific where I can't make any comment because there's no official information available. That's why I'm not commenting upon it. Yeah.
Okay. All right, Mr. Jain, we let you go at that. Thanks a lot for joining and fielding all our questions. With regard to Akzo, we still don't know too much, but we look forward to chatting up with you soon. And thanks a lot for joining in today.
Know something, we don't know anything.
If you don't know anything, then we definitely know nothing.
Thank you so much. All the very best. All the very best.
Thank you.
Thank you. Thank you, sir. All right, with that, we'll take a short break, come back on the other side. We'll keep an eye out on the markets, tell you what's moving and what's not.
other side of it, the cost for a given unit of intelligence 1 year later seems to fall by about 10x. Moore's Law was a 2x every 18 months for the number of transistors on a chip, and that changed the world if you waited a few decades. But what's happening with the reduction in cost in AI models is extraordinary. Now, I don't think it means that the world's going to need any less AI hardware, because you bring the cost down and just the people are going to use it for a lot more things. The total number of dollars will go up. But you know, that's a really exciting thing happening.
Welcome back. Markets a little bit lower. The Nifty is down close to 50 points. The Nifty Bank is now down 75 points. The big mover in the second half of trade is going to be SBI. That comes out with a set of numbers. There was some weakness that we saw in yesterday's trading session. So let's see what they deliver, and let's see whether or not, you know, bulk of the play is already done ahead of the numbers. We'll have to see, because for the time being, the street seems to be positioned for a little bit of a weakish set of numbers. We'll have to keep an eye out on the commentary as well. But on that note, we'll wrap up on this edition of Chartbusters. That's it from Mangalam and myself. But the team of Trading Hour is waiting by.
हमारे देश में एक प्रधानमंत्री हुआ करते थे, उनको मिस्टर क्लीन करने कहने की एक फैशन हो गई थी। उस प्रधानमंत्री जी को मिस्टर क्लीन कहने की फैशन हो गई थी। उन्होंने एक समस्या को पहचाना था और उन्होंने कहा था कि दिल्ली से 1 रुपया निकलता है तो गांव में 15 पैसा पहुंचता है। अब उस समय तो पंचायत से लेकर पार्लियामेंट तक एक ही पार्टी का राज था। पंचायत से पार्लियामेंट तक एक ही पार्टी का राज था। और उस समय उन्होंने सार्वजनिक रूप से कहा था कि 1 रुपया निकलता है 15 पैसा पहुंचता है। बहुत गजब की हाथ सफाई थी। पंद्रह पैसा किसके पास जाता था, ये देश का सामान्य मानवी भी आसानी से समझ सकता है। आदरणीय सभापति जी, देश ने हमें अवसर दिया, हमने समाधान खोजने का प्रयास किया। हमारा मॉडल है बचत भी विकास भी। जनता का पैसा जनता के लिए। आदरणीय सभापति जी, आजकल मीडिया में ज्यादा ही चर्चा हो रही है, सोशल मीडिया में और अधिक हो रही है। कुछ नेताओं का फोकस घरों में जकूजी पर, स्टाइलिश शावर्स पर, लेकिन हमारा फोकस तो हर घर जल पहुंचाने पर है। आदरणीय सभापति जी, हमने ये जो अलग अलग कदम उठाए, उससे लाखों करोड़ रुपए की बचत हुई।
Hello, good morning, and you've tuned into CNBC-TV18. You're watching Trading Hour with me, Winnie Motiwala and Rima Tendulkar. We're coming live from the CNBC-TV18 Motilal Oswal studios. Rima, good morning to you as well. But markets, a bit of a muted day coming in. Not much of an excitement that we're seeing coming in. Nifty as of now is 23,627 levels is what it's trading at, down 0.3%. So below the 23,700 level, which we saw yesterday, crossing past that mark. Mid and small cap not doing too well today as well. Underperformance coming in from the Nifty mid cap down 0.4%, small cap down almost 0.2%. Nifty Bank too is among the red territory, and you're seeing that Nifty Bank is down almost 0.1% in trade as well. What's holding on to gains today? We have those pharma names that are managing to buzz and trade. So Nifty Pharma is among the top sectoral gainer, and we have the names coming in from Nifty Pharma. So Abbott continues to see those gains that it saw yesterday post earnings. Zydus Life continues to hold on to gains. So pharma names, Gland Pharma also managing to hold on to gains. Other than that, we have a good move coming in for the Nifty IT names. Persistent System among some of them is also managing to see decent gains. And other than that, we have a whole host of IT companies that are managing to hold on to gains. But yes, that's how the market setup is looking like. We have a lot of movers coming in from the broader market front as well. And in terms of losers also, when you look at it, we have 361 WAM. We have Page Industries among top losers, KC International, which are not holding on to good gains, and some bit of a pressure coming in there, Rima. But yes, a lot of move happening only on the back of earnings and news flow that is coming around.
Indeed. The top gainer yet again is BPCL in the frontline pack. Remember, yesterday, Goldman Sachs upgraded the entire oil marketing companies. So BPCL continues with its gains from yesterday. So that's the top winner today. Pharma, as Winnie pointed out, over there, it's names like Cipla, Dr. Reddy's, up and about. You've got IT names also up, Infosys, HCL Tech. And remember, there's going to be a new mid-cap IT companies, which is going to hit Dalal Street very soon. Hexaware, they have their press conference today. We'll chat with the management. And, you know, it's one of the fast-growing IT companies. So it's going to give competition to the likes of
It's going to be interesting to watch out for this
one. It's a big one, 43,000 crore of a market capitalization. But we've got the management of InfoEdge waiting to chat with us. The company's seen strong growth in Naukri billings, now above 15%. Margins too have expanded. We have with us Hitesh Oberoi, MD and CEO at InfoEdge, joining in on the show. Very strong recovery, Hitesh, in Naukri billings, 15.2% in the quarter gone by. IT is up 16%. Do you see this recovery continuing in Q4? What is Q4 likely to shape up? And we've also seen a margin improvement in Naukri to 59%.
States, we had a tough 4 quarters in Naukri.
Yeah.
But Q2 was not bad. In Q2, we grew in the early teens, and then we were hoping that growth will sustain in Q3, and that seems to have happened. Anecdotally, yeah, I can tell you that companies are hiring once again. It's not a very hot market, but it's not a lukewarm market either. So the IT sector has been doing well. The non-IT sector has been doing well for a while. IT companies are back to hiring. Campus hiring is beginning to pick up. Attrition rates are slowly inching up. So fingers crossed, I hope this sustains.
So Q4 billing should be better than Q3 based on the evidence we have?
Very hard to say what's going to happen in Q4. The world has become so unpredictable. It's very difficult to predict what's going to happen even a month from now. So many unknowns. But yes, recruiter activity on the platform is growing. We are seeing more jobs being listed on the platform. There are sort of more recruiters accessing our database. More CVs are being viewed. Hopefully, all this will translate into hiring activity also over time. But fingers crossed on this one. Hard to predict what's going to happen 2 months down the line.
Right. What we also want to understand is in terms of the losses in non-recruitment, they continue to be inch a bit lower for 99 acres. The losses have narrowed to 4.8 crores versus losses of 14.2 crores. What has led to this? If you could explain us what is the factor behind this?
I think we've been executing really well in our non-recruitment businesses. 2 years ago, these businesses were losing more than 200 crores a year between them. And now we are almost at break even. The Shiksha business made a little bit of money last quarter. Even 99 acres was almost cash neutral. Jeevan Sathi, which was losing 110 crores 2 years ago, is on track to sort of, it's flirting with break even. And Q3 is also a seasonally weak quarter. So Q4 is normally better than Q3 for the non-recruitment businesses. So we are very happy with the progress we are seeing in these businesses. In almost all these verticals, we've kept costs under control. We've actually brought down marketing costs in the case of Jeevan Sathi. At the same time, by deploying more AI, by deploying more machine learning, we've managed to experience, and by revamping our platforms, we've improved the user experience. As a result of which, activity is up. There are more users who are active on these platforms, and we are enabling more matches through these platforms. So the revenue continues to grow, and costs are under control, and all these platform businesses beyond a point have very high operating leverage, and that's what is playing out in the non-recruitment verticals as well.
So 99 acres, you said, is turned cash positive now, and even the PBT losses that you share on your P&L is down to about 4.8 crore versus 14 crore in Q2. So from here on, do you expect at least it to be cash positive? Will that sustain? And do you expect it to turn profitably even at a PBT level for 99 acres?
A lot will depend on what happens with competition. Right now, competition is reasonably rational, and the market is also a decent market for real estate. So if this continues, then of course we would want to try and make some money in the business next year. But a lot will depend on competitive activity. We've always said that we are optimizing for the long run, not for the short term. So if in the short term competition becomes irrational, we will respond.
Ritesh, also, just in terms of 99 acres further, your billing growth has been around 16%. What I'm trying to also understand is how is the real estate market shaping up? Because versus FY24, it's still lower. So what are we expecting on that front in terms of growth? Q4 or FY26, what are we watching out for?
So the real estate market is hot in pockets. Premium real estate is selling more than affordable real estate. So, houses which are being launched at 5 crore, 10 crores, in markets like Gurgaon and Mumbai and sort of other geographies as well, there's a lot of interest. But it's still not easy to sell houses under 1 crore. And, so it's surprising, but true. So in pockets, real estate is very hot. But many parts of the market are not doing as well as one would expect them to. Secondary activity is also beginning to pick up. So a lot of people, our secondary business, in fact, has grown much faster than our primary business. So on the whole, it's a reasonable market. Prices have started stabilizing. They're not going up as much as they were going, as they were till about maybe 2 quarters back. And it's perhaps going to get harder to take price increases going forward in real estate as far as developers are concerned.
Okay, that point is important for real estate players. Quickly, just talk to us about Shiksha and Jeevan Sathi. You briefly alluded to it, but for Shiksha, the revenue growth was 3% versus 25% in H1, though billings is in double digit. And even for Jeevan Sathi, your losses are widened.
Yeah, so Shiksha, there are two businesses within Shiksha. There is a domestic business which has been doing really well. So that business actually in the first 9 months of this year is up 25%. We have a small study abroad business that actually has not had a good year, partly because of all the immigration and visa issues around the world. So perhaps not as many Indians are going overseas to study this year as was the case last year and the year prior to that because of all the changes that you're seeing geopolitically. So that part of the business actually degrew by about 15% in the first 9 months of this year, but the domestic business has been solid. It's grown by more than 25%. In Jeevan Sathi, our focus has been for the last 2 years to reduce burn. We changed our strategy. We changed our business model 2 years ago. We went freemium, as a result of which we lost revenue for some time, but it also helped us control our marketing cost. Now business is back to growing because we are trying to monetize aggressively once again. So this year, in the first 9 months, I think billings are up maybe 35% or so, and as a result of which we are almost at break-even.
Okay, Hitesh, thank you so much for joining in with us this morning on CNBC-TV18 and giving us an insight in terms of the company's outlook going forward as well. As of now, Info Edge trading with gains of almost more than 1% in trade. But now it's time for Growth Call, which is an initiative by Grow and CNBC-TV18 designed to provide you with valuable trading strategies. This week, CNBC-TV18's Nigel sat down with the pro trader Saurabh Sisodia, co-founder of Quantify Capital, to understand how social media is fueling speculative trading.
Sort of another important point is how has social media contributed to this speculative trading, especially among the retail investors?
So I think social media has a very big influence. In fact, I was reading an article that due to social media, speculative trading has increased a lot in last 5 to 10 years. And so if you see what happened with GameStop. So GameStop was a stock in the US. It was a company into gaming. There was an article on Reddit that, so retailers bet against the hedge funds, and due to this speculative trading, the stock risen almost 400-500% in a short span of time, and the hedge funds actually lost money due to this. So this is the power of social media, but what traders have to do is not to believe anything that is there on the social media, do their own due diligence, because with social media you get so many insights, some influencers saying this, other influencers saying this. So I think as a trader, what you have to do is just try to gain as much information content you can on social media, but not try to do any investment or trading advice based on social media.
Okay, all right. Saurabh, how can traders distinguish between genuine insights and say hype-driven recommendations on social media?
Okay, so what they have to do is, if any influencer is talking about a stock directly, because SEBI guideline says that if you're not registered, you can't talk about stock. So if an influencer is trying to pitch you a stock that, okay, this stock is looking good, telling you to buy, I think that is something you should stay away. And one thing to do is at least see the volumes, like what are the daily average volumes of that stock. If the stock has like at least a market cap of less than 1,000 crores, then definitely you have to stay out, because these are generally pump and dump. And what a trader can do is basically follow people who are giving genuine insights, basically teaching you how to make money, how to improve your investment process, rather than giving you tips.
लेकिन उन पैसों का उपयोग हमने शीश महल बनाने के लिए नहीं किया। इसका उपयोग हमने देश बनाने के लिए किया है।
telling Ukraine they have very valuable rare earth. We want what we put up to go in terms of a guarantee.
Welcome back. Let's talk commodities now. Manisha Gupta is joining in as always, and she's got her eye on crude. Manisha.
Thank you for that, Willie. As the crude oil prices have seen a decline of a couple of percentage points in the overnight market, trading quite flat right now, and that is because you have very contradicting fundamentals impacting the crude oil prices. Well, to begin with, it is about the US and China tariff concerns. China, remembers, imports nearly 70% of its crude requirements and does export a lot of crude products as well. So the markets could be hit on both sides, and that's impacting the prices here. The second important thing is the US inventories, and that has seen a surge of around 8 million barrels in the previous week itself. This is the largest 1 week increase in inventories that we've seen in last 1 year, and that has weighed onto the prices. But the other thing also is about Saudi Arabia increasing official sales prices to its Asian consumers, which is India and China. Saudi Arabia says this is because the demand from both of these countries in Asia has continued to be on the stronger side, and also India and China are looking for various other countries after those recent sanctions on Russia. So that is keeping these markets edgy as well. The other thing is about US reiterating its campaign on putting sanctions on Iran. Right now, Iran exports anywhere between 1 to 1.5 million barrels per day. So if these sanctions come through, then you could be losing that kind of a quantity from the global markets, and that's keeping the prices slightly supportive as well. The US private payrolls coming in at a big 183,000 also is supportive of the fact that you could be looking at demand getting better going forward. So as I said, contradicting fundamentals, but within all of this, we are looking at $70 continuing to hold as a support for the US crude prices.
Okay, Manisha, thank you so much for that. But it's time for a short break, and after the break, we'll bring you the management of MediSS to joining in with us to talk to us about their Q3 numbers, so don't go anywhere.
We're handing them money hand over fist. We're giving them equipment. European is not keeping up with us. They should equalize. And look, we have an ocean in between. They don't. It's more important for them than it is for us. But they're way below us in terms of money. And they should be paying at least equal. They should really be paying much more than us. But let's say equal to us. And they're billions and billions of dollars below. So we're looking to do a deal with Ukraine where they're going to secure what we're giving them with their rare earth and other things.
Welcome back. You're watching Trading Hour on CNBC-TV18. Now let's move on and talk about Medi-Assist Healthcare Services. They reported their Q3 numbers, which was seeing a very strong growth in terms of revenues. We're seeing the premium under management also seeing a good growth of around 17% for the 9-month time period. Profit after tax, that came in a bit under pressure on a year-on-year basis. Now we're joined by the management of the company, Satish Gidugu, who is the CEO at Medi-Assist, to talk to us about their quarterly numbers and the outlook of the company going forward. Satish, good morning and thank you so much for joining in with us. Now, firstly, let's start by talking about this premium under management which is there. That's managed to see a good growth of around 17% for the 9-month time period. Could you guide us? What is the outlook for Q4, FY25 and FY26? What is the growth that we're expecting here? And could we expect the 17 to 20% range of growth, something that could normalize from here on?
Morning, Billy. Thank you for having me on this call. And there were too many questions, so I'll attempt to answer each one of them one at a time. So we've seen a good growth both on group and retail premiums. We've grown faster than market in both of the segments, mostly backed on our own organic growth, plus including the acquisitions that we've just concluded. So I think we've always said in the past that we will match or better the industry growth rates in both group and retail, and that continues to be our outlook for the current year and the future year.
Any growth, Satish?
We will match or better the industry growth rates.
No, you said the growth this time is a combination of the acquisitions and organic growth. So what was the organic growth in the current quarter?
Hi, Rima. Always a pleasure to meet you. Been on here since listing, so thank you for having me here again. The way this industry works, Rima, is that the day we conclude the acquisition, it becomes organic because we are responsible for 100% retention. So it's very difficult to tease out the numbers, which is organic and growth. But and remember, the base only has the proportionate value of the premiums, that we've added.
Right. Satish, what I want to understand and what I was reading, some analysts have highlighted that, these EOM guidelines which have come in, because of that, there's some bit of a pressure from the pricing side for insurers, and anything that is possibly that could impact the group segment growth going forward. Is that something that you should be worried about?
So I'm going to split that into two parts, Vinny. One is, of course, there is pressure in group, while the employment numbers haven't really stacked up, as much as we would expect across the group segment in multiple industries. So it did put some pressure in terms of employment growth, which is a key driver for the group premium growth. And hence it is a little suppressed. So there's also more increased competition in the group business. But on the positive side for us, especially with the regulators' new master circular mandating certain kind of quality and service delivery parameters, and we've focused heavily on two things in the last 1 year. One is the policyholder experience. How do I improve, for example, on an average, we're getting 10,000 patients out of the hospitals every month, even before the bills are generated. They don't have to wait even for a second, even for a bill to be generated. And we've also focused heavily on improving insurers' outcomes through a better fraud, waste, and abuse prevention. In fact, the fraud-related savings we delivered to insurers grew about 1.5 times compared to the previous year, same period. So with these, we continue to maintain our right to win, even in group. Collectively, our retention on an annual renewal business has moved up to 95% from what used to be about a 94.3%.
So then does that mean that, if the competition is increasing in the group segment, this 15% growth that which you've gotten during this quarter is something that could be a bit lower maybe here?
I don't necessarily see them as related. We are on the service provisioning side. And in fact, I think with the amount of churn that we're seeing in the group, with the groups changing from one insurer to the other, I think our ability to provide continuity and exceptional control on costs and medical inflation is something I believe will only improve our right to win.
Retail has been doing well for you. So can retail be the growth driver, and even the government share? How do you expect that to play out, Satish?
Yes, Rima. So I think on retail, from last year till now, we've added 3 more new private insurers to our retail book. And in most of these cases, we have 100% visibility to the entire book, and then that'll sort of play out, as the renewals actually happen. So retail is definitely a focus area, and there we will continue to track to market or improve on the retail side. Interestingly, on the government side, there's a lot of good work that's happening, especially with Government India's new focus on adding senior citizen care, how states and the central government schemes are coming together to mix and match the benefits, and also the latest announcement on the gig workers sort of eventually getting added to the Pradhan Mantri Jan Arogya Yojana. We continue to stay very focused on the government business, and we've improved even on the government business in terms of the overall top lines. We've grown about 20% on government.
Absolutely. So that is a very good growth that you're seeing there in terms of the share also of the government business. That has also been going up for the company. What I want to understand that, what is the ideal share that you would want between government and retail, and what does that do to your margins?
There's no real specific target. I think the industry has evolved around 3 dimensions, right? Group, retail, and government. We want to track or better the growth rates of respective segments, and whatever will be the mix, we know how to manage that as a common back office using technology. So there is no real mix that we are looking forward to, but we want to make sure that in each segment we are better than the market.
Just 2 months back, there were articles that you're eyeing acquisitions, you want to expand your footprint. So where are we in terms of an acquisition? Are you likely to close one in this calendar year, perhaps in the first half of the year?
So we have announced the acquisition of Paramount TPA, the second largest in the group segment after MediAssist. We have filed for a regulatory approval, Rima, because both of us are
That's known. Is there anything else?
No, I think we will always remain opportunistic. On any opportunity that comes our way, and that makes sense.
Okay, thank you so much for joining in with us this morning on CNBC TV18 and giving us an understanding in terms of what to watch out for, Satish, from the company going forward as well, in terms of acquisitions also. But yes, that was the management of MediAssist stock holding on to gains of 0.8% right now. Time for a short break. Don't go anywhere. After the break, the new RBI governor has made in monetary policy tomorrow. What is the street expecting? We'll give you the details on that.
I think we are now getting into a phase where growth will surprise to the upside. The budget reaffirms that. I think this is a growth-oriented budget. In fact, the phrase I've used for this budget is that it's a magic budget, and I'll come to that in a moment. And my expectation is that the monetary policy will back this budget, and the monetary policy will also become growth-oriented. So as far as India is concerned and what we control, I think things are looking up.
I think it is one of the best budgets that we've seen in many, many years, and I tweeted it's a dream budget. So first thing is that you normally want money with the public rather than with government. It should just be the general thumb rule of looking at anything, that money with public is better than money with the government. You have not said that, oh, you cut a tax rate across the board, therefore the rich will get much more. It has come to the correct audience in that sense. So it has to be travel, it has to be savings, it has to be these car consumer durable types. As I said, we are not buying those, but they could.
Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available.
Welcome back. The Monetary Policy Committee under the chairmanship of the new RBI Governor Sanjay Malhotra is all set to announce its rate decision on Friday morning. That's tomorrow. That's going to be the big cue to watch for our markets. So ahead of that, CNBC-TV18's Ritu Singh polled the top economists to find out what the street is anticipating. Ritu.
For the first time in nearly 5 years, the Reserve Bank of India could kick off a rate-cutting cycle, making Governor Sanjay Malhotra's debut policy meeting one of the most closely watched in recent history. Now, RBI has been injecting massive liquidity into the banking system in recent days, which some interpret as a precursor to a rate cut, despite the relatively high inflation. So the CNBC-TV18 monetary policy poll shows 70% of market participants and economists are betting on a 25 basis point rate cut this time, driven by the need to support growth. But ignoring the rupee's depreciation can prove tricky, which is why 30% of the respondents still voted for a dovish hold. Now, liquidity remains tight in the system, but a cash reserve ratio cut at this point seems unlikely. But 60% of the respondents do expect additional liquidity easing measures like more OMOs, longer duration repos, or a cut in the incremental CRR for NRI deposits. Of course, markets will also watch closely for any clarity on the new LCR norms, which are set to kick in from the 1st of April. Now, external factors are going to add a lot of complexity to this policy. RBI is likely to acknowledge the risk from the tariff threats and stay nimble, but a small section of the market believes that inflationary tariffs and a weakening rupee could be used as an argument to push out rate cuts. But the broader consensus is RBI will allow a gradual rupee adjustment while ensuring stability. Now, markets are already pricing in steeper rate cuts beyond February, with most expecting anywhere between 75 to 100 basis points cut in this cycle to give a helping hand to growth. Now, despite these expectations of rate cuts, the monetary policy stance is likely to be left unchanged at neutral. But as for the tone, 40% do anticipate a dovish tilt, while the majority expect it to be neutral. Now, growth expectations are softening. 90% of our respondents predict that RBI will lower its FY25 GDP forecast to 6.4 to 6.5%. That could further strengthen the case for easing. But the inflation forecast is unlikely to be tinkered with in this policy. So all eyes are going to be on Governor Malhotra's debut policy move. Will he pull the trigger on a rate cut or stay cautious amid global risks? The stakes are high and the markets are going to be watching.
And watching very closely. Ritu, thank you very much for that neat summary on the expectations. Get into a break, but on the other side, back to tracking corporate earnings. Redington's V.S. Hariharan joins in next to talk about the quarter gone by and the way forward.
For the first time in nearly 5 years, the Reserve Bank of India could kick off a rate-cutting cycle, making Governor Sanjay Malhotra's debut policy meeting one of the most closely watched in recent history. Now, RBI has been injecting massive liquidity into the banking system in recent days, which some interpret as a precursor to a rate cut, despite the relatively high inflation. So the CNBC-TV18 monetary policy poll shows 70% of market participants and economists are betting on a 25 basis point rate cut this time, driven by the need to support growth. But ignoring the rupee's depreciation can prove tricky, which is why 30% of the respondents still voted for a dovish hold. Now, liquidity remains tight in the system, but a cash reserve ratio cut at this point seems unlikely. But 60% of the respondents do expect additional liquidity easing measures like more OMOs, longer duration repos, or a cut in the incremental CRR for NRI deposits. Of course, markets will also watch closely for any clarity on the new LCR norms, which are set to kick in from the 1st of April. Now, external factors are going to add a lot of complexity to this policy. RBI is likely to acknowledge the risk from the tariff threats and stay nimble, but a small section of the market believes that inflationary tariffs and a weakening rupee could be used as an argument to push out rate cuts. But the broader consensus is RBI will allow a gradual rupee adjustment while ensuring stability. Now, markets are already pricing in steeper rate cuts beyond February, with most expecting anywhere between 75 to 100 basis points cut in this cycle to give a helping hand to growth. Now, despite these expectations of rate cuts, the monetary policy stance is likely to be left unchanged at neutral. But as for the tone, 40% do anticipate a dovish tilt, while the majority expect it to be neutral. Now, growth expectations are softening. 90% of our respondents predict that RBI will lower its FY25 GDP forecast to 6.4 to 6.5%. That could further strengthen the case for easing. But the inflation forecast is unlikely to be tinkered with in this policy. So all eyes are going to be on Governor Malhotra's debut policy move. Will he pull the trigger on a rate cut or stay cautious amid global risks? The stakes are high and the markets are going to be watching.
I'm still generally pretty constructive on the Indian market. Obviously, the valuations are higher than many other EMs, but generally speaking, stronger fundamentals, at least long-term, to go with those higher valuations. India is also, at least at the current time, less in the crosshairs of some of these potential tariff announcements. There's lower overall export risk to the U.S. in terms of the size of the numbers compared to China, compared to Canada, compared to Mexico. And so that keeps India fairly well positioned in this year where there's a lot of headlines that investors can wake up to and find various disruptions on their positions. It doesn't mean that there's no headline risk, but overall, I think it's rather well positioned and still has all the structural uptrends.
I think the underlying innate technology is just right on the threshold, and we'll get there with the next models. But now people have got to go off and build all these services. So someone in this room hopefully will figure out what the AI tutor of the future looks like, and that'll be a population scale thing, and it'll.
Welcome back. Redington is the company on our radar right now. The stock is holding up in the green with a gain of about 1.5% after the company posted their highest ever quarterly revenues. Revenues for the company have gone up by 13.7% on a year-on-year basis, 7-quarter high. Margins too have inched up to 2.3%, higher than the 1.8% in the prior quarter. We have with us V.S. Hariharan, Group CEO of the company. Mr. Hariharan, thank you very much for joining in. This is Rima here. You were optimistic about Q3 given the festive season. There were backlog of orders in India and the EMEA area. Now looking ahead for Q4 and FY26, what is the outlook? Does Q4 look better than Q3? And FY26, what can you guide?
Thanks, Rima. Thanks for having me here. So obviously, we have shared the best quarter ever in the history of Redington with a 26,664 crores of revenue this quarter and a profit of 400 crores, which is also the best. It was largely, as you rightly said, given the season as well as the sale of technology solutions, the value business this quarter. We had some good large deals both in India and UAE, as well as a good demand in the technology and the cloud solutions area. Going forward in Q4 as well, we do see a fairly bullish outlook. because it's a year end for India and the budgets that the corporates and the government have. We do see that going forward. We do have a festive season, the Ramadan season in the Middle East and Turkey, which might have some softness. That happens in March. But outside of that, across all the business units, from mobility, consumer PCs to technology solutions and the cloud business, we do see a fairly optimistic outlook for Q4 as well.
Okay, so given that you're bullish about Q4, do you think you can push to a double-digit at 10% kind of revenue growth to close FY25? In the first 9 months, you're at 8.9%, and you are doing double-digit in, So do you think we can get to 10-11% full-year growth numbers?
I think typically Q3 and Q4, we do get double-digit growth. That's the outlook. But again, market conditions will determine what happens and how we execute as well. Those are the two things. I think the market is available for a double-digit growth in Q4. And it's all about if anything changes in the closure of the bigger deals in Q4, and we're able to execute well.
Namaste, Hariharan. Good morning. This is Vinny joining in the conversation as well. So double-digit growth is what we're expecting in Q4. But in terms of margins, what could we expect? Because margins also are at a 7-quarter high this time. Is that something as a trend that we could see continuing this 2.3% kind of margins?
I think from an EBIT perspective, we are looking, our outlook is around 2.3% plus minus. Again, the mix of the business will actually drive that. Typically, on the mobility side and the PC side, we get a bit lower margins, and the value business gives us higher margins. The mix will largely determine how that will look like. But again, our outlook going forward is to try and keep the margins plus minus around the 2.3%.
You said EBIT margins at 2.3 or EBITDA margins at 2.3%?
EBITDA margins at 2.3.
EBITDA margins, and you should sustain that level?
Yeah, we want to be able to sustain that level. That's what we're shooting for.
Okay. Yeah. And what explains the sequential jump in your margins from 1.8 to 2.3%?
So if you see the way our quarters pan out, Q1 is normally a soft quarter for us coming out of the year, and Q2 has all the mobility NPIs, and it is weighted highly towards mobility where we get lower margins. Q3 typically has a lot more of the value business, the servers, the storage, the software, etc. And Q4 also, the mixes are tilted a little bit around the value business. That's what drives the margin a little bit. So again, you'll see that cyclical thing. But overall, we've made a lot of changes in the way we do our business, and on our OPEX as well. We made a lot of improvements. We have really cut back on things and right-sized some of our investments. So we are trying to gun for a better gross margin, with the mix being favorable towards value business and the OPEX being in the right direction. So all those things drive better EBITDA.
What's the current mix between your value segment, which you call as software, servers, storage, on which you get higher revenue? So what does it currently contribute, and what's the ideal mix?
Yeah, so currently, if you look at this quarter, about 30% of the business comes from the technology solutions group and about 4-5% from the cloud. So between the two of them, we have about 34-35% of the mix, and about 35% comes from the mobility solutions group. If it remains at around 35%, obviously the margin gets tilted towards a higher margin level, and we'll retain our OPEX and spend in a similar way. We will obviously be investing more in the value business as we go forward because we see a lot of upside and growth there. We'll be investing in cloud and AI, and some of that will bump up our OPEX, but the 35% ratio of value business will be important for us to maintain the mix in the higher margin.
Right. Mr. Hariharan, what I want to know is, you did highlight that, India, UAE surely did well for the company in Q3. But in Q4, you highlighted some of these points coming out, Ramadan being there in the Middle East, which could impact the overall growth. Right. So right now, when I'm looking at the CISA growth, that has been around 5.5% on a quarter-on-quarter basis. 17% is year-on-year basis growth. What is the growth that we could expect specifically from CISA, and rest of the world also? What is the outlook in terms of growth there?
I think the CISA growth will be similar. We don't see anything that really is pointing to the direction of that reducing, so it'll be in similar levels. In Middle East, Africa, UAE has grown very well for the last 2-3 quarters, but Saudi Arabia has been somewhat subdued because the government reprioritized investments. I think the next quarter, the next few quarters, we see Saudi coming back, so that should pick it up a little bit. Similar in Turkey, there's a decline in market size in Turkey over the last few quarters because of inflation and interest rates. That has now flattened out. So we don't expect a strong growth coming back in Turkey, but at least if it is flattish, that'll help. But the Saudi Arabia growth and the continued momentum in Africa overseas will be important for us to get better growth in the rest of the world.
Mr. Hariharan, great chatting with you. Thank you very much for joining in, and do come more often on CNBC-TV18 to share updates. Thank you.
My pleasure. Thank you.
That's Redington for you. It's had a good quarter, and the stock has spiked a tad bit. The company's bullish about Q4. There is no reason why double-digit revenue growth should not persist in Q4 unless some big macro headwind comes through. And margins too, they're trying to maintain it at current levels of 2.3%. because they want to keep the mix of high-value segments like your cloud, technology. As long as that remains high at 35% in terms of a contribution to sales, margin should stay at these levels of 2.3%. We'll get into a break. We'll come back. It's a big, big day in terms of earnings. So we'll put the spotlight on names like State Bank of India and ITC as they get set to report their numbers.
Kid on earth, this year got an AI tutor that was provided like a better education, or helped to provide a better education than anybody could get last year. Think what it would mean if we could have like an AI medical diagnosis system that was better than anyone could get last year. Think what it could mean if scientists could go cure every disease faster. And so, we've been waiting for this moment for a long time. I think we're gonna deliver something that can help with it, and now people have to go build with it. Other side of it, the cost for a given unit of intelligence 1 year later seems to fall by about 10x. Moore's Law was a 2x every 18 months for the number of transistors on a chip, and that changed the world if you waited a few decades. But what's happening with the reduction in cost in AI models is extraordinary. Now, I don't think it means that the world's going to need any less AI hardware, because you bring the cost down and just the people are going to use it for a lot more things. The total number of dollars will go up. But that's a really exciting thing happening.
Welcome back and thanks for staying tuned into Trading Hour on CNBC-TV18. We have the bottom at the flashes at the bottom of your screen in terms of Solar Industries con call highlight, where they're saying that they are expecting to see they fall short of 30% of their revenue growth guidance for FY25. In the domestic market, the slowdown is impacting their revenue growth, as well as the defense revenue guidance is sustainable, but may be a hit or miss in terms of 5 to 10% up or down is something that they have highlighted in their con call. As of now, the stock has fallen off the day's highest point, trading in the red, down 0.5% in trade. But let's move on, and we have a whole host of earnings, so we'll watch out for what are we expecting from there. And two key ones we are watching out for is SBI as well as ITC. Now, SBI will be reporting the numbers later today. Abhishek is joining with us to tell us what is the expectation for this quarter.
Well, for SBI, watch out for the business momentum this time around. Deposit growth will be lower than the system. Advances growth expected to remain on the healthier side. Kotak Securities estimates advances growth of about 13% YOY and 3% sequentially. Net interest margin can decline YOY but improve on a sequential basis. So Kotak Securities estimates a net interest margin decline of 1 basis point YOY and about 3 basis point improvement on a sequential basis. Now, OPEX will be on the lower side, which can aid the operating profits. However, operating profits will also get impacted from the treasury income. Treasury income last quarter was more than 4,000 crore, which is on the healthier side and may not get repeated this time around. So slippages can rise quarter on quarter. Kotak Securities again estimating slippage ratio of 1.5% versus 0.5% in the previous quarter. However, asset quality is expected to improve. Recoveries and upgradation will be on the lower side, so write-offs can aid asset quality. Motilal Oswal is estimating gross NPA ratio of 2.04% versus 2.13% in the previous quarter, and net NPA ratio also expected by Motilal Oswal to decline by 3 basis points sequentially. Watch out for management commentary with respect to the trajectory of business growth going ahead, along with net interest margin and return ratios, which will be seen closely. Our polls suggest NII growth of 7% YOY and about 2.3% sequentially. We are working with a profit growth of nearly 76% YOY and a decline of more than 12% sequentially. Back to you.
Thank you very much for that. From SBI to ITC, Mangalam joins in with the key expectations.
Well, for ITC, the good part was that the budget had no increased taxes on tobacco, but importantly, the stock is trading at 25 times. This time around, we will still have the hotel business as part of the reported numbers because the hotel business went X only from the start of this new year. What are we expecting? 3 to 4% growth in the cigarette volumes, close to around 5 to 7% growth in FMCG revenues because it's a seasonally strong quarter for the hotel industry. 12 to 15% growth in ITC hotels with better operating metrics out there as well. Agri trading as well, because of increased opportunities in tobacco trading, we're expecting around 15 to 20% growth in the agri trading revenues. The paper business has seen cyclical downturn, so as a result of which 2 to 3% sluggish growth out there. Analysts have put all those numbers together and expect the standalone revenues for ITC X of excise to grow at around 9.5%. We're expecting about 200 basis points in terms of margin compression. A large part of that would be led by the FMCG business itself, so we'll keep an eye out on that one. And the net profit also optically looks lower, but that's largely because of a 470 crore tax reversal in the base quarter. The number you have to look at is an absolute basis, so that's something we'll watch out for ITC in the third quarter.
Okay, thank you so much for that, Mangalam. But with that, we're absolutely out of time on this session of Trading Hour on CNBC-TV18. Thank you so much for tuning in. Don't go anywhere. Halftime report up next.
We've had a lot of evidence so far that Trump's tariffs are looking transactional rather than actual tariffs. In other words, we've seen tariff announcements for Colombia, for Mexico and Canada, all either reversed or delayed. And the only country where we really do have increased tariffs with retaliation, of course, is in China. And so I think that's generating a huge amount of uncertainty. I mean, investors do not like uncertainty. Companies don't like uncertainty. It's very hard to say where we go from here. I do not assume that we've seen the end of any possibility of tariffs on countries like Mexico and Canada. But my word, the speed of events is very confusing, and investors, I think, are therefore very nervous about it. And it's interesting, the US is underperforming the developed markets this year. As you've noted recently, the dollar's lower. So this is all, I think, creating a lot of uncertainty, which I think will have an impact on investor behavior.
कुछ लोगों को अब जब एआई की बात होती है, कुछ लोगों को अब ये शब्द फैशन में है तो बोला जाता है, लेकिन मेरे लिए सिंगल एआई नहीं है, डबल एआई। भारत की डबल ताकत है। एक एआई आर्टिफिशियल इंटेलिजेंस, दूसरा एआई एस्पिरेशनल इंडिया। हमने स्कूलों में 10,000 टिंकरिंग लैब्स शुरू किए और आज उन टिंकरिंग लैब से निकले बच्चे रोबोटिक्स बना करके लोगों को चकित कर रहे हैं। और इस बजट में 50,000 नए टिंकरिंग लैब्स उसका प्रावधान किया गया। भारत वो देश है जिसके इंडिया एआई मिशन को लेकर के पूरी दुनिया बहुत आशावादी है और विश्व के एआई प्लेटफॉर्म में भारत की मौजूदगी एक महत्वपूर्ण स्थान प्राप्त कर चुकी है।
Stocks slip ahead of the FNO expiry today and the keenly tracked RBI monetary policy decision tomorrow. Consumer durables and realty are the big gainers, while IT is managing a green tick as well.
Swiggy's losses mount on higher investments in the quick commerce business, but digital platform maintains its guidance to achieve EBITDA breakeven in food delivery and be contribution positive in the quick commerce business by the third quarter of FY26.
Hexaware is set to relist on the bourses after 5 years via an IPO that will see the owner Carlyle divest 26% stake for 8,750 crore rupees. It will be the largest IT services IPO in the country, valuing Hexaware at over 43,000 crore rupees.
Gold scales to a new high of 28.80 per ounce, taking the returns from the yellow metal in 2025 way beyond those from other asset classes, including equities. Experts see $3,000 per ounce on the horizon. All that glitters is gold. That's what the headline for the day is. Big returns coming in from gold, even though the markets are slightly muted on the equity side of things. The mid-cap index has begun to underperform a little more in the last 15 minutes or so. The market actually, for the Nifty and the Nifty Bank, down about 1/3% for the frontline indices. The Nifty Bank down about 100 points. Mid-cap index is the one which has fallen 3/4%. More importantly, it promises to be an event-heavy day. We have big earnings which we're looking at, and at the same time, we're looking at a bunch of other things like the Nifty options expiry today and the RBI policy tomorrow as well. So ahead of big earnings, some nervousness, Hormaz.
Indeed, and you're counting down to 6 major earnings, not one, not two. If I start getting them in just a few minutes from now, be it the likes of Trent or SBI or even the likes of Bharti, Airtel, ITC. So there is a lot to watch out for, not just only in today's session, but also for tomorrow's trading session as well, as we count down to the big RBI policy, the first one under the new governor Sanjay Malhotra. But the stock of the last few minutes, though, has been Solar Industries, and that was at one point trading with gains of around 1.5%, 2%, but then it's taken a big nosedive from the highs of the day. There you can see now 4% lower on the stock after the company cut its revenue growth guidance for FY25, but there are lots of earnings reactions we need to watch.
Totally. This is conference call reaction. There are earnings reactions, and Thangamayil Jewelry, that's the gold play, right? We were just talking about how gold returns have been incredible. Just look at the sales performance of the company in the third quarter. The overall revenue of the company grew by 26.5%. Retail revenue, gold jewelry revenue actually grew by 30%. But nearly 26% of that is largely on account of the prices of gold, because gold volumes grew by just about 4% itself. The strong festive season, wedding season aided performance, and that's not all. In February itself, Basant Panchami, the company reported sales growth of 54%. So SM Lakshmanan, who's the Vice President Finance and Accounts at Thangamal Jewelry, now joins in. Thanks a lot, Mr. Lakshmanan, for joining in. It's a good performance that you've reported, and gold continues to surge ahead. So the question then, the obvious question is that what is the likely revenue growth that you are going to end this year with? And how much of that will be on account of gold price rise? How much of that will be on account of gold volume rise?
Good afternoon, Mangala. Thank you for the opportunity. Thangamal Jewelry Limited has achieved 3,530 crore rupees during the 9-month period of FY 24-25, registering a retail revenue growth of 24% year-on-year. In terms of volume, gold increases by 4% for the 9-month period, and diamond increases by 14%. To answer your question, Mangala, the company is expected to end the financial year bettering the 9 months year-on-year growth performance.
Oh, 9 months you've done phenomenally well, and you expect to end this year bettering the 9-month performance itself.
It is, yes. In terms of volume as well as in terms of...
Could you give us a quantitative number out there? Are you looking at 30% growth here by the end of this year on a top line basis?
No, Mangala, certainly not 30% plus, 24% plus, I'm saying.
24% plus.
Yeah.
Mr. Lakshmanan, good afternoon. Thank you for joining in. If you could tell us how much of this margin expansion that you saw during the quarter, you went up from 5.6, you went up to 7.3. How much of that was due to the high gold prices, and were there any more write-downs that you had to undertake because of the customs duty cut?
Good afternoon. Setting aside the gold price variation impact, the company continues to improve its operational efficiencies. Setting aside this gold price variation, my EBITDA margin stands at 5.67% for the 9 months of FY 24-25, which we have given the results, as compared to 5.40% previous year corresponding period. There is a 27 basis point increase in terms of EBITDA margin, despite the customs duty reduction hit. To answer your question, Omas, the customs duty reduction hit has been completed by Thangamal Jewelry in Q2 itself. Normalizing for this customs duty reduction hit, EBITDA margin would have been somewhere around 6.1%. And the company is confident of maintaining EBITDA margin at 6+% levels going forward as well.
All right, you will maintain it at 6% plus levels. You've maintained that earlier as well. Mr. Lakshmanan, just wanted to understand the correlation between gold prices and your own margins, because over a period of time, you've increased your hedging. Now it stands at around 91%. 9% of your inventory is still unhedged. So you make inventory gains every time gold prices rise, right? Why is it that then you are increasing your hedges as well? Do you not want to benefit from increased gold prices?
No, but historically the company had the policy of having the hedging around 65 to 75%. Post-COVID, especially in the recent 1 or 2 years, the company has increased this percentage to 85 to 90 as a policy, as a hedging policy. And the company continues to stick to that hedging policy. Prices may go up, may come down. But the company tries to have its own hedging policy.
So you would remain at that 90, 91% or 85 to 90% level, or not maybe go beyond that as well, say 94, 95%?
As at the moment, the company has the policy of 85 to 90% hedging policy as compared to the 65, 75, which I just said in the past.
So you will make better gains in the fourth quarter as well because gold prices are rising. What about the non-gold part of your portfolio? Because there you were expecting that to be about 10% plus of your overall sales. Instead of going 10% plus, it's actually gone lower. It's 8.25% for the first 9 months of this year.
Mangalam, I will put it the other way. In the midst of peak gold prices, non-gold revenue of Thangamal Jewelry continues to increase at 15% for 9-month period. which is an encouraging one. The gold passion and the gold price try to outweigh the non-gold. Otherwise, my non-gold performance continues to be strong, and it is at 15%.
Right. Mr. Lakshmanan, you had also approved a fundraising plan that was around 600 crores through the rights issue. When do we see that happening? And once it's done, how do you plan on utilizing those proceeds?
Yeah, the company goes ahead with the 510 crore rupees rights issues. The money is expected to come in by March last week, probably. And it is for the ongoing expansion. Let me just have a brief about the company's expansion plans also, in line with this rights issue money usage. As at the moment, the company has opened 4 showrooms for this financial year till date. The company sets its foot in Chennai during this month. The flagship showroom is going to be launched on 23rd of February. And 3 more outlets are going to be opened by 31st of March, probably taking the new showrooms tally expected to be 8 for this financial year. And the company goes ahead with the expansion for the financial year 25-26 in and around the Chennai city and in a few pockets in the state of Tamil Nadu. So the money which is going to be collected in terms of rights issue is going to be used for this onward expansion.
Thank you, Mr. Lakshmanan, for joining in and giving us what took place in the third quarter. Confident of beating the 9th-month revenue growth in the entire year of FY25 as well. We would have prodded you a little more to give us a guidance on FY26, but we'll leave that for another conversation, maybe at the end of the 4th quarter as well. We'll leave you with the promise of joining us at the end of this financial year. Wish you good luck and shining gold, as we see, for not just Thangamal jewelry, but the entire jewelry sector itself. Gold has beaten performance of all other asset classes in this year itself and over the longer period as well, as various reports do show. We take a short break, come back. From gold, we come back to health. Zydus Wellness, the management joins in to discuss their third quarter numbers.
This was the third consecutive year that the BMC budget was presented to an administrator and not to a standing committee. Why? Because the term of the corporators ended in March 2022 and the elections for the new term and the new corporators are yet to be held. Now the 74,427 crore rupees budget, out of this, an allocation of 43,162 crore was made for capital expenditure, 5,100 crore rupees for roads and traffic department, 5,807 crore rupees for Mumbai Coastal Road project, 3,039 crore rupees for storm water drain department and 650 crore rupees for sewage operation department. For key public services, rupees over 4,000 crores were allotted to education department, over 7,000 crore for health department, 261 crore rupees for fire department, 309 crore rupees for disaster management and 220 crore rupees for the garden department. BMC announced that it's going to start 250 new public clinics, also known as Apla Dawakhana, all over the city. One interesting initiative announced by the BMC was the introduction of cyber awareness program for students. It will serve 2 key purposes. One will be to ensure that the students learn how to use the internet in a safe manner and to keep them safe from cyber fraud. BMC also focused on environment initiatives and projects like promoting eco-friendly cremation and proper disposal of residue from idle immersion. These are the projects which will take place under environmental related initiatives in the next few months. We also spoke to Bhushan Gagrani, the BMC commissioner himself. This was the first time that he presented the BMC budget. Listen to what he has to say about this BMC budget. So your budget also mentioned that you guys are planning on imposing a tax on the commercial properties in slum areas.
That's right.
If you can elaborate that. So from when this new tax will be levied?
It is actually not a new tax. In fact, we are enhancing our assessment net. Under the assessment net, the properties which are in the slum, however, which are being used for the purpose of commercial, they were not covered. So this is for the first time we are doing the survey and bringing them the tax net. Not necessarily that we will be imposing huge tax. It's a normal tax. It's not a very huge tax. However, the coverage will be given to our commercial properties.
So BMC has not introduced any new project this time. In fact, you have focused. Correct.
Yeah.
But sir, does it mean that is there any cause for fiscal concern, sir?
No, there is no fiscal constraint. We have enough adequate cash flow as well as resources.
हमारे देश में एक प्रधानमंत्री हुआ करते थे, उनको मिस्टर क्लीन करने कहने की एक फैशन हो गई थी। उस प्रधानमंत्री जी को मिस्टर क्लीन कहने की फैशन हो गई थी। उन्होंने एक समस्या को पहचाना था और उन्होंने कहा था कि दिल्ली से 1 रुपया निकलता है तो गांव में 15 पैसा पहुंचता है। अब उस समय तो पंचायत से लेकर पार्लियामेंट तक एक ही पार्टी का राज था। पंचायत से पार्लियामेंट तक एक ही पार्टी का राज था और उस समय उन्होंने सार्वजनिक रूप से कहा था कि 1 रुपया।
Welcome back. There has been further selling in the mid-cap index, down almost 500 points for that index now. But let's get chatting with the management of Zydus Wellness. Remember, this is a FMCG company which has Nycil, Everyouth, Glucon-D, Complan, Sugar-Free, Nutralite, and more recently Max Protein, Right Bite as the brands as well. Tarun Arora, who's the CEO at Zydus Wellness, joins in now. For the quarter, the company reported revenue growth of 14.5%, EBITDA growth of 16.5%. But Tarun, you know, what's interesting is that the last quarter, your margins were close to around 3%, 4%. Right now as well is around 3%. Bulk of the margins or the EBITDA expansion comes in, the fourth quarter and maybe a little bit in the first quarter as well. What are you doing to, one, de-seasonalize your portfolio when it comes to the operational performance? And what is the glide path to this 17 to 18% margins over the next 3 to 4 years?
I'm glad to be on the CNBC platform. So thanks for this question. I think the way our business is structured and post Kraft Heinz acquisition, one of the things that has happened is because of the strong summer seasonality of a couple of our brands, Glucon-D and Nycil, we typically see January to June, which is quarter 4, quarter 1, accounts for almost 65% of our revenue and almost 85% of our EBITDA, which is largely the impact of the operating leverage because the revenue moves up and your fixed costs are spread. So that's the reason you find typically we're operating 20-22% kind of EBITDA margins in quarter 4, quarter 1, while the quarter 2 and 3 drops substantially to 3%. We're quite conscious of this reason, and we're doing several launches. We're also trying to, increase the use cases for a brand like Glucon-D in the second summer, like September, October. There are other launches, like we launched Body Wash and Everyouth, which is a more winter brand. So a lot of work is happening, but business structures take, and more so in a consumer, habit space, take a much longer to do. So we live with this, and hopefully with a widening portfolio, including acquisitions, this will change over a period of time, but not in a next 1 or 2 years or 3 years. It'll have a bit of journey. Coming to your second part of the question, I think what we saw was between FY21 to FY23 and right up to FY24, because of the gross margins dropped, huge global commodity impacts, inflation, our margins had come under pressure. We are quite committed to building it back to 17-18% EBITDA margins. And if we really look at it, last 6 to 7 quarters, one of the first things that we've been able to work on and demonstrate is improvement in our gross margins. So typically, if you look at it, most of the quarters, except for last quarter, which was flattish, but every quarter, comparable to previous year, we've been able to show 200 to 300 basis points improvement in gross margin. So that's one critical lever for us through a mix of pricing, cost management at product level. We are looking at improving our gross margins, which will play out in terms of how we improve our EBITDA. Second is there are very structured cost management programs through the other overheads as well, where we believe as we scale up, our growth rates have been doing rather well versus the rest of the FMCG. So the operating leverage will start playing out. So a strong mix of pricing actions, cost management, and operating leverage. I think we are good to get to a 17-18% over next 2 to 3 years from an EBITDA point of view. Some of that has been demonstrated over last 4 or 5 quarters, and more you shall see in the coming quarters.
Right. Tarun, good afternoon. Thank you for joining in. I'd like to get on to sports beverages. What about competition in that space? Because there are other pharma companies, etc. You're getting there. What are you penciling in for brands like Glucon-D? Is there any further plans to scale it up further? What are the growth plans for this category in particular?
So interestingly, Glucon-D really started covered a wide breadth of use cases, including recovery from illness, sports, a lot of rehydration and energy. It covers a lot of things. As the market has got segmented, and there is sports, there is ORS, there is hypertonics, and a lot of other RTD spaces which have come up. So as we keep building Glucon-D in just the basic space where it means a lot for consumers from both hydration as well as providing energy. We are also looking at moving up the value chain in terms of getting into RTDs, where we have a Tetra Pak hypertonic, which is energy with electrolytes. We piloted last year with Glucon-D Activors in limited geographies. As we speak, we are scaling it up, and we believe we'll take it to more states. And clearly, that's going to be one unique offering that we'll have. A brand like Glucon-D, which is amongst the top most respected brands and trusted brands, with a strong differentiated formulation of energy with electrolytes will work. We're also rolling out ORS with some doctor detailing. So we are well placed. We are also looking at some more innovations in the years to come to take a larger share of throat, if I were to say so. The category is growing, and we have space for us as we grow.
Larger share of throat and larger share of thirst as well, if one must. Just a final question before we let you go, running out of time out here. I look at your portfolio. There is Complan, and then there is RiteBite. There is Glucon-D, and then there is Sugar Free. There are so many inter-brand synergies. I'm wondering if you are thinking of any sort of collaborations here, a Complan with maybe Max Protein infused, or a Glucon-D sugar-free version of Glucon-D. Is that on your mind? And what's your prognosis for RiteBite over the next couple of years? What's the scale that you're looking to achieve out here?
Sure. So it's a very interesting question. We are looking at synergies and learning from each other, each of these brands, and pulling them together. It need not translate into specific brand-led actions where you show a Complan Max Protein. But the fact is, if you really look at it, our nutrition portfolio with Complan and Max Protein. In Complan, we've been saying highest protein within the category, and we have launched VMAX with a fairly high level of protein, 30% protein, and which is adult nutrition and going through a doctor and expert selling route, while Max Protein is for the younger audience with a new format. So there is a continuum which exists, both from a formulation point of view, consumers' expectation, need states point of view, and how we service. Now with the emerging channels, whether it's quick commerce or even going into chemists. So there is a lot of synergies through the value chain that we see across our brands. And therefore, we are working on this. Glucon-D, again, we're looking at sports nutrition, where Complan and Glucon-D could have different roles in different ways from protein point of view, hydration, electrolytes point of view. So we are looking at and evaluating some of them and looking at innovations that can really fire up some of these opportunities. Jumping on to your question on the prognosis and our view on our Max Protein purchase, I think this brand is very powerful. It has amazing consumer acceptance. If we look at last 3 to 5 years, the brand has grown upwards of 25% on a CAGR basis, we believe with us, we can continue to build on a higher base with this kind of growth levels.
Right.
Increase our distribution because we have the benefit of much deeper distribution, as well as some innovations which we are experimenting as we speak and over the next 3 to 6 months. So we are imagining that this could be clearly one of our larger brands, could get to a 500 crore sooner than later. So we are quite excited about the possibilities that this brand and space provides and meets what consumer is seeking. They want healthy snacking where they love the taste and it has proteins and so many other things and fiber which really fit into our consumers' expectations. So we are quite positive about it. Yes.
All right, Tarun, thank you so much for sparing time. Running out of time today, but we hope to chat with you more on this forum. Thank you so much for sparing time. And there's the management there of Zydus Wellness. We'll take a short break, but before we do that, it's time for Growth Code, an initiative by Grow and CNBC-TV18 designed to provide you with valuable trading strategies. This week, CNBC-TV18's Nigel D'Souza sat down with pro trader Saurabh Sisodia, the co-founder of Quantify Capital, to understand the impact of SEBI's new regulations on speculative trading.
How do SEBI's new regulations aim to control speculative trading, and what impact do you foresee?
So SEBI did two major things recently. First is they increased the lot size of many derivative contracts. For example, Nifty from 25 has been increased to 75. So what this does is that to trade any derivative instrument, you need to bring more margin. So this basically discourages retail traders to speculate. First is that. And second is what SEBI is trying to do is they is trying to maintain that because earlier when every day there were expiries happening, right? We had Nifty, Nifty Sensex, right? And due to this, what was happening is a lot of speculation was going on. In fact, we were the most traded options market globally. A lot of speculation was going on. There were a lot of spikes which were created every day. So what SEBI did is they made a mandate that every exchange can have only one weekly expiry. So by these two measures, what is going to happen is the speculation will reduce, and what I foresee is going forward, the market will be more stable in terms of options, that we will see lesser spikes, the stability will be there, and retailers, which like SEBI's focus on the retailers are losing a lot of money, they'll be at least discouraged to stay out of the market.
Okay, all right, sir. An interesting point you make out there. Also another question, how can traders ensure that they stay within SEBI's prescribed margins as well as rules?
So first thing is being updated about what SEBI is doing, right? So SEBI recently put the circular that, okay, like we are going to increase margin. So a trader has to be aware, okay, what all changes will happen in his strategies. The returns will definitely decrease because the margins are going to increase. So this trader has to stay updated what is going to happen. Then he has to basically change his strategies according to these new guidelines.
$0.15 पहुंचता है। बहुत गजब की हाथ सफाई थी। $0.15 किसके पास जाता था, ये देश का सामान्य मानवी भी आसानी से समझ सकता है। आदरणीय सभापति जी, देश ने हमें अवसर दिया, हमने समाधान खोजने का प्रयास किया। हमारा मॉडल है बचत भी विकास भी, जनता का पैसा जनता के लिए। आदरणीय सभापति जी, आजकल मीडिया में ज्यादा ही चर्चा हो रही है, सोशल मीडिया में और अधिक हो रही है। कुछ नेताओं का फोकस घरों में जकूजी पर, स्टाइलिश शावर्स पर, लेकिन हमारा फोकस तो हर घर जल पहुंचाने पर है। आदरणीय सभापति जी, हमने ये जो अलग अलग कदम उठाए उससे लाखों करोड़ रुपए की बचत हुई, लेकिन उन पैसों का उपयोग हमने शीश महल बनाने के लिए नहीं किया। इसका उपयोग हमने देश बनाने के लिए किया है।
Well, the indices are declining right now, so perfect time to actually bring in, the F&O updates of the day. The Nifty very close to that 23,600 mark. In the morning, we had spoken about this being the lower end of the range that the option writers were playing with. And there are so many triggers, right? We have the Nifty weekly options expiry. We do have the 6 Nifty companies reporting their earnings today, though most of them would be reporting post-markets. And then we have the RBI policy outcome tomorrow. So the Nifty Bank, which is down about 1/5%, will be in focus. The key level to watch on the way up will be the technical levels for both the Nifty as well as the Nifty Bank, and that will be the 23,772 mark, which will be the 50-day moving average, and the Nifty Bank, which will be 50,741 as well. So we'll keep an eye out on those particular levels. They come up for you on the screen. So these are the triggers that we're watching out for tomorrow, rather in today's trading session and tomorrow, along with the 50-day moving averages that come up for you on the screen. Let's talk about the options. Hormaz, again, it's the time to bring out the iron condor, right? We have the 23,600 call and the 23,600 put. Option writers are playing, for a range around 23,650 and 23,550 at the lower level. And were you to actually break out or break, down from that range, they went ahead and bought the 23,650 call and the 23,550 put as well. So pocket of premium of 50 rupees, pay a premium of 20 rupees, and then you get 30 rupees in terms of a net premium. Fresh shots seen in Phoenix Mills and Page Industries, but that's about the F&O update of the day. What we'll do is we'll go forward. We perhaps have a technical guest as well.
Well, indeed, but there is Iron Man and we have Iron Condor Man, so that's interesting for us. Just before we take that break, GSK Pharma is one stock that I'd like to pull up at the highest point of the day now, 9% higher on the stock, and it's good going for GSK Pharma in today's trading session. Take a short break, more on the markets and specific stocks on the other side. Stay tuned.
I think we are now getting into a phase where growth will surprise to the upside. The budget reaffirms that. I think this is a growth-oriented budget. In fact, the phrase I've used for this budget is that it's a magic budget, and I'll come to that in a moment. And my expectation is that the monetary policy will back this budget, and the monetary policy will also become growth-oriented. So as far as India is concerned and what we control, I think things are looking up.
I think it is one of the best budgets that we've seen in many, many years, and I tweeted that's a dream budget. So first thing is that you normally want money with the public rather than with government. It should just be the general thumb rule of looking at anything, that money with public is better than money with the government. You have not said that, oh, you cut a tax rate across the board, therefore the rich will get much more. It has come to the correct audience in that sense. So it has to be travel, it has to be savings, it has to be these car consumer durable types. As I said, we are not buying those, but they could.
Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. The middle class provides strength for India's growth.
Welcome back. And Hexaware Technologies, after delisting 5 years ago, is set to return to Dalal Street. Now backed by the Carlyle Group, it is looking to raise 8750 crores this time around through the IPO. And this is a purely OFS issue. And Carlyle, the promoter, will be selling stake. Now, Rima caught up with the management to discuss the issue in detail and began by asking about their growth rate. Listen in.
We have a strong history for a number of years of doing better than the industry. Okay, so that's all I'll say. And we feel good about a number of things we've built in the company that are built to last, that we think will keep us on a good performance for a very long time.
So you're confident about outpacing the industry even going ahead?
That's what we've done in the past.
Okay, and what's your expectation of industry performance in calendar year 25?
I don't think the industry is going to tick up in growth materially. 24 was, I don't know, maybe 4.5%. May get a little bit better percentage.
So we're talking about high single digits. Can we push to, at least for the industry, low double digits?
No, I don't think the industry will get a double digits anytime soon.
So mid to high single digits?
I think so, yes.
But for you, at least you're confident about double digit?
We've done quite a bit better in the past. So, and I feel good that there's no reason for us not to sustain that outperformance.
Okay. Vikash, let me come to you on margins. Margins for the company have come down a little bit in the last 2.5 years. What is the outlook on margins?
I put it this way, that margins have come down from the pre-COVID era,
and primarily because of the fact that the margins at that point of time were unsustainable because a lot of the costs were not into the P&L. Visa expenses, travel, utilities. Coming back, we knew that those costs are going to come to play. If you look into our margins on an adjusted basis, our margins have been steadily improving, and that's driven by a lot of operational efficiencies that we have put into motion. Our utilizations are improving, attrition rates are coming down, our offshore mix are improving. So we feel very confident in terms of our current levels of margins and maintaining that.
And is there scope to expand margins?
Well, the operational improvements are in play. We expect that the operational improvement will continue, but we'll see how it plays out. We feel very confident about the current levels.
Can you outline the strategy in terms of white spaces, geographical expansion?
So the two markets that I think we have an opportunity to do more, if you look at global macros, right, the two economies, large economies that are decoupled from global macros, Middle East and India. And we think both these are markets that we can do better in.
And what is your current contribution from Middle East and India?
It's marginal.
Okay,
It's very small.
Very small. Low single digits, like sub 5?
In percentage terms, not much lower. I mean, it's like 25 million or so, or thereabouts in revenue.
So even if it grows, even if it doubles in size, it's not going to be material to move the needle.
Unless it doubles for several years continuously.
And you see that kind of an opportunity?
We think there's an opportunity to become bigger in Middle East.
Okay. One of your strategies which seems to have played out is broadening your client base or growth beyond the top few clients, and you've struggled a bit, especially on your top 2 clients. So first, talk to us about why your top 5 clients have underperformed the company growth rates.
We managed over a period of time to systematically focus on and reduce that client concentration risk. Right now, our top 5 clients is just over 25% of revenue, which has come down materially from what it used to be in the past. So I think it's a good thing for us that we've managed to reduce our client concentration.
What was it in the past, the top 5?
3 years ago, it was 30%.
30%, now down to 25%. And you want to bring it down lower?
Little bit.
Little bit. Carlyle, you've seen two, PEs come in. Bearings came in, went out. Now you've got Carlyle in. They're bringing their stake down from 95 to about 75%. So at least they're meeting the minimum public shareholding norms for now. But what is the strategy of Carlyle? We know they don't stay forever.
You got that right. They won't stay forever. You've seen PE firms holding, how Baring was with us, how Baring was with Coforge. I think you should expect a similar pathway. When we decided to go public again, one of the most important decisions was where we go public. And really the choice was between US and India. And I think there are many positives of India, but the biggest thing that we convince ourselves is the liquidity. The amount of liquidity in the market is so high that we don't think that, a stake such as ours being sold to the market is going to create any impact on the market.
If you have to look in the future, do you think once again, whenever Carlyle decides to exit, it will be sold to another promoter entity? It could be PE, or do you think it will go down the Coforge path without a promoter entity? But as you said, there is ample liquidity in the market. As and when promoter stake sales come in, it will be absorbed by the market, and the management continues.
The plan is to become a purely public company.
On the likes of Coforge.
Yes.
2 years back, your revenue crossed the $1 billion mark. You're closer to 1.3, 1.4 if you annualize last year's numbers as and when they come. When do you think you'll get to $2 billion?
We're not even necessarily thinking about 2. It's
so what are you thinking
enough.
about?
We're thinking about 3.
Oh, you're thinking about 3. And how soon can we get to 3?
Well, we're working hard to get there. It's like a race. The distance in a marathon doesn't change.
The management there of Hexaware in conversation with Rima. By the way, while this conversation was on, there were 2 other numbers that flashed on your screen. BEML was one of them, and the other one was MRF. BEML's net profit almost halved from the same period last year, but margins were better. That's also because of the fact that the expenses were down, and that contributed to the margin improvement. But the stock had declined to the lowest point of the day and is trying to now recover from those lows. Was BEML still at 2.25% lower, and MRF, of course, reacting to results as well after it reported its quarterly earnings just a few minutes back. And there you can see at the lowest point of the day now is MRF. Take a short break. More on the markets on the other side. Stay tuned.
For the first time in nearly 5 years, the Reserve Bank of India could kick off a rate-cutting cycle, making Governor Sanjay Malhotra's debut policy meeting one of the most closely watched in recent history. Now, RBI has been injecting massive liquidity into the banking system in recent days, which some interpret as a precursor to a rate cut, despite the relatively high inflation. So the CNBC-TV18 Monetary Policy poll shows 70% of market participants and economists are betting on a 25 basis point rate cut this time, driven by the need to support growth. But ignoring the rupee's depreciation can prove tricky, which is why 30% of the respondents still voted for a dovish hold. Now, liquidity remains tight in the system, but a cash reserve ratio cut at this point seems unlikely. But 60% of the respondents do expect additional liquidity easing measures like more OMOs, longer duration repos, or a cut in the incremental CRR for NRI deposits. Of course, markets will also watch closely for any clarity on the new LCR norms, which are set to kick in from the 1st of April. Now, external factors are going to add a lot of complexity to this policy. RBI is likely to acknowledge the risk from the tariff threats and stay nimble, but a small section of the market believes that inflationary tariffs and a weakening rupee could be used as an argument to push out rate cuts. But the broader consensus is RBI will allow a gradual rupee adjustment while ensuring stability. Now, markets are already pricing in steeper rate cuts beyond February, with most expecting anywhere between 75 to 100 basis points cut in this cycle to give a helping hand to growth. Now, despite these expectations of rate cuts, the monetary policy stance is likely to be left unchanged at neutral. But as for the tone, 40% do anticipate a dovish tilt, while the majority expect it to be neutral. Now, growth expectations are softening. 90% of our respondents predict that RBI will lower its FY25 GDP forecast to 6.4 to 6.5%. That could further strengthen the case for easing. But the inflation forecast is unlikely to be tinkered with in this policy. So all eyes are going to be on Governor Malhotra's debut policy move. Will he pull the trigger on a rate cut or stay cautious amid global risks? The stakes are high and the markets are going to be watching.
I'm still generally pretty constructive on the Indian market. Obviously, the valuations are higher than many other EMs, but generally speaking, stronger fundamentals, at least long-term, to go with those higher valuations. India is also, at least at the current time, less in the crosshairs of some of these potential tariff announcements. There's lower overall export risk to the U.S.
Welcome back. 90 points down on the Sensex, but there are a lot of result reactions that you are watching out for. MRF was just one that was flashing on your screens. 3.5% lower now after its results announcements. We are also watching out for results from, of course, the 6 Nifty companies, from SBI, from ITC, from a lot of the other names like Bharti Airtel. So keep an eye out on all of these names. Britannia as well is going to be reporting results. SBI at the lowest point of the day ahead of results. ITC looking to recover from the lows of the day. Bharti Airtel is down 1.5%. So most of these index names, barring Britannia, which is still trading with some bit of green in today's trading session ahead of its results. We keep an eye out on all of these names. We'll take a short break here on Halftime Report, but on the other side, Manisha Gupta joins in with Vandana Hari, the founder and CEO of Vanda Insights. Stay tuned.
The size of the numbers compared to China, compared to Canada, compared to Mexico. And so that keeps India fairly well positioned in this year where there's a lot of headlines that investors can wake up to and find various disruptions on their positions. It doesn't mean that there's no headline risk, but overall, I think it's rather well positioned and still has all the structural uptrends.
I think the underlying innate technology is just right on the threshold, and we'll get there with the next models. But now people have got to go off and build all these services. So someone in this room hopefully will figure out what the AI tutor of the future looks like, and that'll be a population scale thing, and it'll think what that would do if every kid on Earth, this year got an AI tutor that was provided like a better education or helped to provide a better education than anybody could get last year. Think what it would mean if we could have like an AI medical diagnosis system that was better than anyone could get last year. Think what it could mean if scientists could go cure every disease faster. And so, we've been waiting for this moment for a long time. I think we're gonna deliver something that can help with it, and now people have to go build with it. Other side of it, the cost for a given unit of intelligence 1 year later seems to fall by about 10x. Moore's law was a 2x every 18 months for the number of transistors on a chip, and that changed the world if you waited a few decades. But what's happening with the reduction in cost in AI models is extraordinary. Now, I don't think it means that the world's going to need any less AI hardware, because you bring the cost down and just the people are going to use it for a lot more things. The total number of dollars will go up. But that's a really exciting thing happening.
Welcome back, and joining us on the show now is Vandana Hari. She is founder and CEO at Vanda Insights. Vandana, hi, good to have you. And what a big choppy moves that we've seen in crude oil prices since the beginning of 2025. The latest cues clearly coming in from US and China tariffs, one, and the other is the way we've seen the US inventories gain quite strongly by 8 million barrels a day in the previous week. How are you reading both these cues?
Good afternoon, Manisha. So indeed, quite a turbulent start to 2025. And something tells me that this is not an aberration, but probably par for the course. If you look at all the news headlines that have left market participants spinning, coming mainly out of the US, we have simultaneously big news on big moves from the Trump administration on tariffs, on sanctions. At the same time, indications on what he may or may not be doing with regards to the two major wars ongoing, in Gaza and Ukraine. So basically, the market has been bombarded with a lot of signals. Unfortunately, a lot of noise as well, which we've seen from, something gets, like, for instance, the tariffs in Canada and Mexico got reversed within 48 hours of being announced. So the market, this has become now a big challenge for the corporate world, for, political leaders around the world, on basically how to read Trump, how to assess what he's saying and what he's doing, and let alone what to expect in terms of what he'll do next. So no wonder you're seeing crude oil prices being whiplashed, a fair deal. It's hard to say. There might be a little bit more downside now. They have calmed down quite a bit compared with the 14-month highs that we saw in Jan. But, it might be only until the next bombshell gets dropped on the market.
Okay. Vandana, also, how are you reading on to the sanctions on Russia? And in the meanwhile, India and China, the more important Asian countries, now going towards Saudi Arabia, which also has increased its prices for the month of March for its Asian consumers.
Yeah, so the sanctions on Russia, and that's really interesting because we saw Brent jump past $82 in the days following the announcement of the sanctions on the 10th of Jan. But that has that sort of premium, the fear in the market with regard to potential disruption to Russian supply has cooled down quite a bit. Quite interestingly, we see as overall crude prices have come down, the Urals benchmark grade of Russia has also come very close to $60 a barrel, which is, where the cap that the West has set for Russia to sell its crude, which makes it slightly easier as well for Russia to find ships and insurance providers outside the shadow fleet and outside the sanctioned areas. So it's becoming easier. So the disruption in Russian crude supply has not been as bad as had been expected by the market. So, but again, it remains to be seen how Trump proceeds. There is news now that there are back channel negotiations already happening between the U.S. officials and Russian officials. So let's see what turn this takes in terms of the Ukraine war being resolved.
Okay.
All right, Vandana, thank you so much for sparing time and joining us today. Manisha, thank you for joining in as well. By the way, numbers of Trent on your screen, 496 crore rupee profit, marginally below the expectations of 519 crores. The revenue figure absolutely in line with expectations at 4656 crores. So it's almost a 34 to 35% growth as the CNBC-TV18 poll was anticipating. The net profit, though, marginally lower than expectations for Trent. We'll get you more details on the EBITDA and the margin front as well. But for now, the numbers that we are getting on the revenue and the profit front, they seem to be slightly in line or just lower than expectations. By the way, also there was the stock had run up quite a bit and now it has corrected almost 30% from the highs. Has Trent, there was also concerns regarding the relaunch of Shane by Reliance Retail. That weighed on the stock price earlier in the week, and yesterday Goldman Sachs came out with a note saying that an online-only business model might not be very viable in a country like India, and it maintained its bullish recommendations on Trent, and it had a buy rating price target of over 8,000 rupees. And there you can see the stock slightly recovering from the lows that it fell to. And Mangalam is joining in now with more details on that. Well, how do numbers with prima facie look? Pretty much in line.
Well, numbers are prima facie in line, but they're not, great numbers. Why do I say that? Because last time the company had reported a revenue growth of 39% and the street was working with a revenue growth of 45%. This time around, the street had moderated its expectations. So the street was working with a number of around 35%. The company has gone ahead and reported revenue growth of almost 34 odd percent. So this time it's met expectations, but those expectations were moderated itself after the 35% correction that we've seen in the stock so far. So if you look at the revenue at 4656 crores, largely in line with street expectations of 4680 crores, but the street expectations themselves were muted. EBITDA absolutely in line, 842 crores. The street was working with 840 crores. Margins have come in at around 18.1%. Yes, but largely in line with street expectations. But then again, margins were expected to moderate because revenue growth has been led by Zudio itself. What has the stock done? The stock from the last quarter to now has corrected about 31-32%, still trading at 81 times. And between the last quarter and now, there have been increased competitive pressures as well. Reliance has launched U-Star. You have Intune coming in from, a Shopper Stop. You have Aditya Birla Fashion as well as others coming out of their own fashion lines. And then there is a lot of competition coming in from the value fashion retailers, value apparels like Vishal Megamart, V2 Retail, etc. as well. So Trent, good growth coming in. If you look at it, from an industry standpoint, around 33-34% is much higher than others. But then the stock is priced for that. And secondly, the expectations as against its previous historical revenues have been moderated, and the company's reported in-line performance out there. Prakash Diwan joins in now with his first take on the numbers. Prakash, a little over 30% in terms of revenue growth, EBITDA margins at around 18%, net profit growth of 34% versus street expectations of 40%. The stock having corrected, now absolutely flat. What are your thoughts on Trent?
So, I think one clearly, all the correction that had to happen has happened. Fortunately for the stock, it went into earnings with very, very muted expectations. The key question now is, and to be honest, I will not be very disturbed with a little bit of that, profit number being off the expectation or the poll, as you said. But 18% margin in this competitive environment is pretty decent. How do they hold on to this 18% zone? Is going to be the key question. You remember, Shein is also making a comeback. Jio is bringing them in, and that's a segment that's kind of getting overcrowded. It has already got crowded. So we'll have to wait for what levers come to their rescue going forward. But yeah, the stock has moderated in terms of valuations. Question is are the valuations comfortable for these set of numbers? Maybe not yet. You'll have to give it a time correction. So I don't expect much of a price correction, but it will probably consolidate till the earnings start giving you some visibility in terms of growth. Particularly the product mix for Trent is going to be important. Zudio is one part, but I'm talking about the other components that also make up for Trent.
Take that point. And just a final word on Trent and valuations itself. When Trent was trading upwards of 110 times, 120 times, the company was reporting EPS growth of 55 to 60% as well, making the PE divided by growth, so the PEG ratio, to about 2. Now the earnings growth have moderated to around 34 times, the company trading at 81 times. So the PEG ratio is more important to watch for Trent as against just the price to earnings ratio. So as the PE multiple comes down, even the revenue growth has come down, keeping the PEG ratio intact at around 2. With that, we'll wrap up on this edition of Halftime Report. You stay tuned. Business Lunch comes up ahead, and some more analysis on numbers, and perhaps waiting for the State Bank of India numbers as well. Stay with us.
We've had a lot of evidence so far that Trump's tariffs are looking transactional rather than actual tariffs. In other words, we've seen tariff announcements for Colombia, for Mexico and Canada, all either reversed or delayed. And the only country where we really do have increased tariffs with retaliation, of course, is in China. And so I think that's generating a huge amount of uncertainty. I mean, investors do not like uncertainty. Companies don't like uncertainty. It's very hard to say where we go from here. I do not assume that we've seen the end of any possibility of tariffs on countries like Mexico and Canada. But my word, the speed of events is very confusing, and investors, I think, are therefore very nervous about it. And it's interesting, the US is underperforming the developed markets this year. As you've noted recently, the dollar's lower. So this is all, I think, creating a lot of uncertainty, which I think will have an impact on investor behavior.
कुछ लोगों को अब जब एआई की बात होती है, कुछ लोगों को अब ये शब्द फैशन में है तो बोला जाता है, लेकिन मेरे लिए सिंगल एआई नहीं है, डबल एआई। भारत की डबल ताकत है। एक एआई आर्टिफिशियल इंटेलिजेंस, दूसरा एआई एस्पिरेशनल इंडिया। हमने स्कूलों में 10,000 टिंकरिंग लैब्स शुरू किए और आज उन टिंकरिंग लैब से निकले बच्चे रोबोटिक्स बना करके लोगों को चकित कर रहे हैं। और इस बजट में 50,000 नए टिंकरिंग लैब्स उसका प्रावधान किया गया। भारत वो देश है जिसके इंडिया एआई मिशन को लेकर के पूरी दुनिया बहुत आशावादी है और विश्व के एआई प्लेटफॉर्म में भारत की मौजूदगी एक महत्वपूर्ण स्थान प्राप्त कर चुकी है।
This was the third consecutive year that the BMC budget was presented to an administrator and not to a standing committee. Why? Because the term of the corporators ended in March 2022 and the elections for the new term and the new corporators are yet to be held. Now this 74,427 crore rupees budget, out of this an allocation of 43,162 crore was made for capital expenditure, 5,100 crore rupees for road.
Stock slip ahead of FNO expiry today and the keenly tracked RBI monetary policy decision tomorrow. Consumer durables and realty are the big drags, while IT manages to a green tick. Swiggy's losses mount on higher investment in the quick commerce business, but the digital platform maintains its guidance to achieve EBITDA break-even in food delivery and contribution positive in quick commerce by the third quarter of FY26. Hexaware is set to relist on the bourses after 5 years via an IPO that will see owner Carlyle divest 26% stake for 8,750 crore rupees. It will be the largest IT service IPO in the country, valuing Hexaware at over 43,000 crore rupees. Gold scales to a new high of $2,880 per ounce, taking the returns from the yellow metal in 2025 way beyond those from the other asset classes like equities. Experts see $3,000 per ounce on the horizon. Hello, good afternoon. You've tuned into CNBC-TV18. You're watching Business Lunch with me, Vinny Motiwala. I'm coming in live from CNBC-TV18 Motilal Oswal Studios. Thank you so much for tuning in. A quick look at the market today. You know, we're seeing that fall coming in for the market. Just a slight bit, it opened up in the green, and then we saw that decline coming in for the market. As of now, the Nifty is trading near the day's lowest point, approximately 23,587 is what the Nifty is trading at, down 110 points in today's trading session. Sensex 2 is trading with similar cuts of almost 0.5% in trade. What we're seeing in terms of Nifty movers today, where we're seeing a bit of a move coming in, and positive sign is from the pharma side. So Cipla, Dr. Reddy's among the Nifty 50 names that are managing to hold on to gains. BPCL also managing to sustain to gains that we saw, as well as life insurance names. So HDFC Life, SBI Life managing to hold on to good gains in today's trading session. So yes, keep an eye out on those life insurance names. Mid and small cap. Let's pull up the Nifty mid and small cap, because both of the broader markets is actually seeing a sharp fall coming in and underperformance coming in versus the benchmark indices. Nifty mid cap down more than 1%. Small cap is down almost 0.5% in trade as well. Among the Nifty mid cap losers, Solar Industries pulled that up. Con call highlights were weak, so that is some bit of a pressure there. MRF on the back of its earnings. Page Industries came out with its numbers yesterday during market hours. We had the con call coming in post market hours, and because of that, weakness in demand is something that is a concern for Page Industries. So Page Industries in the mid-cap is seeing a bit of a fall coming in. But let's move on, and the food delivery giant Swiggy is down over 5% in trade. Now, the company posted a weak set of Q3 earnings, with the net loss widening to 800 crore rupees and for the December quarter. The management tells that the strong growth in food delivery was offset by losses in the new quick commerce business. Earlier, we spoke to Rahul Bothra, who's the CFO of Swiggy. He also spoke about the growth of quick commerce business and the company's growth outlook. Listen in.
In the first month of launch, it had gained to close to 5%. We are now currently at close to 9% of the overall food delivery volumes, which is pretty, good considering that it's just 1 quarter of launch. Our, growth in quick commerce also accelerated. So from 6% to 88% on a YOY basis in the December quarter. One of the things that happened during the quarter was, if you see, our overall guidance for H2 was to double our square footage in the quick commerce business. So from 2 million square feet to 4 million square feet. Now, this has meant that there has been a certain pace of store additions. In quarter 3, we've added 96 stores. Just in the month of January itself, we've added 86 further stores. So some of the expansion activity was slightly back-ended, which has now caught up. Overall portfolio margins are, is what we are guiding that by, quarter 3 of FY26, we will be able to break even at the portfolio level, because a lot of these store additions that are currently happening will hit that maturity or at least the break-even stage at that point in time. Mature stores are already hitting 4 to 5% if you normalize for the breaking of the stores that I just mentioned.
And from earnings reported and to earnings, moving on to the earnings that are expected in today's trading session, we have SBI that will be reporting its numbers a short while from now. Abhishek is joining in with us to give us those key expectations.
Well, we need to begin with, business momentum will be the key focus. Momentum this time around, deposit growth will be lower than the system. Advances growth expected to remain on the healthier side. Kotak Securities estimates advances growth of about 13% YOY and 3% sequentially. Net interest margin can decline YOY but improve on a sequential basis. So Kotak Securities estimates a net interest margin decline of 1 basis point YOY and about 3 basis point improvement on a sequential basis. Now, OPEX will be on the lower side, which can aid the operating profits. However, operating profits will also get impacted from the treasury income. Treasury income last quarter was more than 4,000 crore, which is on the healthier side and may not get repeated this time around. So slippages can rise quarter on quarter. Kotak Securities again estimating slippage ratio of 1.5% versus 0.5% in the previous quarter. However, asset quality is expected to improve. Recoveries and upgradation will be on the lower side, so write-offs can aid asset quality. Motilal Oswal is estimating gross NPA ratio of 2.04% versus 2.13% in the previous quarter, and net NPA ratio also expected by Motilal Oswal to decline by 3 basis points sequentially. Watch out for management commentary with respect to the trajectory of business growth going ahead, along with net interest margin and return ratios, which will be seen closely. Our polls suggest NII growth of 7% YOY and about 2.3% sequentially. We are working with a profit growth of nearly 76% YOY and a decline of more than 12% sequentially. Back to you.
Thank you so much for that, Abhishek. But on that note, we're going to slip into a very short break. And as we slip into break, it's time for Growth Code, an initiative by Grow and CNBC-TV18 designed to provide you with valuable trading strategies. This week, CNBC-TV18's Nigel D'Souza sat down with pro trader Saurabh Sisodia, co-founder of Quantify Capital, to understand how social media is fueling the speculative trading. Listen in.
Sort of another important point is how has social media contributed to this speculative trading, especially among the retail investors?
So I think social media has a very big influence. In fact, I was reading an article that due to social media, speculative trading has increased a lot in last 5 to 10 years. And so if you see what happened with GameStop. So GameStop was a stock in the US. It was a company into gaming. There was an article on Reddit that, so retailers bet against the hedge funds, and due to this speculative trading, the stock risen almost 400-500% in a short span of time, and the hedge funds actually lost money due to this. So this is the power of social media. But what traders have to do is not to believe anything that is there on the social media. Do their own due diligence, because with social media you get so many insights. Some influencers saying this, other influencers saying this. So I think as a trader, what you have to do is just try to gain as much information content you can on social media, but not try to do any investment or trading advice based on social media.
Okay, all right. Saurav, how can traders distinguish between genuine insights and say hype-driven recommendations on social media?
Okay, so what they have to do is, if any influencer is talking about a stock directly, because SEBI guideline says that if you're not registered, you can't talk about stock. So if an influencer is trying to pitch you a stock that, okay, this stock is looking good, telling you to buy, I think that is something you should stay away. And one thing to do is at least see the volumes, like what are the daily average volumes of that stock. If the stock has like at least a market cap of less than 1,000 crores, then definitely you have to stay out, because these are generally pump and dump. And what a trader can do is basically follow people who are giving genuine insights, basically teaching you how to make money, how to improve your investment process, rather than giving you tips.
₹5,807 crore for Mumbai Coastal Road project, 3,039 crore rupees for Stormwater Drain Department, and 650 crore rupees for Sewage Operation Department. For key public services, over 4,000 crores were allotted to Education Department, over 7,000 crore for Health Department, 261 crore rupees for Fire Department, 309 crore rupees for Disaster Management, and 220 crore rupees for the Garden Department. BMC announced that it's going to start 250 new public clinics, also known as Apla Dawakhana, all over the city. One interesting initiative announced by the BMC was the introduction of cyber awareness program for students. It will serve two key purposes. One will be to ensure that the students learn how to use the internet in a safe manner and to keep them safe from cyber fraud. BMC also focused on environment initiatives and projects like promoting eco-friendly cremation and proper disposal of residue from idle immersion. These are the projects which will take place under environmental related initiatives in the next few months. We also spoke to Bhushan Gagrani, the BMC commissioner himself. This was the first time that he presented the BMC budget. Listen to what he has to say about this BMC budget. So your budget also mentioned that you guys are planning on imposing a tax on the commercial properties in slum areas.
That's right.
If you can elaborate that. So from when this new tax will be levied?
It is actually not a new tax. In fact, we are enhancing our assessment net. Under the assessment net, the properties which are in the slum, however, which are being used for the purpose of commercial, they were not covered. So this is for the first time we are doing the survey and bringing them in the tax net. Not necessarily that we will be imposing huge tax. It's a normal tax. It's not a very huge tax. However, the coverage will be given to our commercial properties.
So BMC has not introduced any new project this time. In fact, you have focused. Correct.
Yeah.
But sir, does it mean that is there any cause for fiscal concern, sir?
No, there is no fiscal constraint. We have enough adequate cash flow as well as resources.
हमारे देश में एक प्रधानमंत्री हुआ करते थे, उनको मिस्टर क्लीन करने कहने की एक फैशन हो गई थी। उस प्रधानमंत्री जी को मिस्टर क्लीन कहने की फैशन हो गई थी। उन्होंने एक समस्या को पहचाना था और उन्होंने कहा था कि दिल्ली से 1 रुपया निकलता है तो गांव में 15 पैसा पहुंचता है। अब उस समय तो पंचायत से लेकर पार्लियामेंट तक एक ही पार्टी का राज था। पंचायत से पार्लियामेंट तक एक ही पार्टी का राज था और उस समय उन्होंने सार्वजनिक रूप से कहा था कि 1 रुपया निकलता है 15 पैसा पहुंचता है। बहुत गजब की हाथ सफाई थी।
We take the budget very seriously on CNBC TV18, and why? Because it matters to you, our viewers. So it's long days, longer nights, poring over fine print, looking at historical data, fixing the most influential opinion makers so that you, our viewers, can get the most incisive analysis in real time. We are India's budget headquarters for that reason, because we stay true to our commitment and our promise of delivering the budget in real time, but in a way that makes sense to everyone every year on CNBC TV18.
One more MSME also in the same graphic.
Budget is the D-Day for us.
Number one on TV,
Number one on social.
and number one on web. There's excitement, there's frenzy, brilliant graphics.
So we've been prepping for this for months.
We're all set to deliver.
Very exciting. D-Day, and we're finally here, and you can see my desk. There's food, there's water, there's coffee, there's badam.
The lineup toll free.
Can you hear me? I am expecting lower taxes. Now, budget is a very special day actually for everybody, but it's more special for me because it's my birthday.
Super pumped. Our newsroom is buzzing. The office, as you can see, buzzing with expectation.
It's a very important day for us and the entire country.
There is still hope, right? I mean, that the government will do something.
Stand by. 3, 2, 1, cue.
My dear friend Pyle has come on the floor to understand from us what the reporting team of CNBC TV18 is expecting from the
Ritika, you should have ordered some dahi chini.
You know, as you've all heard in Spider-Man, with great power comes great responsibility. FMS come.
Finance Minister rising in Parliament to present Budget 2025. This is going to be her 8th budget, 8th consecutive budget.
This budget continues our government's efforts to C. Invigorate private sector investments. D. Uplift household sentiments. And E. Enhance spending power of India's rising middle class.
This is my 16th 20 years.
My 14th budget with CNBC TV18.
Birla Corp has delivered, and so has CNBC TV18. Where else to catch all the action? We are CNBC TV18, your budget headquarters. CNBC TV18! Seize the moment!
CNBC TV18's dominance continues. The leader in business news knocks out competition during budget week. CNBC TV18 dominates with 92.7% viewership in megacities in budget week. A big thank you to our viewers for prepping for the budget 2025 with CNBC TV18. Thank you so much for that.
पंद्रह पैसा किसके पास जाता था, ये देश का सामान्य मानवी भी आसानी से समझ सकता है। आदरणीय सभापति जी, देश ने हमें अवसर दिया, हमने समाधान खोजने का प्रयास किया। हमारा मॉडल है बचत भी विकास भी। जनता का पैसा जनता के लिए। आदरणीय सभापति जी, आजकल मीडिया में ज्यादा ही चर्चा हो रही है सोशल मीडिया में और अधिक हो रही है। कुछ नेताओं का फोकस घरों में जकूजी पर, स्टाइलिश शावर्स पर, लेकिन हमारा फोकस तो हर घर जल पहुंचाने पर है। आदरणीय सभापति जी, हमने ये जो अलग अलग कदम उठाए उससे लाखों करोड़ रुपए की बचत हुई, लेकिन उन पैसों का उपयोग हमने शीश महल बनाने के लिए नहीं किया। इसका उपयोग हमने देश बनाने के लिए किया है।
Welcome back and thanks for staying tuned into Business Lunch on CNBC-TV18. Let's move on and following US President Donald Trump's comments on taking over war-ravaged Gaza and redeveloping it, Israel Prime Minister Benjamin Netanyahu hailed the plan, calling it the first good idea he had heard in a while. So let's listen into what he had to say.
The actual idea of allowing first Gazans who want to leave. I mean, what's wrong with that? They can leave, they can then come back, they can relocate and come back, but you have to rebuild Gaza. If you want to rebuild Gaza, you can't have, this is the first good idea that I've heard. It's a remarkable idea. And I think it should be really pursued, examined, pursued, and done, because I think it will create a different future for everyone.
However, Trump's rebuilding Gaza plan has drawn sharp criticism from other Arab countries. Saudi Arabia released a statement just hours after his comments saying no normalization within Israel would happen without the creation of a Palestinian state. Meanwhile, UAE also issued a statement rejecting the proposal of displacing the Palestinians to rebuild Gaza. And moving on, the deportation of over 200 Indian illegal immigrants has caused a major uproar in the parliament, with the opposition slamming the government over the alleged mistreatment of Indian citizens by the United States. Both houses of the parliament have been adjourned, while Foreign Minister S. Jaishankar is expected to address the parliament at 2 p.m. And with that, we are absolutely out of time on this edition of Business Lunch on CNBC-TV18. Thank you so much for tuning in. Up next, your Midcap Radar.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
For the first time in nearly 5 years, the Reserve Bank of India could kick off a rate-cutting cycle, making Governor Sanjay Malhotra's debut policy meet.
You're with us here on Midcap Radar on CNBC-TV18. I'm Hormas Fatakia. With me is Mangalam Malu. We are counting down to numbers of State Bank of India, which will be reported any time now. And there are plenty of earnings reactions that are kicking in, be it MRF, NMDC, Unichem Laboratories, a slew of results that have been reported over the last half an hour. But the big number, of course, is SBI, Mangalam.
The big number is SBI, and that has, the potential to take the Nifty Bank with it as well, largely because we've seen some weakness in the stock already ahead of numbers. Can, a lot of that be priced in already or not? And then we have the RBI policy tomorrow ahead of all of that. And between that, we have the Nifty weekly options expiry playing out. So perfect day to take a look at the market itself. The mid-cap index at the start of mid-cap radar lower by almost 1%. Stocks slip ahead of the F&O expiry today. Keenly tracked RBI monetary policy decision tomorrow. Mid-caps underperform. The consumer durables, realty are the big drags, while pharma manages this a mild green tick.
Swiggy's losses mount on higher investments in the quick commerce business, but the digital platform maintains its guidance to achieve EBITDA break-even even in the food delivery, and we contribute positive in the quick commerce space by the third quarter of FY26.
Sula trades in red after the company posts a weak third quarter marked by decline in profit. Management tells CNBC-TV18 they will see margin improvement starting from the fourth quarter itself.
Page Industries continues to slide for the second day running and down nearly 4% on the back of management commentary following its third quarter results. Morgan Stanley reiterates that the management's comments on subdued demand for the fourth quarter as well.
Paints maker Kansai Nerolac tells CNBC-TV18 that they have seen 1 to 2% volume growth in the third quarter, and they are expecting to maintain their EBITDA margins around 13%. The stock does well despite muted performance on hopes of better performance going ahead.
100 points down on the index, now below the 23,600 mark as we are counting down to results of SBI. There are a lot of other nifty results that are supposed to be reported. Trent just came out with numbers a few minutes ago, but as Mangalam was mentioning, the mid-cap index is down 1% as on today's trading session as well. So what are some of those big movers within the broader markets? Vamakshi is here to take us through that. Vamakshi, good afternoon.
Well, good afternoon, Hormaz. Yes, the mid-cap index continues to be under pressure today, and some of the top losers contributed to that decline will come up for you now. Hindustan Zinc is one of the top contributors, down nearly 4.6%. KEC International too, trading close to the day's lowest point, down nearly 3.7%. Newgen Software is another counter that is declining nearly 4% in trade. Craftsman Auto also down and out in trade today. Apart from that, the capital market theme yesterday was gaining momentum in trade, but today the stocks have corrected anywhere between 2 to 4%. Nippon Life India, Motilal Oswal, 361 WAM, Nuvama Wealth are some of the counters that are seeing significant pressure in trading session today. Lots of earnings reaction as well. When we look at the stocks that are up in trade, that includes VRL Logistics. That stock is higher by almost 15% in an overall weak market. In fact, this is the biggest intraday gain since September 2021. Kansai Nerolac is another counter that is up nearly 3%, posts its numbers, biggest intraday jump since July 2024. On the other hand, we have stocks like Solar Industries and CCL Products that are down and out in trade today. On the flip side, in such a weak market, we have some stocks that are gaining momentum. That includes Redington. That stock is up nearly 5.5%. KRN Construction, Castrol India trading near the day's highest point, up nearly 5%. And Redington is another counter that is up and away in trade.
All right, take that point. Thank you, Vamakshi, for that. We have a couple of other names as well adding to that list, just selling off right now. Jubilant FoodWorks, Avenue Supermarts, both of them at the low point of trade. Remember, these were the stocks that saw big traction post the budget, the income tax cut announcement that came by. But then after the Saturday, Monday to now, Jubilant FoodWorks is actually down about 5% from the budget day close. Avenue Supermarts itself is down about 7% in this week itself. And notwithstanding the sort of weakness that we're seeing in other names like Page Industries, etc. So consumer discretionary names actually not doing particularly well. Nagraj Shetty of HDFC Securities joins in for a quick technical check on the market. Nagraj, seems like the 50-day moving average is being a bit of a resistance for both the Nifty as well as the Nifty Bank. What are your thoughts? Is this consolidation ahead of big events, or do you think it is resistance at high levels and maybe we've tested the higher end of the range, now it's time to go down?
I'm not expecting a bigger decline from here onwards, because the market has been showing consolidation over the last couple of sessions. And if you deep dive into Nifty, Nifty has been in a significant uptrend. It has risen around 1,000 points from the lower levels, from 22,800 to 23,800 levels, and currently facing a stiff resistance of downsloping trend line somewhere around 23,800 levels. So at the lower levels, 23,500, 23,400 is going to be a strong support for the market, for the Nifty, and I'm expecting upside bounce by forming a higher bottom formations. And if you look at the Bank Nifty chart, Bank Nifty has been in a consistent uptrend over the last couple of weeks. In today's session, though, Nifty has declined by around 100 points, but Bank Nifty has been sustaining the higher levels. I'm expecting it is currently trading around about 200 DMA. I'm expecting this upside momentum to continue. It may be there may be a consolidation of 1 or 2 sessions, and eventually we could see upside momentum to continue in this Bank Nifty and could reach up to 51,000 levels in the near term.
What about specific stocks, Nagraj?
Yeah, I have 2 stocks from the mid and mid-cap segment. The first is the graphite. If you look at chartically, graphite has been a consistent downtrend over the last few weeks, and recently at 460 levels made us a double bottom kind of a pattern, slightly lower bottom we can say, and bounce back from the lows. Currently the overall chart pattern is looking positive. Bullish candlestick formation is there, and right now trading around 507, 508 levels. One can look to buy at this point of time. Upside target would be around 525, 530, and one can place a stop loss around 490 to 93 levels. And another one is the Hindustan Oil Corporation. Hindustan Oil Exploration. Hind Oil Exploration was in a larger consolidation mode over the last many months, and facing stiff resistance around 200-day EMA, somewhere around 203, 204 levels. It has broken above that hurdle, currently trading higher. The overall trend seems to have changed from the range bound to the bullish. I'm expecting more upside to come from this year onwards. Currently trading around 211 to 211.50. and I'm expecting upside immediate upside target of around 224, and one can place a stop loss at 205.
Raj, thank you so much for sparing time joining us today with your views on the index and specific stocks as well. I'll take a short break, but before that, it's time for Growth Code, an initiative by Grow and CNBC-TV18 designed to provide you with valuable trading strategies. This week, CNBC-TV18's Nigel D'Souza sat down with pro trader Saurabh Sisodia, the co-founder of Quantify Capital, to understand the impact of SEBI's new regulations on speculative trading.
How do SEBI's new regulations aim to control speculative trading, and what impact do you foresee?
So SEBI did two major things recently. First is they increased the lot size of many derivative contracts. For example, Nifty from 25 has been increased to 75. So what this does is that to trade any derivative instrument, you need to bring more margin. So this basically discourages retail traders to speculate. First is that. And second is what SEBI is trying to do is they is trying to maintain that because earlier when every day there were expiries happening, right? We had Nifty, Nifty Sensex, right? And due to this, what was happening is a lot of speculation was going on. In fact, we were the most traded options market globally. A lot of speculation was going on. There were a lot of spikes which were created every day. So what SEBI did is they made a mandate that every exchange can have only one weekly expiry. So by these two measures, what is going to happen is the speculation will reduce, and what I foresee is going forward, the market will be more stable in terms of options, that we will see lesser spikes, the stability will be there, and retailers, which like SEBI's focus on the retailers are losing a lot of money, they'll be at least discouraged to stay out of the market.
Okay, all right, sir. An interesting point you make out there. Also, another question, how can traders ensure that they stay within SEBI's prescribed margins as well as rules?
So first thing is being updated about what SEBI is doing, right? So SEBI recently put the circular that, okay, like we are going to increase margin. So a trader has to be aware, okay, what all changes will happen in his strategies. The returns will definitely decrease because the margins are going to increase. So this trader has to stay updated what is going to happen. Then he has to basically change his strategies according to these new guidelines.
Most closely watched in recent history. Now, RBI has been injecting massive liquidity into the banking system in recent days, which some interpret as a precursor to a rate cut, despite the relatively high inflation. So the CNBC-TV18 monetary policy poll shows 70% of market participants and economists are betting on a 25 basis point rate cut this time, driven by the need to support growth. But ignoring the rupee's depreciation can prove tricky, which is why 30% of the respondents still voted for a dovish hold. Now, liquidity remains tight in the system, but a cash reserve ratio cut at this point seems unlikely. But 60% of the respondents do expect additional liquidity easing measures like more OMOs, longer duration repos, or a cut in the incremental CRR for NRI deposits. Of course, markets will also watch closely for any clarity on the new LCR norms, which are set to kick in from the 1st of April. Now, external factors are going to add a lot of complexity to this policy. RBI is likely to acknowledge the risk from the tariff threats and stay nimble, but a small section of the market believes that inflationary tariffs and a weakening rupee could be used as an argument to push out rate cuts. But the broader consensus is RBI will allow a gradual rupee adjustment while ensuring stability. Now, markets are already pricing in steeper rate cuts beyond February, with most expecting anywhere between 75 to 100 basis points cut in this cycle to give a helping hand to growth. Now, despite these expectations of rate cuts, the monetary policy stance is likely to be left unchanged at neutral. But as for the tone, 40% do anticipate a dovish tilt, while the majority expect it to be neutral. Now, growth expectations are softening. 90% of our respondents predict that RBI will lower its FY25 GDP forecast to 6.4 to 6.5%. That could further strengthen the case for easing. But the inflation forecast is unlikely to be tinkered with in this policy. So all eyes are going to be on Governor Malhotra's debut policy move. Will he pull the trigger on a rate cut or stay cautious amid global risks? The stakes are high and the markets are going to be watching.
I'm still generally pretty constructive on the Indian market. Obviously, the valuations are higher than many other EMs, but generally speaking, stronger fundamentals, at least long term, to go with those higher valuations. India is also, at least at the current time, less in the crosshairs of some of these potential tariff announcements. There's lower overall export risk to the US in terms of the size of the numbers compared to China, compared to Canada, compared to Mexico. And so that keeps India fairly well positioned in this year where there's a lot of headlines that investors can wake up to and find various disruptions on their positions. It doesn't mean that there's no headline risk, but overall, I think it's rather well positioned and still has all the structural uptrends.
I think the underlying innate technology is just right on the threshold, and we'll get there with the next models. But now people have got to go off and build all these services. So someone in this room hopefully will figure out what the AI tutor of the future looks like, and that'll be a population skill.
Stocks at lows of today, we have TCS, Titan, BEL, Hero MotoCorp, JSW Steel. So the top 5 stocks at the low point of trade, all of them belonging to different sectors. That tells you about the market, but not too much lower below the 23,600 mark for the Nifty. Those are numbers coming in from Sapphire. You have the revenues growing well, margins largely maintained around that 17.7, 17.8% mark. The net profit has grown at 18%. Important to look at other details such as same-store sales growth for some of their key brands as well, which is basically the Yum restaurants, including the likes of KFC and Pizza Hut. EBITDA growth of 10%. We have a revenue growth of 14%. But the stock on our radar is Fino Payments Bank. Recently shared their third quarter numbers. The total income surged by about 25%. And the company also saw its cost increase. Profit after tax surged too. So to talk about all of this and more, we have with us Rishi Gupta, who's the MD and CEO of Fino Payment Bank. Thank you, Rishi, for joining in. Just a two-part question. The first one is that the number that really stands out this time around the quarter's performance is the CRAR. Over the quarter-on-quarter and year-on-year, there has been a 10 percentage point decline from 76-75% closer to 66-65%. What explains this? That's point number one. And secondly, I remember the last time you joined us, you said that you are exploring the potential of being a small finance bank. What's the update on that?
Good afternoon to you. See, on a company-wide, we have grown at 25% this year. This quarter, if I look at from a YOY basis, 461.3 crores we have done. Our PBT has also grown substantially. The reason for the CRAR ratio coming down, actually for payments bank, it is just a mathematical number because we don't do asset products. So our regulatory requirements are 15%. This could be largely because of the change in the balance sheet mix, because of which the CRR from 75% has gone to 65%, but still we are much above the 15% requirement, so to say. On the second part of the question, which is the SFB part, we applied in December 23. We have started to engage with the regulator on some of the questions which they have coming from their side. You are also aware that recently the RBI announced that they have formed an external committee also who will look at the applications. So we are quite positive that there has been a substantial engagement in the last 3-4 months. And we are hopeful that in the next 3 to 6 months, we should hear from the regulator, depending on the progress with the committee and our internal approval process.
They had some questions. What were those questions?
They're largely around, I think, largely around the promoters, the background, the businesses, the engagements which we have been done, largely around those questions are around that.
So have you responded to the regulator to these questions that they... Okay, yes, so you're expecting them to you're expecting an outcome within the next 3 to 6 months is what you're saying?
So what we are expecting that there has been a series of engagement in the last three months or so. A lot of questions were there, which is part of the process. Recently, RBI also announced a new committee which is there to look at the applications. The committee would probably start work in some time. Basis the fact that we have already applied for more than a year, we are expecting that we should see some outcome in the next 3 to 6 months. But as you know, this is something which is beyond our control. So we will look forward to more engagements with the regulator as the time passes.
And you expect that CRAR to remain at 65%, or you expect to take it back to higher levels?
So actually, as I said, CRR is not a very important number for us because we are at 15% requirement. And the fact that we don't do asset, so really doesn't make too much of a difference. In fact, that's more of a reported number, but our focus is more on our growth, our PBT. If you look at the PBT, we have grown at 25%. Our revenue has also grown by 25%. So in line with our guidance, I think those are numbers which are more critical and important to us. CRR against 15%, we are already at nearly 5 times that number.
What about competition, Rishi? There is a lot now that is emerging in your space. What are the steps that you are taking to stand out amidst this crowd?
So, as you know, Fino has been in this business for the last 18 years and as a bank for more than 7 years plus. We have also transformed our model in the last 5 to 7 years. We were largely a transaction-focused bank till about 3-4 years back. We moved to acquisition, so to say. So ownership became the new driver for us. And now we are looking at monetization. Obviously, the SFB will help us to monetize it further. But on the acquisition side, now CASA revenue is including the treasury income, constitutes about 1/3 of our total income for the bank. So that's a substantial portion, and we are adding nearly 8.5 lakh customers every quarter basis. There's a 24%. If I look at the deposit itself, has grown by 11% on a quarter-on-quarter basis. Our customer balances have also grown up 11% as such. So that part, I think, is going exceedingly well. We are facing competition in one of our other lines, which is cash management services. There, the volumes have dropped a bit, the take rates have dropped a bit, largely because of the competition and also because of the fact that the NBFC and the MFI businesses also slowed down in the last 3 to 6 months. So that is the area where we are facing competition and transaction. Our digital business, which we started about 2 years back, now constitutes 24%, while the net profit margin is relatively lower than 31-32%, which we claim, but the tail cost is much lower compared to the other physical lines of our businesses. So that gives us substantial income on the bottom line. So from a digital point of view and CASA, we are doing pretty well.
3 questions before we let you go. Just give us 3 numbers. One, what pace will your account addition continue at? Secondly, what rate will your spends continue at? And thirdly, what kind of margins can we expect by the end of FY25 and FY26?
So in terms of the account opening, we are at about 8 to 8.5 lakh accounts per quarter. We expect to maintain that run rate in the next forthcoming quarters as well. The second question in terms of the margin, so to say, we are about 31 to 33%. So we'll be in that range, and we've been consistently in that range for the last 1 year or so. And third is in terms of cost to income ratio, we are at 25 to 26%. We expect that the cost percentage will be around the same. The big change is that we have moved from transaction to ownership and ownership also to digital now. So that is the big change for us, and I think that is giving us substantial income. Will also help us reduce our costs in the years to come. But right now, we will remain in that 25 to 26% range.
And do you have an aspirational target for how much do you expect digital to contribute? Right now, it's 24%, like you said, from virtually nil earlier. Where does it go from here on?
So our target is that at the same rate at which we have been able to grow our CASA, which is nearly 1/3 of our income, our digital income should also constitute 1/3, maybe by 26, 27 or end of 25, 26.
All right, Rishi, thank you so much for sparing time, joining us. Wish you good luck for the rest of the year as well. The management there of Fino Payments Bank. Take a short break. More on the markets on the other side. Stay tuned.
That would do if every kid on earth, this year got an AI tutor that was provided like a better education or helped to provide a better education than anybody could get last year. Think what it would mean if we could have like an AI medical diagnosis system that was better than anyone could get last year. Think what it could mean if scientists could go cure every disease faster. And so, we've been waiting for this moment for a long time. I think we're going to deliver something that can help with it, and now people have to go build with it. Other side of it, the cost for a given unit of intelligence 1 year later seems to fall by about 10x. Moore's law was a 2x every 18 months for the number of transistors on a chip, and that changed the world if you waited a few decades. But what's happening with the reduction in cost in AI models is extraordinary. Now, I don't think it means that the world's going to need any less AI hardware, because you bring the cost down and just the people are going to use it for a lot more things. The total number of dollars will go up. But you know, that's a really exciting thing happening.
We've had.
Welcome back. In numbers of PVR on your screen, 36 crore net profit compared to 13 crores last year. We'll look to see if there is some other income component on this as well. We'll take a look at the revenue figure. It's 11% higher at 1,717 crore rupees. The stock has recovered from the lows of the day, has moved back into the green actually. It's still some fluctuating moves there. EBITDA is up 12%. We'll take a look at the margin figure as well, and that too has remained largely stable at 31% from around 30.5% last year. Some volatile moves in the stock. The management will be joining us in just a few minutes from now, so stay tuned to hear out the management of PVR Inox. But we take your leave on this edition of Midcap Radar. From Manglam, me and the team that put this show together, thank you so much for watching. We count down to SBI's results. Stay tuned.
Far that Trump's tariffs are looking transactional rather than actual tariffs. In other words, we've seen tariff announcements for Colombia, for Mexico and Canada, all either reversed or delayed. And the only country where we really do have increased tariffs with retaliation, of course, is in China. And so I think that's generating a huge amount of uncertainty. I mean, investors do not like uncertainty. Companies don't like uncertainty. It's very hard to say where we go from here. I do not assume that we've seen the end of any possibility of tariffs on countries like Mexico and Canada. But my word, the speed of events is very confusing, and investors, I think, are therefore very nervous about it. And it's interesting, the US is underperforming the developed markets this year. As you've noted recently, the dollar's lower. So this is all, I think, creating a lot of uncertainty, which I think will have an impact on investor behavior.
कुछ लोगों को अब जब एआई की बात होती है, कुछ लोगों को अब ये शब्द फैशन में है तो बोला जाता है, लेकिन मेरे लिए सिंगल एआई नहीं है, डबल एआई। भारत की डबल ताकत है। एक एआई आर्टिफिशियल इंटेलिजेंस, दूसरा एआई एस्पिरेशनल इंडिया। हमने स्कूलों में 10,000 टिंकरिंग लैब्स शुरू किए और आज उन टिंकरिंग लैब से निकले बच्चे रोबोटिक्स बना करके लोगों को चकित कर रहे हैं। और इस बजट में 50,000 नए टिंकरिंग लैब्स उसका प्रावधान किया गया। भारत वो देश है जिसके इंडिया एआई मिशन को लेकर के पूरी दुनिया बहुत आशावादी है और विश्व के एआई प्लेटफॉर्म में भारत की मौजूदगी एक महत्वपूर्ण स्थान प्राप्त कर चुकी है।
This was the third consecutive year that the BMC budget was presented to an administrator and not to a standing committee. Why? Because the term of the corporators ended in March 2022 and the elections for the new term and the new corporators are yet to be held. Now this 74,427 crore rupees budget, out of this an allocation of 43,162 crore was made for capital expenditure, 5,100 crore rupees for roads and traffic department, 5,807 crore rupees for Mumbai Coastal Road project, 3,039 crore rupees for storm water drain department and 650 crore rupees for sewage operation department. For key public services, rupees over 4,000 crores were allotted to education department, over 7,000 crore for health department, 261 crore rupees for fire department, 309 crore.
Hello, good afternoon. You've tuned into Mutual Fund Corner on CNBC-TV18. I'm Vinny Motiwala in the Mumbai studio. Now, with the market swinging and between the highs and the lows, are hybrid funds the right bet for your portfolio? If so, which type suits you the best? Balanced, dynamic, multi-asset allocation. On this edition of Mutual Fund Show, we will break down how hybrid funds work, their diversification benefits, and the risks that you need to watch out for. And to talk about all of that, we have Harish Krishnan, CIO, as well as Head of Equity at Aditya Birla Sun Life Mutual Fund, joining in with us. Harish, good afternoon. Thank you so much for joining in with us on the show, and thank you so much for removing time. Let's start by talking about hybrid funds, right? It's become very important and a lot of people are now looking at it a bit more, given that we've seen that recent volatility in the markets. How are hybrid funds firstly different from pure equity as well as debt funds? And what are the pros and cons of hybrid funds?
Hybrid funds basically work on the nursery adage that we have all grown up learning, which is don't put all your eggs in one basket. Different asset classes have their own times when they perform, and therefore by mixing them together, one gets a better experience. When some asset class doesn't perform, the other takes up the slack and vice versa. So this is the broad mantra of hybrid funds. Now, the second point is volatility brings in a lot of uncertainty, no doubt about it, but volatility is a great point in time for a prepared mind, and which is where a hybrid fund, and there are multiple different variants of hybrid funds, they can try and prepare themselves for this volatility and make the most of volatility when it presents itself. Because while today, a volatile or an uncertain market may have some bearing, like I said, during such moments is when there is opportunity that comes through, and which is where, I would say a hybrid fund provides you that benefit as well, that one is able to position themselves for sustained wealth creation with a far more stabler experience than necessarily subjecting an investor to the high BP that volatile markets sometimes present themselves with.
Absolutely. So, volatility already provides an opportunity. Just specifically, any other pros that you would highlight in terms of hybrid funds?
So the other benefit, of course, is that, different investors have got sometimes differing needs of risk and return objectives, and also to do it in a very tax efficient manner. Investing specifically in asset class like fixed income has a particular taxation, equities have a particular taxation, commodities have a different kind of taxation, etc. A one-stop solution through which an investor can get a range of these basket of asset classes in a very tax efficient manner is clearly the other benefit of approaching your asset allocation solutions through the vehicle of various hybrid funds.
Okay, surely asset allocation is something that is a key pro or a key positive that comes in for hybrid funds. Harish, given the current market volatility, we have spoken about how volatility is the right time, right, to look at these funds coming in as well. So it's an absolute prudent choice, or are there other options that an investor could look at? And especially if you're looking for stability, then is this the best choice?
See, if one has a view that markets are only going one way upwards or one way downwards, then being entirely either into, say, equities or entirely into fixed income, these are no-brainer choices. But the reality is that markets do go through all kinds of phases. There are phases when markets trend up, there are phases when market trends down, and then there are phases where markets go nowhere, right? And therefore, hybrid funds and the range of hybrid funds essentially become a vehicle which can navigate each of these different market scenarios, rather than necessarily looking at only a scenario which is trending one way, either up or either down. And therefore, I would say that hybrid funds help in an environment, especially when there is you can say a range-bound market, wherein the foundation of some asset classes, like say for example fixed income, which have a reasonably a predictable income stream or a coupon stream that comes through, can come into the benefit of investors during such volatile periods, even as it provides an opportunity to use some of this fixed income instruments to redeem them and to move into equities at an opportune time. And therefore, you get the benefit of buying equities cheaper, even as one has got the reasonable, predictable fixed income coupon streams that can come through. So it does help in providing both of these benefits during sideways markets or during markets when they are extremely volatile.
Okay, Harish, let's simplify this for our viewers as well. Now, there are different types of hybrid funds available for investors. So what are these different kinds of hybrid funds, and what suits an investor the best? Is it anything specific? Some of these funds may only suit certain kind of investors, or how does this work?
So broadly, they can be classified into two broad categories, right? One is on the basis of taxation that an investor eventually falls into, whether they are okay with a fixed income or a debt orientation taxation, or whether they're looking at equity orientation taxation. Secondly is the nature of the risk that they are willing to bear. I mean, investors, while they all want the highest returns, the reality is that markets in the near term, and when I say near term, I would say anything less than 3 years, are reasonably, you can say, unpredictable. They have a mind of their own, and there are time frames where one should be prepared that there can be a negative experience. And therefore, your ability to handle this negative experience determines your risk profile. So broadly, I would classify it into these two elements. So if I were to look at from a positioning, trading. You've got some very, very conservative products. For example, you have the conservative hybrid, which is a debt-oriented tax, hybrid vehicle, which has got very, very low equity allocation. Predominantly, it is a debt allocation. Therefore, the volatility of such a product becomes very, very low. It gives you a reasonable comfort in terms of the broad expected range of returns, and the volatility therefore becomes very, very low. But obviously, the price that you pay is that the expected returns also tend to be on the much lower side. Similar to that, if one wants an equity taxation, you've got a product like the equity savings fund, which is again high on debt and fixed income strategies, but provide you an equity taxation for a similar kind of investor. The next bucket would be something like a balance advantage fund or a dynamic asset allocation fund, wherein typically ranges of equity varies from say 20 or 30% at the lower end to about 80%. And here models are there which at various fund houses, which help the fund manager to navigate the ups and downs of markets. On a ballpark, they would be about 50% in equities on an average over, say, a rolling 5-year basis. These typically tend to provide about 60 to 70 or maybe even higher, 75% of, say, the pure equity returns, but they tend to have a volatility profile which is maybe closer to 50 or 60% of the BP or the volatility that a pure equity kind of gives through. Then you've got the next thread, which is going to be that of the aggressive hybrid, which are typically a category of funds wherein the investor wants a higher allocation to equities, typically between 65 to 80% would be the range of equities that they would have. Therefore, the participation in equities and will be much higher, but obviously it comes with a slightly larger volatility profile because they are exposing themselves to higher equity allocation. And then you've got the multi-asset allocation products, which also go into other commodities, including that of gold, silver, and other instruments, through which one can get a one-shot solution across each of these asset classes. So that's the broad way in which I would say investors should look at, depending on the risk profile and their tax
The big number flashing on your screen, State Bank of India reporting results, the net interest income at 41,446 crore, which is lower than the CNBC-TV18 poll of 42,592 crore. So the net interest income is below the street expectations or below the CNBC-TV18 poll expectations. We'll get you the net profit figure as well on your screens. The asset quality, though, has remained stable on a quarter-on-quarter basis. The gross NPA at 2.07 from 2.13 in the previous quarter. The net NPA remains unchanged at 0.53%. So on the asset quality front, it's a stable number from State Bank of India on a sequential basis. The net interest income, though, marginally lower than expectations. There was an expectation that also we'll get you the advances and the deposit growth figure as well from the management from now. But for now, the net interest income is slightly lower. The net profit figure on your screen, 16,891 crore compared to the poll of 16,099 crore. So the net profit is marginally higher than expectations. The net interest income is slightly below expectations. The other income figure too has remained largely stable, unchanged almost on a year-on-year basis at around 11,000 crore rupees. So operating profit, though, is down 20% on a sequential basis. The stock continues to see some volatile moves as of now. It was at the lowest point of the day. It fell almost 1.5%. But on a year-on-year basis, of course, the net profit is up almost 84%. The CNBC-TV18 poll was anticipating a 75% growth, but the net interest income, though, is marginally lower as of now, and that's the number that's flashing on your screen from SBI. Abhishek is joining in with more details. Abhishek, how do the numbers look like?
Operationally weak. So operationally, SBI is weak given the fact that net interest income is a miss of 2.7% to our poll. Now, loan growth is pretty healthy. Okay, loan growth is healthy at about 13.8% YOY and about 3.8% sequentially. However, deposit growth is weak. at 10% YOY and about 2.2% sequentially. But what's this done is the interest expenses have increased 5.2% quarter-on-quarter versus a deposit growth of just 2.2% quarter-on-quarter. So there is a huge miss on the NII front. The net interest income is up only 4.1% YOY and it's declined by 0.4% sequentially. To our poll, it's a miss of about 2.7%. Now, they have been able to lower their OPEX, that is operating expenses, YOY. So employee expenses are down nearly 17% YOY, which is actually aided the operating profit growth on a YOY basis. Now, remember, sequentially operating profit may not be comparable because they had a huge treasury income of 4,641 crore in the previous quarter, which is subject to, the bond yield movement, and this time it might not have been there. Provisions, that's declined sharply by 80% on a sequential basis. Provisions for NPA, that's down by 36.5% on a sequential basis, which suggests that the slippages might have been under control or declined on a sequential basis. So while you are seeing asset quality improvement, gross NPA ratio at 2.07%, analysts were working with a 2.04%, so nothing great with respect to deterioration over there. It's actually fairly improved. Net NPA has remained flat, which suggests that the PCR might have taken a slight knock, about 1% or so. But the worrisome point is deposit growth and at what cost it is coming. That's a worry point. Back to you.
Interesting, Abhishek. We have two reactions joining in as well. Dhyananda Vaidya, who is the research analyst of BFSI at Axis Securities, joining in to react to the numbers, as well as Prakash Diwan, who is joining in as well. Dhyananda, I'll come to you first. How do the numbers look like compared to your estimates? Because Abhishek was mentioning that it's an operationally weak quarter.
Yeah, that's right. So it's a significant miss on our NII estimates as well, possibly because of sharper than expected margin compression that we are looking at. Also a sharp miss on the other income part, possibly owing to the lower treasury income. OPEX growth seems to be under control. Also, provisions seem to remain under control. So slippages should be more or less in check. So operationally, it's not a great set of numbers from SBI, especially on the NII front. Yeah.
Well, if you take a look at the loan growth, loan growth is about 3.8% sequentially and about 13.8% on a YOY basis. Now, what I want to highlight over here is that the advances growth that SBI has been taken over the last few quarters from the private banks, it might be on the lower yield factor. So HDFC Bank, etc., are leaving out the low yielding corporate portfolio, while SBI was building the low yielding corporate portfolio. So that competition might have hurt the yield this time around. Yield has grown, or the interest income has grown by just 10% YOY compared to your loan growth of about 13.8% YOY. Even sequentially, if you take a look, the interest income is up 3.1% sequentially, while actually the loan growth is about 3.8% on a sequential basis. So not only does the cost of fund is actually hurting their net interest margin, even the yield side is actually hurting them. So there is a sharp compression that might have happened in their net interest margin for Q3 FY25. Back to you.
Prakash Diwan is also joining in. Prakash, what do you make of the numbers? As Abhishek was highlighting, the net interest income is a miss on expectations, although asset quality looks better.
Yes, Thomas, I do agree, but I don't find the numbers to be so bad. Of course, the NII is a miss given the high cost of deposits. But interestingly, look what they've done on provisioning. Provisioning at about 911 odd crores is far lesser than what last quarter they had to put in. Of course, it's got a little bit of seasonality, a little bit of the growth phase that they are in. And as Abhishek rightly said, the yields have, of course, had to give way because of, maintaining credit growth. The loan growth of 13% is very commendable for a base like what SBI has. Why I'm saying things are not bad, because most of the incremental money is coming from deposits. And if on February 7th, that's tomorrow, RBI comes up with any instance of potential reduction in cost of funds, things could look very different for SBI. So I think the market will probably weigh in that more. So today is not as important. The numbers are not as important as it would be after the announcement tomorrow, and especially if the announcement is favorable on the rate cut. So I think the market will take this in its stride. SBI hasn't gone anywhere, really speaking, at 750 odd. it kind of pencils in this moderate NII number. So wouldn't be very drastic in terms of the reaction, but I think tomorrow will be more exciting.
Well, it's a healthy loan growth, Prakash, but the point is that for incremental growth to happen, the deposit growth would come in at a higher interest rate. So do you suggest or do you foresee net interest margin to remain on the lower side compared to previous few quarters?
Yes, Abhishek, I do agree. Yields could probably be under a bit of stress. Margins could probably be under a bit of stress. They won't expand so readily. Again, this is because of the size and scale that we are talking about. So the same thing is kind of visible even in a ICICI Bank now. While everything else looks good, where's the growth going to come from on this base? But what I'm trying to say is that if cost of deposit goes up, at least in absolute terms, your NII will start reflecting that before the margins start improving, because it depends on how aggressively the bank would want to grow. My sense is the last quarter is usually high growth, and they don't have to worry about provisioning or NPA accretion and all of that in the last quarter. So things should look up much more on the metrics in the JFM quarter, and that's where probably the market will give it the benefit of doubt.
Well, we also have Ashutosh Mishra, the head of research at Ashika Stock Broking. Ashutosh, first cut, how do the numbers of SBI look to you?
It look quite good in the sense that if you look at NII front as well as on a provisioning front, it has some of positive surprise.
What do you make of the NII miss? That we are seeing with respect to cost of funds rising very fast, while they are not able to command on the yield side, while the loan growth is pretty strong.
Yes. We have seen that trend taking place, but we need to really, in the next 1 or 2 quarters, given no change in the monetary policy stance is expected to come place. So backed by that, we expect these things to improve from here onwards.
Right. Now, Ashutosh, how do you find the stock at these levels? It's recovering from the lows now, SBI at 762. At the current price, do you find it attractive after these numbers, or do you wish to revise your estimates once you get a finer print?
So yes, we will be looking at our estimate out there, but given changes in the monetary policy stance and SBI being the largest bank, we expect many of the issues, especially on the cost of fund, will get addressed in the coming period from here, and growth will also start getting returned back to the bank.
Right. Now, Dhyananda, one final question to you as well. What would you like to hear from the management when they address the media in just a few minutes from now?
Yeah, so loan growth has held up well, so we don't see a problem there, but some comments on deposit mobilization and also cost of funds speaking out and some color on margins would help.
What about you, Prakash? The deposit growth at 10%, loan growth at 14% at the current price, as you just mentioned, SBI has not gone anywhere. Do you find it a lot more attractive compared to a lot of the larger private banks?
Equally attractive, if not more. And what I would love to hear from the management is, of course, the indication that cost of deposit is peaking out. And of course, I'll be a bit lazy and work on the numbers after the RBI policy tomorrow.
Right. And Ashutosh, one final word from you as well. Is there something specific that you would want to hear from the management? Dhyananda said she would want to hear more on the deposit mobilization front. Is there anything that you are penciling in on the loan book outlook for the future or on the margin compression as well?
So we like to hear more upon the slippages part of it. The SMA2 was quite large for the bank in the last quarter because of one of the account. So what is the progress on that front? And going forward, how the OPEX will be panning out for the banks in the FY26? That will be the key things to watch out for.
All right, Dhyananda Vaidya, Prakash Diwan, Ashutosh Mishra, thank you so much for joining in to discuss the numbers of State Bank of India. The flash on your screen, the net interest margins at 3% compared to 3.1% in the previous quarter. The stock, recovering from the lows of the day, has moved back into the positive territory, as Prakash also mentioned, that the street will take the numbers in its stride. So with that, we bring a wrap to this coverage of the results of State Bank of India. But don't go anywhere. The management of State Bank of India will be addressing the media very shortly. Take a short break, followed by closing bell on the other side.
And 220 crore rupees for the garden department. BMC announced that it's going to start 250 new public clinics, also known as Apla Dawakhana, all over the city. One interesting initiative announced by the BMC was the introduction of cyber awareness program for students. It will serve two key purposes. One will be to ensure that the students learn how to use the internet in a safe manner and to keep them safe from cyber fraud. BMC also focused on environment initiatives and projects like promoting eco-friendly cremation and proper disposal of residue from idle immersion. These are the projects which will take place under environmental related initiatives in the next few months. We also spoke to Bhushan Gagrani, the BMC commissioner himself. This was the first time that he presented the BMC budget. Listen to what he has to say about this BMC budget. So your budget also mentioned that you guys are planning on imposing a tax on the commercial properties in slum areas.
That's right.
If you can elaborate that. So from when this new tax will be levied?
It is actually not a new tax. In fact, we are enhancing our assessment net. Under the assessment net, the properties which are in the slum, however, which are being used for the purpose of commercial, they were not covered. So this is for the first time we are doing the survey and bringing them in the tax net. Not necessarily that we will be imposing huge tax. It's a normal tax. It's not a very huge tax. However, the coverage will be given to our commercial properties.
So BMC has not introduced any new project this time. In fact, you have focused. Correct.
Yeah.
But sir, does it mean that is there any cause for fiscal concern, sir?
No, there is no fiscal constraint. We have enough adequate cash flow as well as resources.
हमारे देश में एक प्रधानमंत्री हुआ करते थे, उनको मिस्टर क्लीन करने कहने की एक फैशन हो गई थी। उस प्रधानमंत्री जी को मिस्टर क्लीन कहने की फैशन हो गई थी। उन्होंने एक समस्या को पहचाना था और उन्होंने कहा था कि दिल्ली से 1 रुपया निकलता है तो गांव में 15 पैसा पहुंचता है। अब उस समय तो पंचायत से लेकर पार्लियामेंट तक एक ही पार्टी का राज था। पंचायत से पार्लियामेंट तक एक ही पार्टी का राज था और उस समय उन्होंने सार्वजनिक रूप से कहा था कि 1 रुपया निकलता है 15 पैसा पहुंचता है। बहुत गजब की हाथ सफाई थी। पंद्रह पैसा किसके पास जाता था ये देश का सामान्य मानवी भी आसानी से समझ सकता है। आदरणीय सभापति जी, देश ने हमें अवसर दिया, हमने समाधान खोजने का प्रयास किया। हमारा मॉडल है बचत भी विकास भी। जनता का पैसा जनता के लिए।
Welcome to India's #1 budget headquarters. Decoding key policies, delivering market-shaping insights, and unlocking the potential of India's growth blueprint. Beaming live from the CNBC-TV18 Motilal Oswal Budget Headquarters.
The Taiwanese index, though, continues to outperform as it has all through the week, 0.5% higher there.
Kotak Securities estimates a quarterly slippage ratio of about 1.5%.
Bank Nifty, the resistance levels are twofold, 50,893. We never got to it yesterday. 23,740 on the Nifty. The Nifty Bank is up about 75, 50,400 plus.
Overall guidance for H2 was to double our square footage in the quick commerce business.
Markets a bit of a muted day coming in. Not much of an excitement that we're seeing coming in.
Governor Sanjay Malhotra's debut policy meeting, one of the most closely watched in recent history.
Middle East and India. And we think both these are markets that we can do better in.
496 crore rupee profit, marginally below the expectations of 519 crores. The revenue figure absolutely in line with expectations. Counting down to numbers of State Bank of India, which will be reported any time now.
Hello and welcome. That was the day so far. You're watching Closing Bell live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me are Surbi and Nigel for the markets. The Nifty is below 23,600, nursing a cut of more than about 100 points. Mid-caps are underperforming after yesterday's outperformance, and it's pretty much a reversal. Many of the stocks which did well yesterday, like defense, capital goods, PSUs, these are stocks which are under pressure. But what's disappointing is some of the earnings, right? Trent is one. The other one is BEML, where we've seen a 50% drop in their profits on a year-on-year basis. Thankfully, SBI is largely in line, but we'll wait for the press conference now.
You know, what's disappointing is actually the market as a whole. Because we've had a pretty decent global setup. Most global markets have been okay. Europe is fine. Wall Street futures are fine. Most of the Asian markets were up. And you would have wanted, the bulls would have wanted to see a little more of a follow-through. Yesterday, we said it's okay. You know, index is not the place to be. Mid-caps is the place to be. But today, no mid-caps, no index. And we've been struggling throughout the session.
Well, you know, a couple of points, actually. I think today's session is par for the course. You know, and the reason I say that is because we're getting to a big event tomorrow. We have the new RBI governor that will be addressing, the press as well. So I think some kind of profit taking ahead of that event is par for the course, according to me. And we have had a good run as well. So some money being taken off the table. I think still, you know, till that 20,200, 20,250 mark is held out, I think the trend will still be up. You know, and today we also have an expiry-related factor that's playing out. So a big event tomorrow, you have an expiry-related factor that's playing out, weekly expiry as well. And then over the weekend, you have the Delhi state elections. So put all this together, I think a mild pullback on the Nifty is par for the course. The flag bearer of the market is the Nifty Bank, because that is still flattish. You know, we're not seeing that, see any kind of pullback. And just a word on SBI, we made this point earlier today that it went into its numbers weak. So the numbers has to be very, very weak for it to see some follow through on the downside. To be fair, the first look at the numbers, the stock did move lower. And from there, did see a bit of a bounce. Why is that? Because the street was net short on it. The numbers pretty much in line. And I think the slippages number as well has come in a little bit low on a sequential basis. So put that together, the stock is not falling off the cliff because the street was positioned for a weakish set of numbers or a softish set of numbers. So, there's just a couple of points.
No, I completely take that, and no arguing against that point. Very, very logical, Nigel. The fact that the street perhaps is just digesting some of the gains. I mean, 23,700 almost. That's where we started this morning. So it's been a nice ride up. So maybe just kind of, cooling it a little bit before tomorrow's much talked about, interest rate cut expectation. But on Trent, that's the other stock. And that's what I've been thinking about, because anyway, the stock has been pummeled. Anyway, 8,000 rupees stock became a 6,000 rupees stock. And now look at that, 5,388 on Trent. And the numbers weren't really that bad. I mean, margins were in line. The growth is at 30%, but I think it's that question the market has.
The growth rate, right? In Q1, the revenue growth was 57%.
Yes.
In Q2, it came to 40%. And in Q3, now you're down to 35%. So 35 in absolute terms is fine, but when you're trading at 80 times forward multiple after the correction and your growth rate is moderating, then it's...
this is not a malaise that plagues only a stock like Trent. This is a classic issue with any growth stock. You will say the same for something like an Nvidia in the US, that can those growth rates of 100%, 80, 90%, can they continue? Remember, Nvidia had sold off after its numbers as well, because they grew at 80%. It wasn't enough given the valuations and given the run-up. And that's exactly the kind of problem that seems to be playing out on some of these high growth names here as well. Trent right now, big pressure, 6.5%.
I think margin for error is very, very limited on some of these stocks that have run up. Case in point being a Solar Industries. Now, the stock from the highs of the day is down close to around 8.5% or thereabouts. They had a con call earlier today at around 11 a.m. and I think they were talking about pulling back some kind of revenue growth. They're talking about 8 to 10%. Earlier, they were talking about mid-teens. Just take a look at the stock. It had that big order win that got confirmed. What is the name of that? there was that Pinaka.
The
But take a look at the stock here. It's down close to around 6%. It was up 2% early in the morning. So the margin for error on some of these names are very, very limited, particularly with the kind of run that they've seen in the last 12, 18 months or so.
Okay, as we move on, very quickly, let's pull up the intraday chart on SBI. The good in the numbers is that asset quality is stable. There is no rise in slippages. Gross NPAs are looking better quarter on quarter as well. That's sort of pristine. And of course, there's been growth coming in. I think the market's going to debate around this whole margin business, whether they can, hold above 3% or not, because there has been a slowdown in margins as expected. They're absolutely at that line, the 3% line now. Let's see how this goes, because we're also perhaps getting into that, rate cut cycle starting tomorrow. We'll get more on SBI in just a bit. We'll hear from the SBI management. Lots of other Nifty earnings also lined up. Let's get started. We have Mitesh joining in. Mitesh, hi. Good to have you back on. I remember in the morning we were talking about the prospects of starting a long trade. Intraday basis, I don't think longs have really quite worked out as planned. But what would you say? What would the trading bias be for you, Nifty and Bank Nifty? 1 hour to go before, of course, tomorrow.
So, on the Nifty, it hasn't worked out. On the Bank Nifty, I think, it's trying to recover. And both the investors, the structure for me is positive. We bought some Nifty around this 23,600, 610 mark and kept a slightly deeper stop at 23,480 on the spot. So, we've taken the trade. The indicator and the averages on the hourly and forward chart still remain on the upside. And therefore, I think as long as 23,480 is taken out, I would maintain a positive stance and go with the long trade. On the stock side as well, the idea is that because you have a positive bias in the index, you are looking at some buying opportunities on the stock side as well. And I have Axis Bank as one of the recommendations. Axis Bank is a buy with a stop below levels of 1,000. Look for targets of 1,050 to begin with. I suspect if the broader reversal plays out, then we might even look at slightly higher levels on the chart of Axis Bank. And the other one is Chola Finance, which was a buy a few days back as well. It did very well. In the last 2 days, given a pullback. So keep a stop below 1355 for a target of around 1520.
Okay, that's the call coming in on individual stocks. Let's get to PVR Inox. Reported the Q3 numbers. The revenues were slightly below street expectation. Revenue growth came in at about 11%. Margins, though, missed the street expectation. There was a sharp rise in movie production and distribution costs. We have with us Ajay Bijli, Managing Director, and Gaurav Sharma, the CFO of the company, joining in. Thank you very much for joining in. Mr. Bijli, 11% growth so far in Q3. What about Q4? Because we've got some big ticket releases coming through. What can you guide the market in terms of Q4 and even the pipeline, at least for the first half of FY26?
Well, we've got a big Salman Khan movie coming. We've got some English movies coming. Hollywood had suffered in the first 6 months because we did not have, the strike, impact of the strike, screenwriter strike was still there. But from third quarter onwards, Hollywood is back. So we are, excited about that. Captain America is coming. Some two very big, there's a big Chhawa, which is a big, Vicky Kaushal movie, which is coming. And there is this Superman, Mission Impossible. That's next year, first quarter. So I'll just talk about Hollywood first. And from this quarter, which is coming up just now, we've got this Ajit Kumar movie, which is a Tamil movie, which is coming. Thandel is coming, which is a Naga Chaitanya and Sai Pallavi movie. So I think the momentum that we are always looking for in our business is building up, which is most important. So whether it was Pushpa, whether it was a Skyforce, all these movies created that momentum. Even the re-releases have created a momentum. And that is what we've been looking for. And so exciting times ahead.
Do you think the pipeline, sir, for Q4 is looking better than what we had in Q3, which sets you up for a better performance in the March quarter? And even the contribution of regional this time and the re-releases, because that's doing well. What was the contribution in the current quarter?
No, I won't say Q4 has got a better pipeline than Q3, but it's just that it's Q4 is the way every year Q4 is. But yes, we have some big movies and sometimes, surprises do crop up, as I said. So it's a decent enough pipeline. It's an exciting pipeline.
Ajay, hi. Occupancy around 25%, is it, in Q3?
Yes.
So I want to sort of talk about that because the content pipeline has been looking good. Third quarter as well, it was lots of new releases, plus the re-releases like you mentioned. Do you see that number itself, that occupancy number, pushing higher, or is 25% like the steady state new normal, so to speak, post-COVID normal?
No, this year, in fact, we had the weakest movie pipeline. So, in fact, I don't think occupancies will remain here because next year Hollywood is bouncing back. Hindi movies, there was not a single Khan movie, so to speak, this year. We did not have any Shah Rukh movie, any Aamir movie, any Salman movie. Salman movie is coming literally at the fag end of the financial year, 28th of March. We did not have any Hrithik movie, any Ranveer movie, any Ranbir movie. Ranveer only came in an ensemble movie, Singham. So given that and the Hollywood pipeline not being very strong, this was not a very good year as far as content is concerned. All that is going to change in 25, 26, where all the people that I mentioned just now, their movies are coming. So I'm expecting that to result in better occupancies next year, for sure.
Okay, fair enough. So, the content pipeline is, something that you don't entirely control. Let's talk about your controllables because they're looking better. Whether it is the average ticket cost or the F&B spends, they've all been ticking higher, right? What can you guide on this? Is there elbow room to maybe increase ticket pricing in Q4 and rolling into the new year? And also on F&B, because that's an area on which you folks have been really focused on to drive up more revenue from there. And there was some talk, I remember a couple of quarters back, we also discussed maybe a new foray, which could be, going beyond the obvious F&B at the cinema theatre, the movie theatre, maybe sort of distribution at home, etc., in malls. So where are you on that plan?
Well, I think that with 159 or 150 odd million people coming to the cinemas, having a footprint of 15 million square feet, and having a good connect with the consumer on our brand equity, we want to pivot the company to three different verticals. One is, of course, cinema business, exhibition business, which we are focusing on reducing our costs, trying to get people in through various innovations that we do. On the other hand, we want to look at F&B beyond post-ticketed F&B. So the JV with Devyani to do food courts, a tie-up with Zomato for home delivery, 4700 BC, taking some of our own brands which are inside, pre-ticketed to post-ticketed to pre-ticketed. So also food is going to be a very big play. And third is a fun component, 3 Fs as I call it. And that is like what we've done with the candlelight screening we just now had, where we were showing live musical performances. We showed the Taylor Swift concert, BTS. We're talking to various, people who are coming and watching events in the stadiums. If you can get digital rights, theatrical rights of that. I think the fun element, repurposing certain cinemas of ours and having some more activities, more engaging activities over there as well. So I think the three pillars on which PVR is going to pivot is going to be food, fun, and film, and not just the on content.
No, absolutely, Ajay, exactly on that point is where we were hoping to get some more numbers. But, allow us to deviate for a little bit. If you folks can stay on for a couple of minutes, that'll be great. We also have the SBI management speaking as we are talking to you. Let's quickly get an outlook going with SBI.
0.24%, and PCR continues to be robust at 75% almost. So in terms of the business growth, at the end of Q3 FY25, deposits have crossed 52 trillion with more than 51 crore customers. I think we take pride in serving the range of customers. Our bank serves 1 out of every 3 Indians, and in some way we see that SBI touches every Indian family. The total deposits have grown by 9.81% year-on-year to 52.29 trillion. Term deposits have grown by 13.47% year-on-year. Our current account deposits have grown by 14.22% year-on-year, and CASA deposits have grown by 4.46%. I'm glad to share that the credit growth continues to be robust across all segments, with all the major segments registering double-digit growth. Our domestic advances have grown by 14% year-on-year, driven by 18% growth in SME, 15% in agriculture, 15% in corporate, and 12% in retail personal segments. Our foreign offices advances have grown by 10.35% year-on-year. The domestic credit deposit ratio was at a healthy 69% at the end of Q3 FY25, indicating sufficient headroom to address future growth requirements of the economy. The bank continues to demonstrate industry-leading asset quality at this scale. The slippage ratio for Q3 FY25 was 0.39%, while the credit cost for Q3 FY25 stood at 0.24%. The net NPA ratio improved by 11 basis points and stands at 0.53%. We have a well-provided NPA book with PCR of 74.66%. The asset quality of the bank has continued to remain strong over the last 5 years, which demonstrates the quality of our loan portfolio, the robustness of our underwriting processes, and the leadership of the bank across business lines. Our capital adequacy ratio is at 13.03% without considering the plowback of profits and is well above the regulatory requirement. If we include the profits for 9 months FY25, our CAR would be at 14.5%, while the CET1 ratio will be 10.99%. Based on the current profitability and growth profile of the bank, we believe we have sufficient headroom to take care of business growth requirements.
Okay, so that's Mr. Sethi just recapping the Q3 numbers. What we'll do is we'll quickly dip back into State Bank of India the moment they start talking about the future outlook and, of course, the expectations from the RBI. Right now, back to that conversation with Ajay Bijli as well as Gaurav Sharma. Talk about trends with PVR. Gaurav, if I could come to you, just put some numbers on it. Exactly what Ajay was describing on both on the ticket pricing, whether you see further headroom. I mean, can you touch, say, go up to 300 or so in Q4, and also the food piece that Ajay described in detail, including the tie-up with Devyani. How much can we expect food to contribute, say, in FY26?
Sure. I think if you look at the growth in our ticket pricing year on year, we have delivered almost 4% growth despite of lack of, Hollywood films and big mega blockbusters from Bollywood. There's been a growth in ticket pricing. I think going forward with a very strong lineup from Hollywood, which are typically, focused towards urban family audiences, etc. We feel that there is definitely headroom for growth on ticket pricing. F&B is concerned, I think F&B continues to be one of the focus area for us. Our growth in F&B revenues year on year has been almost 9%, which is faster than the growth in box office. We've been carrying out a lot of initiatives on F&B, as Ajay was explaining. We've opened the first food court in the month of December in the joint venture company with Devyani. And there is a full plan for the next 12 months to open more food courts. I think we are focused on growing F&B at a fast pace, and there is definitely headroom available for further growth on SPH and F&B.
Hi, gentlemen. Good to see you and Ajay as well as Gaurav. Give me two numbers. The ad spend seems to have recovered at the highest we've seen the last few quarters. Do you expect the momentum to continue out here? And the second part is the net debt number. That's come down, I think, by a close around 18%. It's clocks at around 1,000 crores. Further room to reduce both these two. And gentlemen, I want some numbers. So please help me out with that.
Well, ad sales, we're very happy with it. I mean, still there are lots of advertisers and sponsors who still feel that the uninterrupted, undistracted viewing of ads that comes on the big screen is unmatched. That people are coming back to the cinemas, and which is the reason why they're happy to. So ads will remain, ad income will remain the way it is, or in fact may become even better. I don't have exact numbers I can't give you, but we're very happy with the results that we've got this quarter, and we see this continuing. As far as net debt is concerned, of course, Gaurav can answer that, but I just want to make one point over here is that we've gone into a capital light model. A lot of our cinemas, 100 screens we have signed now already, in which is a FOCO model, which is franchise owned but company operated. The way hospitality industry does it, and a lot of retail companies have done it. We already have a lot of capital that we've deployed in the business, and we believe this is the time now for us to monetize on the brand equity that we've been able to build with the developers, with the retail community, and with the consumers. And there's no reason why if hospitality companies can do it, why can't PVR Inox also work on a model where other people are spending and we manage cinemas for them. So the asset-light model and the FOCO model has also reduced our capital intensity. And that's why you see a net debt reduction also happening.
Just a quick word on the margins.
I think Gaurav wants to come in as well and add to that point. Yeah, Gaurav, go ahead, and then Rima wants to know about the margins.
No, I think Mr. Bijli has summarized it well. Nothing incremental other than the fact that we are very focused towards our capital allocation strategy as we pivot more towards asset light. We are pretty hopeful that the net debt will further come down. Bringing down leverage in our business is one of the key priorities for the management going forward as well.
There appears to be higher movie production and distribution costs, which sort of are keeping your margins capped. What is the outlook on margins? Have you seen a spike in your production distribution costs? Is that a worrying trend? And again, just one follow-up on this FOCO, the number of screens that you will add. What is the guidance for FY26 in terms of screen additions?
So as Mr. Bijli said, we have signed up about 100 screens under the asset-light model, and these screens will come up over the course of next 2 to 3 years. As far as the next year financial year guidance is concerned, I think majority of our new screen openings will be in the asset-light model. Without getting into specifics, it will be more than 50% new screen additions under asset-light. So yeah, I think those are the numbers.
And on margins?
On margins, I think, to your point on film distribution, in fact, film distribution revenues have multiplied almost 2.5 times compared to last year. We were the distributors, PVR Inox Pictures, our subsidiary company, was a distributor for Singham again in Q3, which did exceedingly well, collecting more than 300 crores. And there was therefore an increase in revenues and a corresponding increase in costs as well. Typically, distribution business, EBITDA margins are slightly lower than exhibition business, as a result of which there is a slight impact on margins, but overall contribution to profitability has been incremental.
Okay, all right, gentlemen. Appreciate you joining in and giving us that take. Thanks, Gaurav, as well as Ajay, for joining in. And as you all said, things will improve from here on. Off to the movies. Let's see how we see that recovery play out for this quarter and the coming quarters as well. Thanks for that. That's about PVR. But let's cut across to the SBI press conference. We have the management who's addressing the press.
Excellent asset quality in home loan category. And we also have seen a significant growth in the personal gold loans and pension loans. What has not grown the way it was growing is the express credit, which is unsecured personal loan. Last quarter also we mentioned that we are making some systemic improvements in terms of our delivery of this unsecured personal loan. We wanted to make this journey completely digital. While it is also a fact that in the systemic level the unsecured personal loans are coming, and we are not an exception on that. But our portfolio is of a different category. We normally give to the salary class who maintain salary accounts with us. And to answer your question in terms of coming back, I think we are seeing that the unsecured personal loan in our portfolio is showing good growth in the current quarter, which means that whatever we have had a lower growth rate in the last 3 quarters, we're able to reverse that now. And hopefully, I think we may not have that 30 to 35% CAGR in the unsecured personal loan, but definitely we'll come to the double digit in there.
So my second question is on asset quality. Across the sector this quarter, we have seen that there has been a spike in unsecured loans. Microfinance has been a pain point for everyone, NBFCs as well as banks. What is your sense on the asset quality for your bank, in the sense, again, on the personal side? Because I think corporate loan books are still pretty, the other side of the cycle. So what's your sense on the personal side?
You're right. I think corporate book is holding up very well. That is also because many of the corporates have deleveraged and they're in a much better position. And also we have strengthened our corporate underwriting. I think you should give some credit to us on that. But in the RAM segment, SME is doing very well, and agriculture is holding up in asset quality. Retail personal, in the microfinance, we are not very significant player on the direct lending. And even lending to MFIs also, our portfolio is limited. We have about 10,000 or 11,000 crores. We have not seen any major movement there in the MFI lending. Our own portfolio of MFI is very small. So having said that, we do see some stress on the microfinance in the industry. And I hope that the refresh, 15-day refresh in the credit information company data will help lenders to underwrite in a better manner. I think that will be addressed going forward, I believe.
Next question we have from Sangeeta Mehta of Economic Times. Sorry.
Just wanted to add, sir. Sequentially, actually, in all the segments, we have the NPS have gone down. Individually, agriculture, retail, personal segment, SME, corporate, you name it, we are all down quarter on quarter. So that's a very positive thing about the results.
No, microfinance, no. Let me just explain.
Yeah,
so, as sir mentioned, our book out to direct microfinance lenders is small, 10,000, 12,000. There we have seen their NPS go up a little. There's no question on that. But these are the best run MFIs, the best in the industry, the top 3, 4, you can call them. So therefore, we don't have any concern that they would start to show any concerns to us. And they have assured us by our conversation that they are on top of things.
Sir, this phenomenal growth of 84%, could you kind of, is this going to be the run rate, or could you throw some light on what led to this kind of a jump in profit? And also, could you also share something on stress loans? It's fallen, so was there some one-time recovery, or did you all write off the loans? Could you share something on that? I have one more question.
First thing is on, in terms of the percentage jump in 84% cannot be, possible. But I think what we wanted to maintain is in terms of the consistency and continuity, in terms of the ROA and ROE. I think that is more important indicators than the absolute profit numbers. And our guidance on the ROA of 1% and ROE of 20%, 15% and above continue to be valid. I think we will work on that count. As far as the year-on-year movement, I think we also had one-time expense in Q3 FY24. That is not there. So that is showing the spike. While we have improved on every parameter, the substantial jump in profit is also because I think there was one-time exceptional item in Q3 FY24. The second question you asked in regard to?
Your stress loans have come down, gross and net.
There's no substantial, there's no major recovery or no major write-off. It is our usual run rate in terms of strengthening our recoveries has helped us. These are all small value recoveries, and we maintain that run rate.
So, assuming RBI reduces rates tomorrow, what is the kind of headroom or flexibility you will have to lower your deposit rates, and to what extent you think it will contract or impact your NIMs?
No, as far as
I'm assuming 25 basis points, so basis that.
No, as far as the rate cut impact is concerned, on the deposits, of course, we will take a call as we go forward through the ALCO. But the impact on loans and all, if it is a small rate cut of 25 basis point, I don't think there will be any significant impact on our earnings. I think our book, as you know, is significantly MCLR and fixed rate loans. And we have a combination of 60-40 as far as MCLR fixed rate to a floating rate, repo and T-bill. So, and the T-bill rate also we were able to negotiate, even T-bill is going down, we were able to negotiate or renegotiate the margin over that. So we don't see major impact of the rate cut in terms of the deposits or advances in the immediate future, because the deposits also will take some time to get repriced. So, and as far as the deposit repricing is concerned, we'll take a call as we go forward. EBLR is
28.84%. 28.84. Yeah.
29. The EBLR is SME loans are also.
SME and
loans
housing.
are also.
We have the next question from Hamsini of Money Control.
Hi. Before I ask my question, I just want a clarification on EBLR. SME products will have an overlap between fixed rates and EBLR also, depending on the risk and category?
No. SME is mandatory EBLR.
Okay. I have two questions, sir. I'll go with my first one. Your cost of deposits is now at around 5.05, and you're talking of special deposit schemes which conclude in March. Do you foresee a situation where, like most of your competition is, possibly have to give out a little more on deposits in order to? And what would if you, especially in a market where we're expecting that the rates will go down, would we be comfortable with such a strategy?
No, we always held, earlier also I mentioned, for us deposit mobilization is a franchise activity, right? We always try to compensate our customers adequately. And we have a very loyal customer base, and obviously they need to be taken care of. But if any policy rate cuts are there, to affect the policy transmission, probably we may have to look at repricing the deposits. And as far as deposit mobilization is concerned, I earlier also mentioned we would like to compete on our service quality and the reach, and giving some additional benefits to the customers in terms of privileges, what is permitted regulatorily, than competing on the price.
Okay.
Yeah.
My other question...
It bounced off the 750 mark, moved into the green, but now I think a bit of a trading move is what is taking place. I'll tell you what, we'll slip into a short break, come back, we'll continue our focus on the markets. We'll focus on a couple of stocks that are moving around, and Tushar Pradhan as well is waiting for us. He'll give us his opinion about markets and stocks and sectors that he lacks.
आदरणीय सभापति जी, आजकल मीडिया में ज़्यादा ही चर्चा हो रही है, सोशल मीडिया में और अधिक हो रही है। कुछ नेताओं का फोकस घरों में जकूजी पर, स्टाइलिश शावर्स पर, लेकिन हमारा फोकस तो हर घर जल पहुंचाने पर है। आदरणीय सभापति जी, हमने ये जो अलग अलग कदम उठाए, उससे लाखों करोड़ रुपए की बचत हुई, लेकिन उन पैसों का उपयोग हमने शीश महल बनाने के लिए नहीं किया। इसका उपयोग हमने देश बनाने के लिए किया है।
Welcome back. Well, the markets actually have seen a bit of a recovery from the lows of the day. HUL is cutting its losses, so good on that one. And the big boy, HDFC Bank, that's the one, that's the reason actually why the Nifty has recovered closer around a quick fire 30 points from the low point of the day. HDFC Bank moves into the green, takes the Nifty Bank with it as well. But the biggest loser on the Nifty today is Trent. Valuations not in favor. The numbers a little bit lower than what the street was working with. And when you trade at these valuations, the room for error is very, very limited. But Mangalam joins us to break it down for us. Mangalam, take it away.
Well, if you look at Trent's this quarter's numbers, the street was expecting a moderate set because the company had reported some moderation in the second quarter itself, and the stock had actually, hit a high then, and from there after it's corrected about 32 odd percent. So the street actually curtailed its expectations down, and on that the company has gone ahead and not beat those expectations. They've just met those expectations. The stock at peak was trading at around 120 times, now trading at around 80 times. But the street is looking at EPS growth. This time around, if you look at it year on year, the net profit growth has come in at 34%. At peak, over the last few quarters, the company would report EPS compounding over 50%, closer to 60, 70 odd percent. And the stock was trading at around 120 times, the PEG ratio or the price earnings to growth was close to around 1.5 to 2. Now with the multiple coming down to 80 times, the EPS itself has come down, the EPS growth itself has come down to around 34%. So you're still trading at around 2.5 times price to earnings divided by growth, or PEG ratio as it call it, and which is why the stock, despite having corrected, is seeing further correction. What's also something that the street does not like this time around is the fact that their fashion concepts have reported just a high single-digit like-for-like growth. So a large part of their growth has actually come in from store expansion or portfolio expansion itself. And to that, the company has actually announced a plan of optimization of those stores. So basically what this means is that if there are small stores across the street or in two areas, they will just consolidate it and make it one large store itself. That's not as much a worry, but the only, a silver lining in these numbers is the fact that Star, that business is doing well. It's reported 25% growth. And at the same time, the double-digit like-for-like growth in Star is one of the portfolio bets that the company is making in terms of growth. Again, from an optical standpoint, 35% revenue growth, 34% EPS growth is much better than everyone else on the street. But these were moderate expectations. The stock had already seen a big run-up. And from a price-earnings growth perspective, it had been priced to perfection, which is why we're seeing profit-taking on that stock, or rather further decline on that stock.
Yeah, absolutely. It saw a big run-up and it's seeing an equally dramatic fall as well. Mangalam, thanks very much for that. Trent is now off about 36-37% from its peak, and the peak was 8,000 plus. Now, this is sort of a bit of a derating perhaps that's playing out as market resets its expectations. Let's discuss that and more with our next guest. We have Tushar Pradhan, Director at Hexagon Partners with us. Tushar, thank you so much for joining in. So, tell us exactly, and you've seen this play out in multiple stocks across sectors. This is not just a trend story, right? This is about the market bidding up something where it finds growth. And in India, fund managers typically love growth. And then when that growth has to be, those expectations have to be reset, which is what we're seeing in Trent, sometimes it can be quite painful. How would you navigate a situation like this where perhaps the underlying business is still okay, but it's about expectations and delivery?
I think you hit the nail on the head exactly in terms of what the expectation of valuations are indicating. So if you're trading at 70 times, 80 times, essentially the expectation of the market at that value is that you're growing at 50% earnings growth at least. And as you know, businesses are not really that predictable. So even if you have a quarter of not so much of an exciting growth as is estimated in the valuation, you will suddenly find that incorporating even a smaller percentage of a lower rate of growth is going to collapse that stock, because that is what gets automatically incorporated in the future valuation. So I think the real alarm bell around valuations is that it is going to become extremely volatile if you hold on to stocks which are, upwards of 70 times, etc. of earnings, especially of businesses which cannot really grow at that rate. So when we are talking about, as you just mentioned, retail, I don't think the rate of growth, given, the constraints around how you can actually expand that business, is just going to be blue sky. But as opposed to, say, something like a service offering, which doesn't have a constraint on capital constraint or a capacity constraint, then the growth can be really electric. It can be really rocket-like. But that's really where the excitement comes in, that it's not one size fit all to say 70 times is expensive, so avoid. 70 times based on what expectation, what delivery, and the ability to deliver a very strong rate of growth for a significant period of time is really what distinguishes valuation. It's not the number.
No, absolutely, and that's beautifully explained, Tushar. Let me try and apply this to another scenario. Like I said, the problem is the same. The sectors or the companies or the stocks could be different. EMS, and we saw this scare play out when Dixon's numbers came out, right? There was nothing wrong with the numbers. We all know the margin profile. We know the business. We know where all they're expanding. But it was the same situation. Here's a company that's, that's trading at a stock that's trading at almost 100 times. So you said in Trent's case, or companies which are in the retailing space, maybe continuing at 50% growth is not possible. What about EMS?
Here also, I think there is a significant amount of money that you're required to expand, right? So, for example, if you are into the EMS space, you will require facilities. Orders is one thing, but your ability to deliver an expanded base of products, it's not going to come overnight. And if you have invested in it, it is going to take a long time before it comes online. Essentially, the market is a little manic, which means that it starts to incorporate what the potential for a company is, maybe 2 years into the future, already in the price. And given, I would say, buoyant capital markets, it is likely that those kind of multiples may sustain. So it is not about being scientific about it. It is also being very conversant with what the sentiment is. So just let me give you a simple example. So for example, if you have significant foreign inflow of capital coming into our markets, company trading at 100 times, delivering on earnings growth, I don't think the multiple will get damaged too much. But just change the scenario. The overall underlying fundamentals remain the same, the delivery continues, but the sentiment changes, you will suddenly find a 20-30% drop in any 1 month or so. I think this is really the vulnerability that you're talking about. We are assuming that the fundamentals of all of these companies remain very, very solid going forward. But yet, they will have valuation risk.
Absolutely. Guys, that's a lot of food for thought, isn't it? I mean, the Indian market is so peculiar. You have a company of a result, 30% top-line growth, 35% PAT growth, margins at 18-19%. You'd say, what's the problem? Stock selling off 8-9% as if, skies fallen down. But that's the Indian market, I guess, for us.
Well, that's also the market where you had an 7-8% fall at the beginning of the week just because one fashion app got launched in an online format. So it's been 2 body blows for Trent this week as the stock has corrected close to about 15%. But BEML, that too reported numbers. Again, a case of high growth expectations, high valuation, a fantastic stock run up. But stock is unwinding today. Sharp sell off now, 3% gone. This month, 15% lower. Revenues for the company degrew by 16% on a year-on-year basis on account of likely execution issues in metro and mining. Profits are down 49%. Gross margins have slipped by 220 basis points. Tushar, afternoon, where do you stand on the entire CapEx theme? So break it up for us in terms of power, industrial, defense. Do you have a preference or is it an avoid because of the volatility in earnings?
No, in fact, I would have a reverse view on this, that one needs to be invested in the CapEx cycle going forward. We have not seen one for a long, long time. And the current one, which will be coming, one has to be patient. One has to be very circumspect in terms of the entry points, because I think everybody understands that there has been a lull in terms of the government CapEx, as we saw in being an election year, etc. But that's going to pick up. If you see the kind of commitment in the budget, all of that is following through. There has been a lull. As a result of it, there is going to be a lot of slack, which is in the current spending, which is actually going to come through into the numbers. And essentially, it will start falling in place. Currently, I think we are in a very, I would say, in-between situation, a transitionary phase, where the expectation of growth is so urgent into every quarter that there needs to be, a balanced look at what's going to happen. But if you were to ask me for the next 1 or 2 years where I would like to put my money in, clearly I think CapEx plays. And I think, as you mentioned, there is an entire spectrum there. And essentially a CapEx cycle works over the period of time, and different kind of companies involved in the CapEx cycle starts to do well over a period of time. So process industries, things which start from day one, are the ones which start to benefit initially. So we are talking about companies which make process machinery, even components going into it, even metal. Once the factories are up, then you have other kind of manufacturing which starts to build up as a vending, or let's say a vendor chain, a supply chain into the manufacturing process going forward. So there's another slew of companies which start to do well. And once the capital cycle is complete, then you have the actual OEMs, or I would say the companies who actually put the capacity up, start to make the upside. So you have a very interesting period coming ahead of us in the next 1, 2, or 3 years, where you'll see this entire capex play work out. So I would be very, very optimistic about the whole cycle here.
Okay, all right, Tushar, thanks a lot for joining in and filling us in with your take on the markets and how you see things getting positioned as we go ahead as well. By the way, the markets were still, the Nifty is still down close to around 100 points or thereabouts, but quite a few stocks have moved around. The notable one now is HDFC Life. That's moved to the high point of the day. So keep an eye on that one. It's both the HDFC boys actually, HDFC Bank and HDFC Life, both of them moving to the day's high. Well, it's time for the Growth Code, an initiative by Grow and CNBC-TV18 that's designed to provide you with valuable trading strategies. This week, I sat down with pro trader Saurav Sisodia, the co-founder Quantify Capital, to understand how social media is fueling speculative trading. Let's hear out what he had to tell me. Saurav, another important point is how has social media contributed to this speculative trading, especially among the retail investors?
So I think social media has a very big influence. In fact, I was reading an article that due to social media, speculative trading has increased a lot in last 5 to 10 years. And so if you see what happened with GameStop. So GameStop was a stock in the US. It was a company into gaming. There was an article on Reddit that, okay, so retailers bet against the hedge funds, and due to this speculative trading, the stock risen almost 400-500% in a short span of time, and the hedge funds actually lost money due to this. So this is the power of social media. But what traders have to do is not to believe anything that is there on the social media. Do their own due diligence, because with social media you get so many insights. Some influencers saying this, other influencers saying this. So I think as a trader, what you have to do is just try to gain as much information content you can on social media, but not try to do any investment or trading advice based on social media.
Okay, all right. Saurav, how can traders distinguish between genuine insights and say hype-driven recommendations on social media?
Okay, so what they have to do is, if any influencer is talking about a stock directly, because SEBI guideline says that if you're not registered, you can't talk about stocks. So if an influencer is trying to pitch you a stock that, okay, this stock is looking good, telling you to buy, I think that is something you should stay away. And one thing to do is at least see the volumes, like what are the daily average volumes of that stock. If the stock has like at least a market cap of less than 1,000 crores, then definitely you have to stay out, because these are generally pump and dump. And what a trader can do is basically follow people who are giving genuine insights, basically teaching you how to make money, how to improve your investment process, rather than giving you tips.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
For the first time in nearly 5 years, the Reserve Bank of India could kick off a rate-cutting cycle, making Governor Sanjay Malhotra's debut policy meeting one of the most closely watched in recent history. Now, RBI has been injecting massive liquidity into the banking system in recent days, which some interpret as a precursor to a rate cut, despite the relatively high inflation. So the CNBC-TV18
Welcome back. Markets actually have seen a good recovery. They have cut their losses by close to around 50 points. The Nifty actually is now above the 23,600 odd mark. So it took support at around 23,550, which is the support level we had pointed out earlier today going by the options data. And expiry seems to be above that 20,600. Mitesh Thakkar is back with us. Mitesh, what are you doing? Did you buy the dip today? And what about individual stocks?
Megan, as I said, we already have a long position on the Nifty, taken around these levels, about 20 points higher from here, but then that's okay. Looking at the fact that, this still looks like a market which is positively biased, given the hourly to hourly charts are all positive. So I have 2 BTST calls. HDFC Bank, I think, is clearly, one which is leading the Bank Nifty, providing support over there. That's a BTST with a stop at about 1737 for targets of 1760, and Lupin is the other one. Lupin is a BTST with a stop just below levels of 2172 and a target of 2205.
Okay, all right. Thanks a lot for that, Mitesh. By the way, 2 stocks before we go into that break. Castrol India. Now it's up close to around 10%. Remember, these stocks got an absolute hammering when that we saw that sharp fall. The stock went down, I think, to around 180, 170 rupees. And now it's seen a good bounce. They had the sweetener in terms of the dividend as well. And the other one is Redington. It seems to have come out of its slumber. Good numbers, the street likes it. Commentary as well, fairly positive. That stock as well is up at around 230 rupees. Slip into that break, come back. We'll continue to focus on a lot of stocks. Don't go anywhere.
Poll shows 70% of market participants and economists are betting on a 25 basis point rate cut this time, driven by the need to support growth. But ignoring the rupee's depreciation can prove tricky, which is why 30% of the respondents still voted for a dovish hold. Now, liquidity remains tight in the system, but a cash reserve ratio cut at this point seems unlikely. But 60% of the respondents do expect additional liquidity easing measures like more OMOs, longer duration repos, or a cut in the incremental CRR for NRI deposits. Of course, markets will also watch closely for any clarity on the new LCR norms, which are set to kick in from the 1st of April. Now, external factors are going to add a lot of complexity to this policy. RBI is likely to acknowledge the risk from the tariff threats and stay nimble, but a small section of the market believes that inflationary tariffs and a weakening rupee could be used as an argument to push out rate cuts. But the broader consensus is RBI will allow a gradual rupee adjustment while ensuring stability. Now, markets are already pricing in steeper rate cuts beyond February, with most expecting anywhere between 75 to 100 basis points cut in this cycle to give a helping hand to growth. Now, despite these expectations of rate cuts, the monetary policy stance is likely to be left unchanged at neutral. But as for the tone, 40% do anticipate a dovish tilt, while the majority expect it to be neutral. Now, growth expectations are softening. 90% of our respondents predict that RBI will lower its FY25 GDP forecast to 6.4 to 6.5%. That could further strengthen the case for easing. But the inflation forecast is unlikely to be tinkered with in this policy. So all eyes are going to be on Governor Malhotra's debut policy move. Will he pull the trigger on a rate cut or stay cautious amid global risks? The stakes are high and the markets are going to be watching.
I'm still generally pretty constructive on the Indian market. Obviously, the valuations are higher than many other EMs, but generally speaking, stronger fundamentals, at least long-term, to go with those higher valuations. India is also, at least at the current time, less in the crosshairs of some of these potential tariff announcements. There's lower overall export risk to the U.S. in terms of the size of the numbers compared to China, compared to Canada, compared to Mexico. And so that keeps India fairly well positioned in this year where there's a lot of headlines that investors can wake up to and find various disruptions on their positions. It doesn't mean that there's no headline risk, but overall, I think it's rather well positioned and still has all the structural uptrends.
I think the underlying innate technology is just right on the threshold, and we'll get there with the next models. But now people have got to go off and build all these services. So someone in this room hopefully will figure out what the AI tutor of the future looks like, and that'll be a population scale thing, and it'll think what that would do if every kid on Earth, this year got an AI tutor that was provided like a better education or helped to provide a better education than anybody could get last year. Think what it would mean if we could have like an AI medical diagnosis system that was better than anyone could get last year. Think what it could mean if science.
Welcome back. Another big mover is Bajaj Housing Finance. The stock has moved up close to about 4%. Biocon is adding some heft. And Bharti Airtel, by the way, slipped virtually to the day's low, reports numbers later in the evening. Stock is down close to about 2.5%. It's expected to be a good quarter because the July tariff hikes will still benefit them in the current quarter, but the stock is a bit subdued. Amrish Balika is now with us. Amrish, your pick for the day?
Hi, Rima. My pick for the day is IndusInd Bank. It's the fifth largest private sector bank, has about 7,135 points of connect, one of the largest distribution networks, and they have about 6.6 lakhs merchants. Well-diversified loan book across consumer as well as corporate products with a 54 to 46 mix. Leadership position across many products, and in vehicle finance, they are among the top 3. In microfinance, among the top 2 with about 13 million customers. They have about 91,000 Bharat Money stores and have a reach to about 1.61 lakh villages. The microfinance book had some asset quality issues since the last 2 quarters, and we have seen a decent correction in the stock because of this. But then microfinance industry could actually see the pain reducing, I think, by Q1 FY26. This is clearly as per the management commentary across the sector, not just IndusInd. Q3 profitability numbers also were weak, but they were in line with market expectations. But then you look at the business, I mean, that continues to grow. Retail deposits are up about 14%. Vehicle finance disbursements are up about 25%. Corporate loan book grew about 16%. So because of this, we have seen some amount of bounce back. And if you look at the financial parameters, CASA ratio is 35%, NIMs at about 3.93, a tad bit below, the Q2 numbers. PCR is 70%. So downside from here seems limited. And I would revise my long-term target to about 1,375, which is one-time adjusted book value for FY27.
Okay, all right. Very quickly, Amrish, could you tell us on the cement pack you like anything? JK Lakshmi Cement comes out with a set of numbers later today, and that one's at the high point of the day. What's your take?
No, I think from here on, we should actually see the cement sector as such doing decently well, because I see that the execution should actually take off. I mean, although in the budget, the top line like numbers were more or less kept same like last year. But then I see the execution picking up. And along with that, the reality space also is doing well. So we should see margins improving for the cement sector overall. And here my pick would be the largest in the lot is Ultratech.
Okay, all right. Well, Amrish, request you to stay with us. We'll just wind down the markets and come back to you on markets forward. Well, it was not a bad day of trade. The Nifty goes home with a cut of around 70 points, but the Nifty Bank was up close to around 80 points, offsetting any kind of weakness that we saw on the non-banking names. What did well? The reason we managed to end in the green was because of HDFC Bank. That led the fight back in today's trading session. In terms of result reactions, SBI was a bit of a subdued set of numbers. However, positioning was such that the stock was down only around 1.5%. Trent, that's been the big outperformer, results not up to market expectations. So that's why that went home with a cut of around 8%. On the flip side, Cipla was the stock that did very, very well in today's trading session. But you had a lot of gainers in trade. Redington, the numbers were quite good. The stock goes home with a solid gain. You had Wellspun Corp as well. The stock initially did see some profit taking, but the commentary was very, very good. So that's why that stock was flying away in today's trading session. Reliance Power, Reliance Infra, both of them did pretty well in trade. And Care as well was up close to around 7%. So a good trading session, one would say. Yes, the headline index, we were down close to around 60, 70 points or thereabouts. But otherwise, the breadth of the market, even Stevens, and you had plenty of opportunities there in the broader markets.
Well, just want to point out Swiggy. Swiggy ends with a cut of about 6.5% as competition expansion weighs on the Q-commerce margins. So the stock took a bit of a tumble. Other losers included Kalyan Jewelers, 4.5%, REC, Vishal Megamart. You had NHPC, Suzlon Energy. These were some of the big volume-led losers today. But markets ending in the red, bid caps underperform. Some jitters, anxiety perhaps ahead of the RBI policy tomorrow. We're going to take your leave and closing bell, but don't go anywhere. On the other side is Markets Forward.
Sees faster, and so we've been waiting for this moment for a long time. I think we're gonna deliver something that can help with it, and now people have to go build with it. Other side of it, the cost for a given unit of intelligence 1 year later seems to fall by about 10x. Moore's Law was a 2x every 18 months for the number of transistors on a chip, and that changed the world if you waited a few decades. But what's happening with the reduction in cost in AI models is extraordinary. Now, I don't think it means that the world's going to need any less AI hardware, because you bring the cost down and just the people are going to use it for a lot more things. The total number of dollars will go up. But that's a really exciting thing happening.
Dalal Street fails to hold on to opening gains. Nifty and Sensex end 0.25% in the red. Broader markets underperform. The mid-cap index falls over 1%.
The shares of State Bank of India decline after third quarter margin shrink to a 30-month low. Deposit growth rises by just 2% sequentially, but asset quality improves and slippages drop to a 2-year low.
Trent delivers an inline set with moderate expectations in the third quarter. Revenues are higher by 34% on a year-on-year basis, but the stock tumbles 8%. Meanwhile, Swiggy's losses mount on higher investments in quick commerce, but the digital platform business maintained its guidance to achieve EBITDA break-even in food delivery by the third quarter of FY26. Hello and welcome to Markets Forward, your go-to show where we aim to get you all of the key data points and all the day's action. Plus, of course, we gear you up for the next trading day. I'm Surabhi Upadhyay. With me is my colleague Vinny. Hi, Vinny.
Hi, Surabhi. And an interesting day today, right? Coming in. Like yesterday also what we saw was range bound. Today also that 23,500, 23,700 is where the Nifty managed to roam at to off the day's low, off the day's high, somewhere in between and managed to close and ending this elongated week for us at least, right?
No, absolutely. I think profit taking was the order of the day, and that's exactly what transpired ahead of the RBI policy. And maybe you can't fault the bulls for that because the Nifty has been on a winning streak. It's recovered almost 800 points from the lows of 22,000, nearly 800, which is where we were just before the budget. So from those lows, the Nifty has moved higher. In fact, let's get the intraday chart up on the screen for you. The end result was 0.4 lower, slightly off the lowest levels of the day. But yes, the fact is that Nifty couldn't really make a meaningful attempt at the 50-day moving average, which comes in around the 23,772 mark. It was around that market open, drifted down from there and never really kind of recovered. The mid-cap index, like we told you in the headline, was even weaker. So if you look at the advance decline ratio, it was absolutely neck to neck. I mean, slightly more than one. You can say about 1.5 stocks declining for every one that was advancing. 1,200 advances, 1,400 declines. So it was a big fight between the bulls and the bears that was playing out today. And, Vinny, if we talk about the sectors as well, barring the Bank Nifty, which was relatively better off, it's awaiting that big cue from the RBI tomorrow where the rate cut is expected. Barring this sector, most other parts of the market were weak. Consumer, real estate, PSU stocks. So it was like a all fall down kind of a market, barring a couple of interesting result reactions, which we'll talk about.
Absolutely interesting result reactions. And also, Surabhi, let's not forget pharma. That was holding out some bit of a green. We had some good companies come out with their results yesterday, some carry forward con call highlights. So pharma was some bit of a green. But on the show, we have an exciting lineup for you all. And what we have for you all in store today, we'll start with the top movers and shakers for the day today with Ormas. And then we'll move on to the stocks for the day, which is SBI, Trent, as well as Swiggy. So stay tuned in as we tell you why these stocks were in focus in today's trading session. Last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading session. On that note, let's get started with our first segment for the day. And Hormaz is here to tell us which are the top movers and shakers in today's trading session, which are the stocks that were moving today. Hormaz.
One key takeaway, if the street wants to reward you, it will reward you disproportionately without stopping. But if it wants to beat you out of shape, it will without any worries. Take a look at this. Trent, 8.5% lower after its results. It was not an extreme reaction in the first few minutes, but then the stock was just one-way traffic on the downside. SBI 2 ending at the lowest point of the day. Redington was an earnings reaction as well, ending on the positive side, 6.5% higher on that. And as well as REC, the loan growth being below its guidance, and Kansai Nerolac, another earnings reactions as well. As I spoke of rewarding, before that, because the RBI policy ahead of that, the real estate names were in focus today. Macrotech ending at the lowest point of the day, as did Phoenix Mills and Godrej Properties. Some pressure seen in these real estate names, also Oberoi Realty and Prestige Estates. Almost all the stocks in the real estate index ended lower in today's session. I talk about rewarding stocks after results. Abbott India is one such name. Was up yesterday, up today as well. Solar Industries, after the management cut its guidance, ending 6% lower, and Castrol moving higher yesterday and even higher today, 8.5% higher on that stock as well. And some of the other poor commentary reactions being from Page Industries and of course from Swiggy. We'll talk more on that as the show goes by. And lastly, on the volumes front, GSK Pharma, the top volume-led gainer today, 14.5% higher. Also ably supported by stocks like KNR Constructions and Eris Life, which which gained anywhere between 3 to 5%, and also some other names that contributed to the volume front. Back to you guys.
Okay, absolutely, Hormuz. Thanks very much. Yes, indeed. Very, very striking result reactions and, stock moves playing out in the market today. Thank you for that. Well, let's quickly welcome in our guests. We have Amrish Baliga joining in on the fundamentals, and also Ruchit Jain, Vice President of Equities at Motilal Oswal. He looks at, of course, technicals. Thanks very much for being with us, gentlemen. Ruchit, let me ask you first, because levels are important. The market giving off a little bit of what's been a good rally last 7-8 sessions. We've managed to climb back almost 800 points. What is the next level for the Nifty to keep in mind on the downside?
Yeah, hi, very good afternoon, Surbi. Well, definitely a lot of factors have changed, which has led to this pullback move. Firstly, we have seen that US dollar index has seen some cool off from the highs of 110. So the 10-year bond yield has cooled off from the highs, and these two are the main factors since the month of October, which were worrying our markets. Now, from the lows of 22,800, where the momentum readings were oversold, we have seen a pullback move. And especially, the FIs have started trimming some of their index futures, at least short positions. Day before yesterday, we had around 10% long short ratio, which has now improved to 18% as on yesterday. So we believe that on the higher side, 23,900, 24,000 would be the next resistance where the 100 DMI is coming in. So that level could be tested once, before we go into the a broad consolidation phase. And on the lower side, 23,300 is the immediate support to watch out for. So we expect another leg of up move from current levels towards 23,900 to 24,000, and then probably maybe we should see a phase of consolidation in the markets.
Okay. So keep an eye out on those levels. Maybe probably after that level, we'll see some bit of a consolidation. But let's move on and actually talk about the State Bank of India, which also reported their Q3 numbers. We are seeing a decline that came in the stock today. Margins saw some bit of a decline and shrinkage, and that was at a 30-month low. Abhishek Kothari is joining with us to give us details on SBI. What did they miss on what was it that they were managing to do well in?
Well, they missed the cost of funds. Cost of funds have increased massively compared to deposit growth. And earlier, like a couple of quarters ago, they did, bring up the loan growth versus lower yield. So that has also contributed to net interest margin impact this time around. So net interest margin is the weak point in Q3 FY25 results. The overall net interest margin is at 14-quarter low, led by domestic net interest margin at 15-quarter low. International net interest margin is at 7-quarter low. Deposit growth is weak. Overall deposit growth is just 10% YOY and about 2% sequentially. Compared to this, the interest expense have gone up by 13.5% YOY and about 5.2% sequentially. So that's impacted the NII this time around. Cost to income ratio is at 4-quarter high of 55% versus 48.5% in the previous quarter. What's worked for them in the results is that the credit deposit ratio is at 23-quarter high. The quarterly annualized slippage ratio has declined on a sequential basis to 0.4 versus 0.5%. Decadal low or even more gross NPA ratio is one of the lowest that you are seeing in the last 10 years or even more. It's come in at 2.07% when compared to 2.13% in the previous quarter. And robust fee income growth. Fee income growth was higher than the overall loan growth, growing at 16.5% YOY and about 6% sequentially. So the P&L with reference to ARPOL, the NII is below ARPOL. However, thanks to lower provisioning, their PAT is ahead of ARPOL. Back to you.
Sure, Abhishek. Thank you so much for that. Amrish, I'm going to take this to you. SBI seeing such a fall, in terms of the numbers, nothing exciting, right? NIMs at a 14-quarter low is what Abhishek is highlighting. We had weak deposit growth as well. What are your thoughts on in terms of when you're looking at SBI as a stock? And given that the fall, does it become an attractive bet to look at now?
In fact, I mean, some of the disappointments which clearly you just spoke about, I think clearly the cost of funds have gone up. I think that's because of chasing those high-cost deposits. And we have seen deposits going up about 13.5%. And again, let us not really go by the numbers which have been shown in the net profit growth, which was about 84%. But then that was basically due to decline in provisions, Y and Y. So overall, the earnings were a bit of a disappointment. So I think we should see a further correction. Possibly we could see the stock closer to about 680 or 700.
680 or 700 on State Bank of India. Okay. Ruchit, let's talk about not just SBI, actually other banks, Bank Nifty, trades that you will look at, because beyond earnings, obviously there's a policy tomorrow. So anything in financials?
I think within the banking space, if we see the recent up move, then it has clearly been led by the private sector banks rather than PSUs. And another volumes action also is flowing more into the private sector banks such as Kotak Bank, Axis Bank, rather than the PSU names. So I would tend to avoid taking any trade setups on PSU banks as of now. But yes, within the private banks, I think Kotak and Axis, both the stocks looks quite positive. Kotak has already shown a good relative outperformance compared to other private sector names. In last 1.5 months, the price volume action is good over there. So we believe that one can look to buy Kotak Bank with stop loss below 1850 for potential targets around 2050 to 2100 in the short to medium term.
Okay. All right, got it. Stay on. We'll come back to you for more questions. But now let's look at a couple of consumer earnings, which both of them had like really sharp reactions playing out. First, of course, is Trent. There was almost no stopping the fall today. 6, 7, 8% finally by the time we closed out. At a time when the top line numbers seem more or less in line with expectations that have obviously come down over the passage of time. Let's go across to Mangalam. Mangalam, I don't know if any of the analysts saw this coming, but what are the internals saying? What do you make of the numbers?
Well, if you look at the Trent stock, it was down 8%. You wouldn't believe that the company reported 35% revenue growth, 35% EPS growth, and 18% margins in an industry where consumer sentiment is weakening. But remember, this company has been used to showing over 50% sort of revenue growth earlier, and the last quarter is when they disappointed the street by growing at 39% versus expectations of 45%. This time around, the analysts moderated their expectations to 35% on the top line and nearly 35-40% on the bottom line as well. And as a result of which, the company met those moderate expectations. The stock, after having corrected 30% from the highs as well, was trading, from a peak of 120 times to about 80 times. So valued perfectly, so no room for disappointment. In fact, the street was hoping for some sort of positive surprise coming by because of the festive tailwinds, but no, the company reported in line with moderate expectations sort of performance. And the key disappointment actually was the like-for-like growth was at high single digit, which told you that most of the revenue growth came in on account of store expansion, and out there as well the company is planning some store optimization. So when a stock trades at 80 times with 34% EPS growth, it's trading at a PEG ratio or price to earnings growth ratio of around 2 times, which was pretty similar to the time when the company grew at around 50-60% and the valuations were around 120 times.
Absolutely. Thank you so much for that, Mangalam. But do stay on with us because Swiggy is another stock that you are tracking and that has also fallen 5%. And this is after a mixed bag of numbers was reported by the company in Q3. Take us through those highlights for Swiggy as well.
Well, Swiggy reported a mixed set of numbers this time around. If you look at the overall performance of the company, the food business did a lot better than its competitors. So food GOV grew at around 19%. It was the Q-commerce business where, a lot of growth was built in. The company grew at just 88%. I call it just 88% because its competitor, Blinkit, grew at around 120% on a much larger base as well. And it's this investment in the quick commerce space which has led to the company report a big EBITDA loss, and as a result of it, net profit loss, or rather net loss of close to around 800 crores as well. So the company reported a mixed bag with food business doing a lot better, but investments in quick commerce and the sort of uncertainty that there is with regards to competition out there has the street a little worried. If you look at the overall performance of the company, the food delivery business saw margin expansion as well, and the company did stand by its guidance of becoming EBITDA positive by the third quarter of FY26, and the quick commerce business being contribution margin positive by third quarter of FY26 as well. But the street was in the mood for profit taking today. The stock had already corrected 13% since Zomato's results and 30% from peak. But today, despite that, saw a big gash down about 7% and very actually closed below its issue price of 390 rupees.
All right, Mangalam, thanks very much. Yeah, big blow on both of these stocks. Rujit, very, very quickly on Trent, do you see any support levels? Stock's already down 35% from the peak.
I think the stock had seen a significant run-up in 23 and 24, and now it seems to be retracing that entire uptrend. And 50% retracement of this entire previous rally is coming somewhere around 4,800, 4,750. So not around current levels, but I think the stock would could see these levels around 4,750 to 4,800 where the support would come in.
Okay, Richard, thank you so much for joining with us, as well as Amrish. Thank you so much for giving us your time and talking to us about the stocks that were in focus as well today. But on that note, we're going to step into a very short break. We'll get you the top corporate voices along with the key market events to watch out for on the other side of the break.
had a lot of evidence so far that Trump's tariffs are looking transactional rather than actual tariffs. In other words, we've seen tariff announcements for Colombia, for Mexico and Canada, all either reversed or delayed. And the only country where we really do have increased tariffs with retaliation, of course, is in China. And so I think that's generating a huge amount of uncertainty. I mean, investors do not like uncertainty. Companies don't like uncertainty. It's very hard to say where we go from here. I do not assume that we've seen the end of any possibility of tariffs on countries like Mexico and Canada. But my word, the speed of events is very confusing, and investors, I think, are therefore very nervous about it. And it's interesting, the US is underperforming the developed markets this year. As you've noted recently, the dollar's lower. So this is all, I think, creating a lot of uncertainty, which I think will have an impact on investor behavior.
Welcome back. You're with us on Markets Forward. Let's take stock of the big corporate voices that we picked up during the course of the day. Kansai Nerolac gained over 3% after its third quarter numbers. Speaking to CNBC-TV18, the firm's management said that its decorative volume growth was between 1% and 2%. It added that the company is expecting to see good growth for the segment in the next quarter as well. The endeavor, the firm said, was to maintain EBITDA margins of around 13%. Meanwhile, Sula Vineyards failed to deliver in the third quarter. The company's management said the margins in Q3 had bottomed out but expected to see an improvement from the next quarter itself, and the improvement could be 250 basis points. The firm says that they're expecting FY26 to be much, much better. Let's move on, Vinny. We have the next set of companies, PVR.
Absolutely, PVR Inox. We spoke to Ajay Bijli of PVR Inox, who said that he doesn't think the fourth quarter will be as good as the third quarter. However, the company has an exciting pipeline ahead, and Ajay Bijli said that he is expecting 2025 to have a better occupancy level, while ad revenue momentum is expected to sustain. The company sees headroom for growth on ticket pricing. That's not all. We also had a conversation with the management of Hexaware, and they said that it has strong track record of outperforming the industry over several years and was confident in its ability to maintain this momentum. The firm added that it expected to sustain its current levels of adjusted EBITDA margins and said that India and the Middle East represented key growth opportunities for the company. It has also set an ambitious aspiration of getting to $3 billion in revenue. Last but not the least, we also had the management of InfoEdge that said that and are confident, not even as the firm's management shield for giving the guidance, shied away from giving the guidance. However, it did say that recruiters' activity was seeing an increase while non-recruiter was doing well. The management said that 99 acres was now cash neutral, while Jeevan Sathi was flirting with break-even.
And before we wrap, let's get you the key events to watch out for. Abhishek is here with the details.
Well, the big RBI policy will be tomorrow, the 1st of 2025. Interest rate decision will be a key factor to watch out. Our polls suggest 25 basis point rate cut tomorrow by RBI. Also, watch out for where the cash reserve ratio and etc. are being kept by RBI, and any leeway with respect to risk weight asset to advances ratio that they have put for banks, which had been increased last time for NBFC's loans, that will be tapered down or not. So, Forex reserve data will be also keenly watched. It will come out from RBI. Last time it was around $629.56 billion. Key stocks that will go ex-dividend tomorrow is CAMS, rupees 17.5 interim dividend, GAIL with respect to 6.5 rupees of interim dividend, and Nestle India with respect to 14.5% of interim dividend. Earnings season, so results tomorrow are LIC, M&M, Oil India, Ola Electric, Vocard, as well as Zaggle. Also Dredging Corporation, Edelweiss, Gokaldas Export, SCL Infosystem, Honeywell Automations are some of the key results to watch out tomorrow. Back to you.
Okay, Abhishek, thank you so much for that. And also 70% of the market participants polled by CNBC-TV18 are expecting a 25 basis point rate cut from the RBI tomorrow, while 60% are betting on RBI to announce additional liquidity measures in what will be the new Governor Sanjay Malhotra's first policy. Ritu Singh is here to give us a report on that.
For the first time in nearly 5 years, the Reserve Bank of India could kick off a rate-cutting cycle, making Governor Sanjay Malhotra's debut policy meeting one of the most closely watched in recent history. Now, RBI has been injecting massive liquidity into the banking system in recent days, which some interpret as a precursor to a rate cut, despite the relatively high inflation. So the CNBC-TV18 monetary policy poll shows 70% of market participants and economists are betting on a 25 basis point rate cut this time, driven by the need to support growth. But ignoring the rupee's depreciation can prove tricky, which is why 30% of the respondents still voted for a dovish hold. Now, liquidity remains tight in the system, but a cash reserve ratio cut at this point seems unlikely. But 60% of the respondents do expect additional liquidity easing measures like more OMOs, longer duration repos, or a cut in the incremental CRR for NRI deposits. Of course, markets will also watch closely for any clarity on the new LCR norms, which are set to kick in from the 1st of April. Now, external factors are going to add a lot of complexity to this policy. RBI is likely to acknowledge the risk from the tariff threats and stay nimble, but a small section of the market believes that inflationary tariffs and a weakening rupee could be used as an argument to push out rate cuts. But the broader consensus is RBI will allow a gradual rupee adjustment while ensuring stability. Now, markets are already pricing in steeper rate cuts beyond February, with most expecting anywhere between 75 to 100 basis points cut in this cycle to give a helping hand to growth. Now, despite these expectations of rate cuts, the monetary policy stance is likely to be left unchanged at neutral. But as for the tone, 40% do anticipate a dovish tilt, while the majority expect it to be neutral. Now, growth expectations are softening. 90% of our respondents predict that RBI will lower its FY25 GDP forecast to 6.4 to 6.5%. That could further strengthen the case for easing. But the inflation forecast is unlikely to be tinkered with in this policy. So all eyes are going to be on Governor Malhotra's debut policy move. Will he pull the trigger on a rate cut or stay cautious amid global risks? The stakes are high and the markets are going to be watching.
Oh, they definitely will. Ritu, thank you so much for getting us that heads up. So 25 basis points rate cut, that's the big expectation in the equity and in the bond markets alike. So let's see if we get that, Vinny.
Absolutely. But with that, it's a wrap on this edition of the show. Thank you so much for tuning in. Don't go anywhere. More news and updates on the other side.
कुछ लोगों को अब जब एआई की बात होती है, कुछ लोगों को अब ये शब्द फैशन में है तो बोला जाता है, लेकिन मेरे लिए सिंगल एआई नहीं है, डबल एआई। भारत की डबल ताकत है। एक एआई आर्टिफिशियल इंटेलिजेंस, दूसरा एआई एस्पिरेशनल इंडिया। हमने स्कूलों में 10,000 टिंकरिंग लैब्स शुरू किए और आज उन टिंकरिंग लैब से निकले बच्चे रोबोटिक्स बना करके लोगों को चकित कर रहे हैं। और इस बजट में 50,000 नए टिंकरिंग लैब्स उसका प्रावधान किया गया। भारत वो देश है जिसके इंडिया एआई मिशन को लेकर के पूरी दुनिया बहुत आशावादी है और विश्व के एआई प्लेटफॉर्म में भारत की मौजूदगी एक महत्वपूर्ण स्थान प्राप्त कर चुकी है।
This was the third consecutive year that the BMC budget was presented to an administrator and not to a standing committee. Why? Because the term of the corporators ended in March 2022 and the elections for the new term and the new corporators are yet to be held. Now this 74,427 crore rupees budget, out of this an allocation of 43,162 crore was made for capital expenditure, 5,100 crore rupees for roads and traffic department, 5,807 crore rupees for Mumbai Coastal Road project, 3,039 crore rupees for storm water drain department, and 650 crore rupees for sewage operation department. For key public services, rupees over 4,000 crores were allotted to education department, over 7,000 crore for health department, 261 crore rupees for fire department, 309 crore rupees for disaster management, and 220 crore rupees for the garden department. BMC announced that it's going to start 250 new public clinics, also known as Apla Dawakhana, all over the city. One interesting initiative announced by the BMC was the introduction of cyber awareness program for students. It will serve two key purposes. One will be to ensure that the students learn how to use the internet in a safe manner and to keep them safe from cyber fraud. BMC also focused on environment initiatives and projects like promoting eco-friendly cremation and proper disposal of residue from idle immersion. These are the projects which will take place under environmental related initiatives in the next few months. We also spoke to Bhushan Gagrani, the BMC commissioner himself. This was the first time that he presented the BMC budget. Listen to what he has to say about this BMC budget. So your budget also mentioned that you guys are planning on imposing a tax on the commercial properties in slum areas.
That's right.
If you can elaborate that. So from when this new tax will be levied?
It is actually not a new tax. In fact, we are enhancing our assessment net. Under
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty failed to hold early gains. The mid-cap see sharper cuts. Rupee falls to a new low. $1 is now worth more than nearly 88 rupees. 70% of market participants polled by CNBC-TV18 expect a 25 basis point rate cut from the RBI tomorrow. 70% also expect rate cut of at least 75 basis points in this cycle. 60% are betting on the RBI to announce additional liquidity measures in what will be the new Governor Sanjay Malhotra's first policy. China challenges the new US tariffs at the World Trade Organization and accuses the Trump administration of bullying. Stock markets across the world attempt to rebound. Gold prices remain near record highs. Uproar in Parliament after US government releases a video of Indian nationals in handcuffs and chains being deported. External Affairs Minister says India is engaging with the US to ensure deportees are not ill-treated. Also promises to crack down on the agents facilitating illegal immigration. Shares of State Bank of India decline after third quarter margins shrink to a 30-month low. Deposit growth rises by just 2% sequentially, but asset quality improves and slippages drop to a 2-year low. Hexaware all set to return to the Raj Street with the 8,700 crore rupee IPO, the largest by an IT company till date. Private equity player Carlyle will be diluting more than 20% of its stake, taking its shareholding to just over 74%. More than 100 employees at the Samsung plant on the outskirts of Chennai are up in arms once again, demand the reinstatement of 3 workers who were suspended for alleged connections with the workers' union. Madras High Court has allowed the union to register workers. The head of United Nations warns against ethnic cleansing after US President Donald Trump proposed to own the Gaza Strip and resettle Palestinians elsewhere. Even US allies like Germany, UK and many countries including Saudi Arabia, Turkey, China and Brazil have rejected Trump's proposal. All right, let's start with the market action. Sensex and Nifty failed to hold early gains to end the day in the red. Sensex lost over 180 points and is barely clinging on to the 78,000 mark. Nifty lost nearly 100 points. Mid-caps saw sharper cuts with the mid-cap index losing 680 points. Financial stocks managed to buck the downtrend with the Nifty Bank index ending in the green. Right, in the money market, the rupee hit a new low against the US dollar. The rupee weakened by about 11 paisa today. $1 is now almost worth 88 rupees.
10-year bond prices and the yields remain largely flat ahead of the RBI monetary policy decision tomorrow. 70% of market participants polled by CNBC-TV18 are expecting a 25 basis point rate cut from the RBI tomorrow, while 60% are betting on the RBI to announce additional liquidity measures in what will be the new governor Sanjay Malhotra's first policy. Now, Ritu Singh is here with the report.
For the first time in nearly 5 years, the Reserve Bank of India could kick off a rate-cutting cycle, making Governor Sanjay Malhotra's debut policy meeting one of the most closely watched in recent history. Now, RBI has been injecting massive liquidity into the banking system in recent days, which some interpret as a precursor to a rate cut, despite the relatively high inflation. So the CNBC-TV18 monetary policy poll shows 70% of market participants and economists are betting on a 25 basis point rate cut this time, driven by the need to support growth. But ignoring the rupee's depreciation can prove tricky, which is why 30% of the respondents still voted for a dovish hold. Now, liquidity remains tight in the system, but a cash reserve ratio cut at this point seems unlikely. But 60% of the respondents do expect additional liquidity easing measures like more OMOs, longer duration repos, or a cut in the incremental CRR for NRI deposits. Of course, markets will also watch closely for any clarity on the new LCR norms, which are set to kick in from the 1st of April. Now, external factors are going to add a lot of complexity to this policy. RBI is likely to acknowledge the risk from the tariff threats and stay nimble, but a small section of the market believes that inflationary tariffs and a weakening rupee could be used as an argument to push out rate cuts. But the broader consensus is RBI will allow a gradual rupee adjustment while ensuring stability. Now, markets are already pricing in steeper rate cuts beyond February, with most expecting anywhere between 75 to 100 basis points cut in this cycle to give a helping hand to growth. Now, despite these expectations of rate cuts, the monetary policy stance is likely to be left unchanged at neutral. But as for the tone, 40% do anticipate a dovish tilt, while the majority expect it to be neutral. Now, growth expectations are softening. 90% of our respondents predict that RBI will lower its FY25 GDP forecast to 6.4 to 6.5%. That could further strengthen the case for easing. But the inflation forecast is unlikely to be tinkered with in this policy. So all eyes are going to be on Governor Malhotra's debut policy move. Will he pull the trigger on a rate cut or stay cautious amid global risks? The stakes are high and the markets are going to be watching.
Right, the markets are going to be watching. Thank you, Ritu, for that. Lata Venkatesh is here with on what we can expect from the governor's first policy.
Well, it's one of the most awaited monetary policies, and the rate cut is priced in. The ubiquitous question is rate cut hai aur kya? That's the question. Will there be a CRR cut? More than a CRR cut, the market is going to watch for whether he says, I will give liquidity as and when required, or whether he says, I will keep the liquidity surplus. So the difference between adequate and ample liquidity will be very much watched. Another question that people will watch is there a rate cut in April? Is he signaling more dovishness? That's not priced in yet. And then about the regulations. You know, the RBI has been pulling banks from not growing credit too fast till deposit catches up. They have been unhappy about the credit deposit ratio being high. Do they say, okay, now the credit deposit ratio is fine? That will be much watched. And then, of course, the three big regulations that are expected, the liquidity coverage ratio LCR rules, the ECL, expected credit loss rules, and the higher provisioning for infrastructure projects. Does he postpone all of them in no uncertain terms? That's what people will watch out for. And finally, an expectation, a hope, that the higher risk weight on NBFC loans, it was raised from 100 to 125%. Will that be reduced? These are the things people are waiting for, much more than the rate cut which is priced in. Well, my own two-bit, the governor is unlikely to say, I will keep liquidity surplus. He has to worry about the rupee. Nor can he easily signal a rate cut in April as well, because then people will short the rupee. It becomes cheaper to short the rupee and go into dollars. He will, of course, clarify on LCR, saying that, you know, this is wartime. You don't bring out structural reforms at a time like this, so he will definitely defer them. But asking for a reduction in risk weights on NBFC loans, which banks give NBFCs, I doubt that will be there. So looks like the market will have something to cheer, but let's see.
Thank you, Lata, for that. Moving on, China has accused the United States of making false allegations about its role in the fentanyl trade to justify tariffs on Chinese products. The complaint has been lodged with the World Trade Organization. In the filing, China said that the measures were discriminatory and protectionist and violated trade rules. WTO's settlement framework allows 60 days for dispute consultations, after which China has the right to adjudication by a panel of judges. And staying with China and the US Postal Service has agreed to resume accepting shipments from China and Hong Kong. This comes less than 12 hours after announcing it would stop doing so. The Postal Service said it's working with Customs Department to implement an efficient collection mechanism for the new China tariffs to ensure the least disruption to package delivery. Now, the move comes amidst tariff war between the two countries. All right, the big story back home, uproar in Parliament after the US government released a video of Indian nationals in chains and handcuffs being deported back to India after trying to enter US illegally. A video posted online by the US Border Protection Force showed Indians being boarded into the military aircraft. The video has music overlaid on it and shows people in chains and handcuffs. The head of the US Border Patrol called it successful deportation of illegal aliens to India. This was the farthest deportation undertaken by using a military plane. Opposition parties protested what they called inhuman treatment of the Indian nationals by the US. Now, opposition lawmakers, including Congress leader Rahul Gandhi, protested outside the parliament. Some wore handcuffs and carried placards that read, "Humans, not prisoners." External Affairs Minister Jaishankar said India is engaging with the US to ensure deportees are not ill-treated. He also promised to crack down on the agents facilitating illegal migration.
Deportations by the US are organized and executed by the Immigration and Customs Enforcement ICE authorities. The standard operating procedure for deportation by aircraft used by ICE, that is effective from 2012. I repeat, that is effective from 2012, provides for the use of restraints. However, we have been informed by ICE that women and children are not restrained.
जब हम वहाँ पे पहुँचे, वहाँ की गवर्नमेंट ने कोई भी एक्शन, जैसे हम कोई भी एक्शन लेते हैं, लीगली एक्शन लेते हैं, हमारी सुनवाई होती है, ऐसे कोई सुनवाई नहीं करने दी है। कोई हमारे बयान नहीं हुए, कोई हमने लॉयर वगैरह नहीं हमारा हुआ, तो उन्होंने हमसे बिना पूछे कि तुम क्यों आए हो, क्यों अपनी कंट्री छोड़ी है, हमसे कुछ नहीं, हम शरण मांगने गए थे, कुछ वैसा नहीं, हम क्रिमिनल नहीं है। उन्होंने ऐसा ट्रीट किया, हमें एक जंजीरें बांध के, जैसे हाथों में जंजीरें और पैरों में जंजीरें, लेडीज़ बच्चों जो 18 साल से हैं, 18 साल से ऊपर हैं, सबको जंजीरें बांध के।
बहुत बातें की गई कि मोदी जी, ट्रंप जी बहुत अच्छे मित्र हैं और मोदी जी ने ऐसे क्यों होने दिया? क्या हम अपना जहाज़ नहीं भेज सकते थे उनको लेने के लिए? इस तरह से क्या इंसानों के साथ बर्ताव किया जाता है कि उनको हथकड़ियाँ पहना के, बेड़ियाँ पहना के भेजा यहाँ पे?
Prime Minister Modi is speaking in the Rajya Sabha. Let's cut across.
जिस प्रकार से बदलाव नजर आ रहा है, फल के रूप में हम अनुभव करने लगे हैं। हमारे गवर्नेंस का भी मूल मंत्र यही रहा है, सबका साथ, सबका विकास। हमारी ही सरकार ने SC, ST एक्ट को मजबूत बनाकर दलित और आदिवासी समाज के सम्मान और उनके सुरक्षा के संबंध में अपनी प्रतिबद्धता भी दिखाई और हमने उसको बढ़ाया। आदरणीय सभापति जी, आज जातिवाद का जहर फैलाने के लिए भरपूर प्रयास हो रहा है, लेकिन 3 दशक तक दोनों सदन के ओबीसी एमपीस और सभी दलों के ओबीसी एमपीस सरकारों से मांग करते रहे थे कि ओबीसी आयोग को संवैधानिक दर्जा दिया जाए.
Right, shares of State Bank of India declined after third quarter margins shrunk to a 30-month low. Now, deposit growth rose by just 2% sequentially. However, asset quality improved and slippages dropped to a 2-year low. Abhishek Kothari is here with more. Abhishek, tell us more about the bank's performance.
Well, SBI's result was weak on the net interest margin front, and that disappointed massively. So overall net interest margin is at 14-quarter low. The domestic net interest margin is at 15-quarter low, while the international net interest margin is at 7-quarter low. What's not worked in the net interest margin is that despite loan growth being healthy, they have not been able to command on the yield side, and that's impacted them. So the deposit growth was only 10% YOY and about 2% sequentially, but their interest outgo or interest expense growth was much higher. So cost to income ratio is at 4-quarter high of 55.1% versus 48.5% in the previous quarter. On the positive side, the credit deposit ratio is at 23-quarter high. The annualized slippage ratio, that is the quarterly annualized slippage ratio, is at 9-quarter low of 0.4% versus 0.5% in the previous quarter. Analysts were working with a higher slippage ratio this time around. So their asset quality is the best in last 10 years or even more. Gross NPA ratio has declined to 2.07% versus 2.13% in the previous quarter. Robust fee income growth. Fee income has grown higher than the overall loan growth also. So it's grown at 16.4% YOY and close to 6.5% sequentially. With reference to the P&L to ARPOL, the NII was 2.7% below ARPOL. However, the profit was higher by 5% to ARPOL. Back to you.
Right. Thank you, Abhishek, for that. On that note, we'll slip into a short break. Coming up next, more than 100 employees at the Samsung plant on the outskirts of Chennai are up in arms against. And more details when we return.
The properties which are in the slum, however, which are being used for the purpose of commercial, they were not covered. So this is for the first time we are doing the survey and bringing them in the tax net. Not necessarily that we will be imposing huge tax. It's a normal tax. It's not a very huge tax. However, the coverage will be given to our commercial properties.
So BMC has not introduced any new project this time. In fact, you have focused. Correct. Yeah. But sir, does it mean that is there any cause for fiscal concern, sir?
No, there is no fiscal constraint. We have enough adequate cash flow as well as resources.
हमारे देश में एक प्रधानमंत्री हुआ करते थे उनको मिस्टर क्लीन करने कहने की एक फैशन हो गई थी उस प्रधानमंत्री जी को मिस्टर क्लीन कहने की फैशन हो गई थी उन्होंने एक समस्या को पहचाना था और उन्होंने कहा था कि दिल्ली से 1 रुपया निकलता है तो गांव में 15 पैसा पहुंचता है अब उस समय तो पंचायत से लेकर पार्लियामेंट तक एक ही पार्टी का राज था पंचायत से पार्लियामेंट तक एक ही पार्टी का राज था और उस समय उन्होंने सार्वजनिक रूप से कहा था कि 1 रुपया निकलता है 15 पैसा पहुंचता है बहुत गजब की हाथ सफाई थी पंद्रह पैसा किसके पास जाता था ये देश का सामान्य मानवी भी आसानी से समझ सकता है आदरणीय सभापति जी देश ने हमें अवसर दिया हमने समाधान खोजने का प्रयास किया हमारा मॉडल है बचत भी, विकास भी। जनता का पैसा जनता के लिए। आदरणीय सभापति जी, आजकल मीडिया में ज्यादा ही चर्चा हो रही है, सोशल मीडिया में और अधिक हो रही है। कुछ नेताओं का फोकस घरों में जकूजी पर, स्टाइलिश शावर्स पर, लेकिन हमारा फोकस तो हर घर जल पहुंचाने पर है। आदरणीय सभापति जी, हमने ये जो अलग अलग कदम उठाए, उससे लाखों करोड़ रुपए की बचत हुई, लेकिन उन पैसों का उपयोग हमने शीश महल बनाने के लिए नहीं किया। इसका उपयोग हमने देश बनाने के लिए किया है।
Welcome back. Kia India has paid 278 crore rupees to the tax department as it faces a probe over alleged tax evasion. Now, sources have told CNBC-TV18 that tax authorities have demanded that Kia pay 1,351 crore rupees as liability for misclassification of imports. Now, Timsi Jaipuria joins us with the details. Timsi, Kia is the second auto major to be handed a tax notice in the span of 1 week. What are your sources telling you?
Well, as you rightly mentioned, Kia India has paid 278 crore rupees to the tax department, even as it faces a probe over alleged tax evasion. That's what sources have told us. Now, sources further indicated that the tax authorities have demanded that Kia India must pay 1,351 crore rupees as the liability for misclassification of imports. The company has voluntarily deposited this 278 crore rupees with the tax authorities against this total liability of 1,351 crore rupees, and Kia has paid part of this liability, even as currently it says that it is pursuing legal options. Just to remind our viewers, Finance Ministry had issued a show cause notice to Kia India on 8th of April 2024 for a period of duty evasion which is between July 2019 till February 2024. And this total liability of 1,351 crore rupees includes 1,278 crore rupees as the unpaid duty and 78 crore rupees as the interest on it. And Kia has been accused of importing components in separate consignments in order to avail lower duty benefits. Authorities say that the Kia separated import consignments to avail lower duty of 10 to 15% rather than it is actually liable to pay 30 to 35% since these are part of CKD consignments, that is completely knocked down consignments. Kia India, meanwhile, told CNBC-TV18 that as a responsible and law-abiding brand, Kia India is committed to following all regulatory requirements in our operations. We have consistently cooperated with the authorities whenever required, and we remain dedicated to ensuring complete transparency throughout
at all processes. Meanwhile, regarding the current matter, we have already filed a detailed response supported by comprehensive evidence and documentation to substantiate our stand. However, as the issue is currently under consideration of the relevant authorities, we would not be able to comment further to provide any additional details on the matter as of now. End of quote. However, they also said that they completely remain committed to the due processes and regulations. So let's see what happens finally. Like you mentioned, this is the second auto major. First auto major, Volkswagen, has already reached the High Court, Bombay High Court, challenging the demand. We need to see what is the stand that Kia India takes. Back to you.
Right. Thank you, Timsy, for that update. Moving on, more than 100 employees at a Samsung plant on the outskirts of Chennai are up in arms once again. Now, protesting employees demand the reinstatement of 3 workers who were suspended for alleged connections with the workers' union. Now, Jude Saneth has more details from the protest site.
The latest face-off between employees and management at Samsung's Sriperumbudur plant just outside Chennai have surfaced days after 3 employees of the plant were suspended by the company for allegedly engaging in activities deemed detrimental to the interests of the South Korean electronics giant and its operations in India. In fact, we're coming to you just a few meters from the plant itself, where, as you can see, a line of company buses and barricades have been erected so as to ensure that members of the public don't quite see the scale of the sit-in protests occurring just beyond this line of vehicles. But what we have been told is that well over 100 employees have been sitting in on protests demanding that these 3 employees be reinstated after their suspension itself. Now, interestingly enough, employees and members of the Samsung India Workers Union have claimed that the suspension has taken place not on account of disciplinary reasons, but simply because these employees were members of the recently registered Samsung India Workers Union. They've also claimed that Samsung does not quite want any on-ground representation of their employees engaging in any union activities, at least on campus. However, in a statement, Samsung said, and I quote, "The employees in question violated the company policy and have been suspended temporarily and will be subject to appropriate disciplinary action following a formal inquiry," end quote. Remember, this isn't the first time that issues have cropped up between Samsung's management and employees. Back in September, well over 1,100 employees staged a protest outside the plant, demanding for better representation, better pay and privileges that they said every employee deserves, post which Samsung agreed to some, if not many, of these demands. However, what we are picking up from the ground is that a breakdown between Samsung and its employees has now taken place with regard to these demands, and more importantly, with regard to representation by way of the union, these employees allege, while Samsung says this is more on account of a disciplinary issue which will be resolved or a verdict will be passed by a disciplinary committee in a few days from now.
Right, with that, it's a wrap on this edition of Business 360. More news and updates continue right here.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
For the first time in nearly 5 years, the Reserve Bank of India could kick off a rate-cutting cycle, making Governor Sanjay Malhotra's debut policy meeting one of the most closely watched in recent history. Now, RBI has been injecting massive liquidity into the banking system in recent days, which some interpret as a precursor to a rate cut, despite the relatively high inflation. So the CNBC-TV18 monetary policy poll shows 70% of market participants and economists are betting on a 25 basis point rate cut this time, driven by the need to support growth. But ignoring the rupee's depreciation can prove tricky, which is why 30% of the respondents still voted for a dovish hold. Now, liquidity remains tight in the system, but a cash reserve ratio cut at this point seems unlikely. But 60% of the respondents do expect additional liquidity easing measures like more OMOs, longer duration repos, or a cut in the incremental CRR for NRI deposits. Of course, markets will also watch closely for any clarity on the new LCR norms, which are set to kick in from the 1st of April. Now, external factors are going to add a lot of complexity to this policy. RBI is likely to acknowledge the risk from the tariff threats and stay nimble, but a small section of the market believes that inflationary tariffs and a weakening rupee could be used as an argument to push out rate cuts. But the broader
Let me welcome in Neelkant Mishra, Chief Economist at Axis Bank and Head of Global Research at Axis Capital, who's now with us. Neelkant, of course, is the number one voice that people sort of look to after the budget, and he's with us. So we're very pleased. Neelkant, good morning. Great to have you with us here. Thank you very much.
Good morning, Prashant. Thank you very much.
You know, there's so much to discuss. Let's keep it, sharp and pointed. First up, is the interpretation that the government is moving away from infra and focusing on consumption correct? Because it's got implications for markets as such. Go on.
I disagree with that because the limitations on how much the government can do on capex was clear even last year. Remember that out of the 11.1 lakh crores, 9 lakh crores was stuff that the government could control. There was 2.1 lakh crores that they had no control over. So we are hitting the limits on what the government can directly do in terms of capex. And therefore, the guidance from the government was that we will maintain capex as a percentage of GDP year onwards, that the scope for us to do more is now gone. So now they're experimenting with, for example, this 1 lakh crore that they've decided to spend on urban infrastructure, but through a competition mode, so the states need to compete for it. They have to find such avenues so that capex continues, but there is very little more they can do at the central level. So I don't think this is a stepping away from capex.
Absolutely. Neelkant, in fact, if you could just elaborate on that point, another sort of, statement that's been doing the rounds, or calculation or thought process that's doing the rounds, is that if you add up capex from the states and the capex that will be done via PSUs, and maybe we're still talking about 20% growth, almost 19 to 20% growth, and not the 10%, which is direct capex, which is in line with nominal GDP. So how would you read into this, the form and format that capex will take from here on?
No, I think those are also very interesting points, but we need to take a step back here and figure out that if gross fixed capital formation as a percentage of GDP in India is 32%, and the central government spending is about 3.7%, or say 3.5%, 3.4%, how much more can it actually contribute? So this is effectively less than 10% of overall investment to GDP in the country. Investment activity in the country is going to be a lot more dependent on how well the real estate cycle turns, how well the power generation cycle turns. And I think this almost obsession with waiting for the government to spend an extra 30,000-40,000 crores, in the larger scheme of things, these are all rounding errors. Remember that the fiscal space for the government was very limited. In fact, in the preview session that we had in your studios, we had discussed this, that, all said and done, there is only about 1 lakh crores, which is less than 0.3% of GDP in FY26, is that the government has discretion on. I think it is unwise to expect the government to be doing everything. And I don't think it needs to be doing everything. If the real estate cycle turns, if the power generation cycle turns, and both seem to be turning, we will not be dependent on the government to drive up, say, the industrial stocks or the earnings for industrial companies.
You're sounding pretty satisfied with regard to what the government has done on the capex spend front. But what about the approach to markets? How would you alter the approach to markets? Given the consumption push, they've maintained capex reasonably. But we also have this threat coming in from Trump's tariffs. So your take on the equity markets from here on, post the recent correction?
Absolutely. I was waiting for someone to say that. So the budget is now in history, right? Budget was largely as expected. There was a 1 lakh crore of tax cut for the middle class. But remember that the government is still shrinking its fiscal deficit. And therefore, the aggregate impact, or the demand on aggregate impact on aggregate demand, is actually still negative. The Trump tariffs, on the other hand, are going to be, they have triggered something which is very substantial. See, normal wars, especially if they are being fought in other jurisdictions, can actually be accretive to earnings, and sometimes they support stock markets. Here, there are political objectives being met through economic damage. So knowing fully well that this will hurt the US economy, and that if there is retaliatory action, it will hurt many parts of the economy. And on top of that, to potentially escalate it to Europe and other parts, I think all of this creates significant uncertainty for the economic forecast. And that, I think, is terrible for markets.
But you would agree there is focus on consumption now, right? That you would agree with, Neelkant? And this is after some time putting more money in. And it's not just 1 lakh crore, it's not one time, right? It's recurring. And there is a broader, I don't know whether there's messaging or it's kind of, it had to be done. The move itself is one time, and whether we'll see more moves, etc. So from stock market point of view, consumption, where will this money go according to you? And is there anything investors can do based off this?
Yeah, so that is somewhat easier to quantify. So if you look at the number of people who disclosed income to taxpayers, see, if you're earning that much but you're not paying tax anyway, you're not impacted. So we have to look at the people who pay taxes, so that this eases our job. The biggest impact is for people disclosing earnings between 12 lakhs and 50 lakhs. The number of people affected, because the last data we have is for FY23, was about 58 lakhs. If you extrapolate it to say FY26, maybe about 75 lakh. That's the number of people who will be the biggest beneficiaries of these tax cuts. And most of these people would be in the 90-95 percentile, maybe even higher. The higher ones, maybe the percentage impact will be lower. What is their discretion? What is their incremental demand going to look like? And that's mostly going to be discretionary. So I think that the impact of this directly will be mostly on the discretionary items. So, jewelry, retail, and somewhat, I think the market was responding rightly to this on Saturday, cars, two-wheelers, etc. At an aggregate demand level, remember that the deficit is still shrinking. So, and a large part of the space that is being created for these tax cuts are actually also coming from personal income taxes.
Absolutely.
So whatever you are seeing in terms of better compliance, more people disclosing higher incomes, is now the government has decided to take some bit of that and give it to what was becoming the pillar. So if you compare India's central government's fiscal math, FY19 to FY26, over 7 years, the government has so far seen a very sharp increase in personal income tax to GDP. A large part of that has actually gone into increasing capex because primary deficits are more or less back to where they were in FY19. And so going forward, if you have another lakh crores and there is no ability to spend it directly on the issues that you can control, on the areas that you can control as a central government, then you might as well give it back to the taxpayer, which was actually funding a lot of this capex. So that seems to be the political economy equilibrium.
It is the capex, it is the consumption side of the economy that suddenly gets turbocharged. Because I'm trying to understand from a portfolio shift point of view, what immediately happened on Saturdays, immediate herd mentality, right? Everybody is rushing to consumption, trying to sell out of capex. Now, do you see that only as a short-term market trade, market move, or do you think this will lead to structural shift in portfolio, especially for long-only funds, bigger institutional investors, where they need to now unload on capex a bit and go back to consumption, because you see that is as a medium-term 2-3 year cycle, perhaps?
Look, 1 lakh crore, which is less than 0.3% of GDP, being shifted to tax cut should not drive a change in portfolios. I think that we have to keep in mind that, one, the impact of this can potentially be higher. So some amount of this will be saved. Remember that this is the segment which also provides a lot of financial saving. But the likelihood of, say, buying a car on EMIs, using this to buy an apartment, a bigger apartment, and therefore pushing up the real estate cycle, and that then driving another investment activity. So I think there are many ways in which this can be spent, and it would be quite myopic to actually limit it to just saying, "Oh, let's buy all consumption stocks." Frankly, there are other parts of the economy which are also likely to get affected. And I don't think this necessarily swings the government towards more profligacy. This is a sign that the government is starting to become more profligate.
Neelkant, I'm in the mood to look ahead. So the budget we have discussed, it appears it's pretty satisfactory for you. Trump's tariffs could add an element of uncertainty, and for the time being, maybe the markets are ignoring that just for the time being, hoping that things don't get too bad. But let's talk about the RBI. That's the next big cue for the markets as well as for the economy. What are your expectations from the RBI in this uncertain backdrop? You have the rupee that suddenly moved to around 87 odd. It's showing some kind of weakness. Your take, expectations from the RBI?
So, I think the RBI's job is unenviable. There is significant volatility in global financial markets, and I think that will only intensify, because now that once you've fired a salvo, it will be very hard for the US to backtrack. And if their closest allies in the NATO or in NAFTA, basically Mexico and Canada, they also retaliate, and they're threatening to retaliate. It actually emboldens everyone else that the US goes after this to actually do the same. So I think that economic uncertainty has just gone up dramatically. The US dollar appreciating, because that's a classic response when there is de-risking. everyone jumps back into the US dollar, makes it much harder for the central bank. But let's look at what they should be doing. I think it is very important to inject back the durable liquidity that they took out, or they were forced to take out because of the FX intervention. So if there is, give or take 5 trillion rupees, 5 lakh crores that was sucked out because they had to sell dollars, at least that amount of liquidity has to be injected in one form or the other. They've started strongly with about 1 lakh crores last Monday. I think more needs to be done. Second, there needs to be maybe some moral suasion, maybe some backing off on, say, the restrictions on the credit deposit ratio, maybe even changing the macroprudential risk weights to target credit towards areas which are relatively safer today, like real estate. So these are areas where the RBI can and perhaps is likely to act.
RBI will allow a gradual rupee adjustment while ensuring stability. Now, markets are already pricing in steeper rate cuts beyond February, with most expecting anywhere between 75 to 100 basis points cut in this cycle to give a helping hand to growth. Now, despite these expectations of rate cuts, the monetary policy stance is likely to be left unchanged at neutral. But as for the tone, 40% do anticipate a dovish tilt, while the majority expect it to be neutral. Now, growth expectations are softening. 90% of our respondents predict that RBI will lower its FY25 GDP forecast to 6.4 to 6.5%. That could further strengthen the case for easing. But the inflation forecast is unlikely to be tinkered with in this policy. So all eyes are going to be on Governor Malhotra's debut policy move. Will he pull the trigger on a rate cut or stay cautious amid global risks? The stakes are high and the markets are going to be watching.
I'm still generally pretty constructive on the Indian market. Obviously, the valuations are higher than many other EMs, but generally speaking, stronger fundamentals, at least long-term, to go with those higher valuations. India is also, at least at the current time, less in the crosshairs of some of these potential tariff announcements. There's lower overall export risk to the U.S. in terms of the size of the numbers compared to China, compared to Canada, compared to Mexico. And so that keeps India fairly well positioned in this year where there's a lot of headlines that investors can wake up to and find various disruptions on their positions. It doesn't mean that there's no headline risk, but overall, I think it's rather well positioned and still has all the structural uptrends.
I think the underlying innate technology is just right on the threshold, and we'll get there with the next models. But now people have got to go off and build all these services. So someone in this room hopefully will figure out what the AI tutor of the future looks like, and that'll be a population scale thing, and it'll think what that would do if every kid on Earth, this year got an AI tutor that was provided like a better education or helped to provide a better education than anybody could get last year. Think what it would mean if we could have like an AI medical diagnosis system that was better than anyone could get last year. Think what it could mean if scientists could go cure every disease faster. And so, we've been waiting for this moment for a long time. I think we're gonna deliver something that can help with it, and now people have to go build with it. Other side of it, the cost for a given unit of intelligence 1 year later seems to fall by about 10x. Moore's law was a 2x every 18 months for the number of transistors on a chip, and that changed the world if you waited a few decades. But what's happening with the reduction in cost in AI models is extraordinary. Now, I don't think it means that the world's going to need any less AI hardware, because you bring the cost down and just the people are going to use it for a lot more things. The total number of dollars will go up. But that's a really exciting thing happening.
Rhythm Desai is our next guest on the show, and of course their latest note is out. Managing Director and Chief Equity Strategist India at Morgan Stanley. Rhythm, great to have you on the show. There's so much to talk about: tariffs, budget, capex, consumption. But you know what really caught my eye in that note of yours, that contrary to large pockets of the market where people are saying go to safety, go to large caps, you are still retaining your bias for small and mid caps, and you still see scope in that side of things. So let's open with that, why you don't think that mid caps and small caps are flashing red.
Hey, thanks, Subi, and great to be on CNBC. So this has to be contextualized, and we have to bear in mind that the news from outside India is not so good. So keep that aside. We'll come back to that subject a little later in this conversation. But the news from India is going to get a whole lot better in the coming weeks. So we've gone through a mid-cycle soft patch, which has, I think, lasted for about 5 or 6 months. It was rather idiosyncratic, led by extreme weather in August, elections in the first quarter, lack of spending by the government, and a little bit of tightness on the monetary side. So all this has assimilated into a slowdown in growth, which hurts SMIDs the most. And of course, at the starting point, the SMID valuations were looking a little extreme, and that correction has happened. I think we are now getting into a phase where growth will surprise to the upside. The budget reaffirms that. I think this is a growth-oriented budget. In fact, the phrase I've used for this budget is that it's a magic budget, and I'll come to that in a moment. And my expectation is that the monetary policy will back this budget, and the monetary policy will also become growth-oriented. So as far as India is concerned and what we control, I think things are looking up. Of course, as I said at the outset, the caveat is what happens in the rest of the world, and we can come back to that conversation. So that's the reason why I think that after this steep correction, now SMIDs are looking better than they have been for almost 7 or 8 months.
Piece on consumption, really, Rhythm. How much will this help, in your opinion? And what will see that lift and that help? Which subsectors within consumption, in your opinion?
That's a good question, Prashant. It's not as obvious as it seems. So let's contextualize this. This is about 10 million people, 1 crore people, who are getting this tax break to the extent of 1 lakh crores. And it's not necessary that they will take this tax break and buy soaps from it. Okay. So I think consumer staples is certainly not the place where we go to. Consumer discretionary, I think, is a much better bet. And even there, I think at the higher end of consumer discretionary is where I think you will probably see some of this tax saved being spent. Some of it can actually also come into the stock market. All of it will go to the banking sector. So this is how I would break it up. And that's, the dilemma always with tax cuts. It's hard to predict what people benefiting from a tax cut will do with that money. They could just simply deposit it in the bank, or they could go and buy shares, or they could use it to buy some high-end goods. And I think you'll get a mix of all of that. Now, the exact mix is very hard to predict, but it will be a mix. And all this is actually auguring well for the economy. When you've hit sort of a spending capacity limit and you don't want to do wasteful expenditure, and again, we should highlight this point, and I'll come to this in a second. So just give me a second. When you don't want to do wasteful expenditure, this is the best next alternative you have, which is give it to the people to spend. And that's what the finance minister has done. So kudos to her for that. Now on wasteful expenditure, again, yesterday's newspapers had no mention about this. The subsidy spending of the government has gone back to pre-COVID levels. It's now back to 1% of GDP. And we had achieved a multi-year low in 2019 at 1% of GDP. So it's, I think, 1.07, if I remember correctly. So the wasteful expenditure is, it's almost you're wringing the neck of your spending options. It's like you're tightening your purse strings. And at the same time, you're getting the private sector to increase its participation in the economy. The way I characterize this is that the government, and I think this is common knowledge now, The government did the heavy lifting coming out of COVID because private sentiment was weak. It is now stepping away and reconsolidating the fisc, in a way preparing for the next crisis moment. Because when another crisis moment arrives, if it ever does, you need spending capacity in the government. So you need to be always prepared for it. And now the private sector takes over. This is incredible, actually, if you think it from a stock market perspective. Very few countries in the world have this flexibility which we have, which is we can take the foot off the pedal, consolidate our fisc, and create capacity to address any upheaval that can happen in the coming years. And that is why this budget is magic. I mean, just one of the reasons. I mean, there are plenty of reasons why it's magic, but this is one more reason why it's magic. And I'll come to a third reason a little later, which is the fine print of this budget.
You're sounding very, very optimistic about prospects, and that's good to hear. And in the finance minister, with regard to the budget, the expectations, they are factoring in STT to be much higher as well. So maybe they are factoring in a buoyant stock market as well. Give and take everything rhythm. How do you change your portfolio from here on? What are your top ads? What have you all deleted as well? I'm looking at it. I think HAL is something that you'll have pulled out, while Titan, Jubilant, those are the ones that you're relatively more optimistic on. So give us a portfolio construct.
Sorry, so I won't go into single stocks, but from a sector perspective, I think you want to buy the banks, particularly the private sector banks. I think that's the easiest trade in the market right now. The stocks are trading relatively attractively, and I think the environment is going to get more constructive for banks. So that'll be the easy one. Then I think you want to buy some discretionary consumption. As I mentioned to Prashant, this budget is, I think, built for an uplift to discretionary consumption, especially high-end discretionary consumption. I would still continue to back industrials, though within that portfolio, you have to realize that there are some shifts that are happening with respect to the subsectors in which CapEx is taking place. So you may want to orient yourself to that. I think technology looks quite okay. We are getting into a period where spending cycles seem to be going up. Everything else, in my view, can be underweight in a relative portfolio. But this is one point that I will make, is that this market is transitioning from a macro one to a micro one. So since COVID, we've been driven by macro factors. And I think increasingly this is becoming a stock pickers market. So it's really not about the Nifty and where it heads. It's about individual stocks. And I think the dispersion of returns across stocks is likely higher in the next 12 months than it has been in the last 2 or 3 years.
You know, a large individual investor has messaged me and said, please ask Rhythm about when FIs will return in the context of all the changes made in the GIFT Nifty. Quickly, if you can.
GIFT City, the GIFT City.
So,
GIFT
Prashant,
GIFT Nifty.
Yeah, sorry.
Every morning at 9:15, there's a $100 million bid that comes from domestic investors. To do a trade, somebody needs to sell. Either corporates sell through IPOs, and then they'll allow FPIs to buy, or the FPIs sell. So this is the technical point. Okay, the GIFT City changes, I think, are very encouraging, and it should assuage a lot of foreign portfolio investors with regards to taxation, and should encourage them to step in. And these are changes that market participants were pressing for, and the government has delivered. So I would be very optimistic. But I think you need a bit of supply of paper for foreign portfolio investors to turn. Mind you, this selling that we have seen over the past few weeks has little to do with India. It is largely an emerging market problem. And the emerging market asset class does look very vulnerable. We actually did not get to that at all. But what's happening over the weekend and what's likely to happen over the next few weeks is going to create volatility. So people have to be prepared for it. And India may outperform in this volatility, but the Nifty will struggle. If the world is not going up, it's impossible for the Nifty to do its own jig. It's a very large market now in a global context. So it cannot do its own thing if everything else is falling.
We've had a lot of evidence so far that Trump's tariffs are looking transactional rather than actual tariffs. In other words, we've seen tariff announcements for Colombia, for Mexico, and Canada, all either reversed.
Hello, welcome to News Centre. I'm Parikshit Luthra. The big story we're tracking this evening. Uproar in Parliament after the US government released a video of Indian nationals in chains and handcuffs being deported back to India after trying to enter the US illegally. A video posted online by the US Border Protection Force showed Indians being boarded into military aircraft. The video has music overlaid on it and it shows people in chains and handcuffs. The head of the US Border Patrol called it successful deportation of illegal aliens to India. This was the farthest deportation by a military plane. Opposition parties protested what they had called inhuman treatment of Indian nationals by the US government. Opposition lawmakers, including Congress leader Rahul Gandhi, protested outside Parliament building. Some wore handcuffs and carried placards that read, "Humans, not prisoners." External Affairs Minister Jaishankar said India is engaging with the US to ensure deportees are not ill-treated. He also promised to crack down on the agents facilitating illegal migration.
Deportations by the US are organized and executed by the Immigration and Customs Enforcement ICE authorities. The standard operating procedure for deportation by aircraft used by ICE that is effective from 2012. I repeat, that is effective from 2012, provides for the use of restraints. However, we have been informed by ICE that women and children are not restrained.
जब हम वहाँ पे पहुँचे, वहाँ की गवर्नमेंट ने कोई भी एक्शन, जैसे हम कोई भी एक्शन लेते हैं, लीगली एक्शन लेते हैं, हमारी सुनवाई होती है, ऐसे कोई सुनवाई नहीं करने दी है। कोई हमारे बयान नहीं हुए, कोई हमने लॉयर वगैरह नहीं हमारा हुआ, तो उन्होंने हमसे बिना पूछे कि तुम क्यों आए हो, क्यों अपनी कंट्री छोड़ी है, हमसे कुछ नहीं, हम शरण मांगने गए थे, कुछ वैसा नहीं, हम क्रिमिनल नहीं है। उन्होंने ऐसा ट्रीट किया, हमें एक जंजीरें बांध के, जैसे हाथों में जंजीरें और पैरों में जंजीरें, लेडीज़ बच्चों जो 18 साल से हैं, 18 साल से ऊपर हैं, सबको जंजीरें बांध के।
बहुत बातें की गई कि मोदी जी, ट्रंप जी बहुत अच्छे मित्र हैं और मोदी जी ने ऐसे क्यों होने दिया? क्या हम अपना जहाज़ नहीं भेज सकते थे उनको लेने के लिए? इस तरह से क्या इंसानों के साथ बर्ताव किया जाता है कि उनको हथकड़ियाँ पहना के, बेड़ियाँ पहना के भेजा यहाँ पे?
To take this discussion ahead, I'm now joined by former Foreign Secretaries Shashank and Kanwal Sibal. Gentlemen, thank you very much for joining us in the program today. Ambassador Shashank, if I can begin with you first. Now, these visuals have shocked a lot of people. The opposition is seeking answers as to why we're allowing Indian nationals to be treated in such an inhumane manner. Now, the External Affairs Minister has made a point that this has been happening since 2008, and since 2012, the US border, the Immigration and Customs Enforcement Agency has these rules and they do have the power to restrain people. But considering that India is such a close ally, could we have made sure that our citizens are treated in a better manner?
Yes, I agree with you that it's the responsibility of the two friendly governments to make sure that their nationals are treated humanely. And we find that from 2012, as the ministry has clarified, this has been the policy of the United States to restrain such people. The point is that when they go abroad, I don't think the conditions are any better, maybe much worse than what they are facing now. But unfortunately, since now it is being done by the United States government, so therefore everybody expects the US to maintain the highest standards of humane behavior toward these illegal people. So that is all right. I think our parliament has a responsibility to look after the Indian people and their welfare. And the government of India also have this responsibility. I would say that we should have carried on this kind of a dialogue since before 2012 even, when we knew that so many illegals were going to USA and other countries, that we try to make arrangements. Either there are local voluntary organizations which can find out those who want to go back to India, and then they can come back to India through the normal repatriation means. But those who don't want to come back, then of course, then they face deportation, and these are the conditions under which the US has a deportation policy. In future, of course, we should try to work out a better arrangement with them.
Right. Ambassador Sibbal, do you feel that rather than getting our citizens sent back in a military aircraft in this manner, we could have sent our own flight and brought them back?
Who would pay for it? Who would pay for it? I mean, it's very, very expensive. The numbers that we are talking about are pretty large. And if you look at the figures that the minister has given of the number of deportees since 2012, they have been going up, 1,800, 2,000, which means that a lot of commercial flights would have to be arranged. And that would be a very expensive process. Now, if it was a war zone, if the security of our Indian nationals was jeopardized, and if we had to take them out, as we have done in the Gulf, from Libya, from Yemen, and from other places, where because of conflict, the lives of our Indian citizens were in danger, we arranged for our naval ships, for our commercial flights to do that. But these are illegal immigrants. Now, if they were in a different category, then yes, government could have taken the step to make sure that they were brought back under what might be proper conditions. Now, in this case, I think I can understand why the opposition wants to make hay out of it, because they have to embarrass the government in every possible way. And and since our relations with the United States in recent years have become very close, therefore this becomes a handle to beat the government, to say that, look, you tom-tomming your relationship with the United States, and they're treating you so badly. But, leave aside the politics of it. The American penal system, the jail system, the manner how they treat their criminals is shocking. Shocking by world standards, by European standards, by international standards. You remember the case of Dominique Strauss-Kahn, who was the head of the IMF, and he was a candidate for the presidency of France. He was competing against Macron. And because there was some sexual incident in the New York hotel, they did precisely this to him. They put him in that orange jumpsuit and manacled him and put him those leg things and paraded him out of the hotel into the jail. This is what their system is. They're very almost heartless in this regard. These are their laws. They do it to everybody. They have not singled out the Indians in this regard. And in this talk that we should have some special agreements with them, this is nonsense. You mean they are going to have differential laws, differential treatment? How would they justify in their own system that we're treating X better, people from X country better than people from Y country? They can't do that. The point is that
but Ambassador Sibbal, do you also believe that this is going to become a big problem, because US has right now conveyed to us that there are 18,000 people who have to be taken back? We learned from sources that there will be more such deportation flights which will take place as and when citizens are vetted. We saw the Colombian president, the Colombian government turning back flights because their citizens were not being treated in a humane manner. He said that you can't treat them as criminals. But if you have 18,000 people to be taken back, do you think it's going to be a very challenging process for the Indian government? And is there any way we can change the manner in which the US treats them? Will any appeals from the Indian side help?
Well, that is part of our diplomacy. We have to reach out to them. We have to tell them what our concerns are, so tell them about why it is creating a serious problem in India at the level of public opinion, and that this can damage the kind of ties that we want to build with the United States and create more distrust and mistrust. This will be part of our efforts, no doubt. But whether they will find a way out, they may well find a way out. This is something we should attempt to do. but I see some difficulty in this regard. Now, when it comes to actual people who are actual criminals, now I don't know how many of the Colombians they wanted to send back who were criminals because they are involved in drug trade in a very big way. Now, when they are actual criminals, I don't think they are going to relent, because in their dictionary, criminals, mass criminals can be dangerous, and when they are in a flight, there can be a problem if they are not restrained. But when there are people who have gone there simply illegally but have no criminal record, then maybe something can be worked out at the humanitarian level. Now, these are early days. The Americans are flexing their muscles. They are bullying all around everybody, and this is part of the domestic agenda, which is actually at the root of some of the reasons why Trump has got re-elected. The whole question of illegal immigration and sending the illegal immigrants back.
And he's
home.
going to be tough on that.
Right. Now, where I object to what has happened, and it is unfortunate, is that in the past when they have deported people after 2012, they were manacled and there were those leg restraints. They did not issue a video out of it. But this time they've issued a video. And they have done this, I don't think, to hurt India. It is for domestic publicity.
For domestic audience.
Audience that we are doing this. Because promise given is delivered. This has been the slogan of friend Trump.
To show political muscle, there. Ambassador Shashank, if I can get you in at this stage as well, what I'd like to understand from you, on one hand, we have this official number of 18,000 Indians staying in US illegally, whom the US Department of Immigration and Customs Enforcement want us to take them back. On the other hand, there is this number of 7.5 lakh Indians staying illegally in the US doing the rounds. This according to Pew Research Center. And Pew Research Center has said that Indians are the third largest group in terms of illegal migrants in the US. Now, this similar point has been made by Rajiv Shukla, a member of parliament of the Congress party, who attended a meeting of the Parliamentary Committee on Foreign Affairs. And after that, he said that the government has told us that there are 7.5 lakh Indians who will have to be taken back. Now, how do we differentiate between those two numbers, and what do we really believe?
Well, there are a couple of things which you can keep in mind. Number one is that when these people go out, whatever route they follow, I mean, there was a film also which I saw some time ago called Dunkey route. So there are all kinds of routes which they follow. I don't think the conditions are any better than they are getting in the military plane. Maybe even worse, perhaps traveling into small boats or in lorries and containers and whatnot. So I think they are taking those risks. So it is really right now an alert notice for those who are planning to go illegally, whether to USA or to anywhere else. USA, of course, is an extreme case because this is as Ambassador Sibal has pointed out, that this is their style of functioning with criminals. I have seen the criminals being treated in many other countries also during my various assignments, almost like animals, because once you are a criminal, you are not human being, according to them. So I think this is the problem. Do you treat illegals as criminals or not? If the Americans treat the illegals as criminals, then of course we have to find out from them that they should try to make a differentiation. But at the same time, the second point which I wanted to say, that all the Indians, including members of the opposition and the government, we should try to find out how to control the travel agents and these various agencies which indulge in such cases. And we should also point out through all kinds of media in all our villages and towns that one should not take this route to become illegal citizens in other countries. I think that is what it is. The President Trump, of course, has pointed out that many in his own country have been encouraging the illegals. So therefore, he is going to take action against all the states and their government officials. So I think there is really a trouble between the Democrats and Republicans, and therefore we are also facing the side effect of that.
All right. We're going to take a break. But before that, very quickly, Ambassador Sibal, because when we return, we'll speak about the Prime Minister's visit to the US. Could you help us understand how certain reports are coming to this number of 750,000 Indian nationals staying illegally in the US? How are we categorizing and classifying them as illegal people?
Well, illegal in the sense they don't have proper documentation. The right word would be undocumented Indians, which means that they are waiting for their green cards or whatever else. So they haven't yet got any document to show that they are legally resident in the United States. These are not the kind of people that we are talking about, who entered illegally through Canada or through Mexico, coming from all the way, coming across all the way from Central America and whatnot. That is an issue which is larger in scope, and on that there can be a discussion between India and the United States. And many of these people that we're speaking about, they are not of the same category. They are people with a technical background, well educated. They're contributing to U.S. society in many ways. And there would be, of course, now he has now established this category that the children who have been born to foreigners, where either of the parent is not a U.S. citizen, is by definition illegally staying in the United States.
Right.
So this is
we're going to take a break. This is a different category. I got it, sir. I'm going to take a break. When we return, we'll speak more about the Prime Minister's visit to the US. We'll request both of you to stay with us. We'll be right back.
Delayed, and the only country where we really do have increased tariffs with retaliation, of course, is in China. And so I think that's generating a huge amount of uncertainty. I mean, investors do not like uncertainty. Companies don't like uncertainty. It's very hard to say where we go from here. I do not assume that we've seen the end of any possibility of tariffs on countries like Mexico and Canada. But my word, the speed of events is very confusing, and investors, I think, are therefore very nervous about it. And it's interesting, the US is underperforming the developed markets this year. As you've noted recently, the dollar's lower. So this is all, I think, creating a lot of uncertainty, which I think will have an impact on investor behavior.
कुछ लोगों को अब जब एआई की बात होती है, कुछ लोगों को अब ये शब्द फैशन में है तो बोला जाता है, लेकिन मेरे लिए सिंगल एआई नहीं है, डबल एआई। भारत की डबल ताकत है। एक एआई आर्टिफिशियल इंटेलिजेंस, दूसरा एआई एस्पिरेशनल इंडिया। हमने स्कूलों में 10,000 टिंकरिंग लैब्स शुरू किए और आज उन टिंकरिंग लैब से निकले बच्चे रोबोटिक्स बना करके लोगों को चकित कर रहे हैं। और इस बजट में 50,000 नए टिंकरिंग लैब्स उसका प्रावधान किया गया। भारत वो देश है जिसके इंडिया एआई मिशन को लेकर के पूरी दुनिया बहुत आशावादी है और विश्व के एआई प्लेटफॉर्म में भारत की मौजूदगी एक महत्वपूर्ण स्थान प्राप्त कर चुकी है।
This was the third consecutive year that the BMC budget was presented to an administrator and not to a standing committee. Why? Because the term of the corporators ended in March 2022 and the elections for the new term and the new corporators are yet to be held. Now the 74,427 crore rupees budget, out of this, an allocation of 43,162 crore was made for capital expenditure, 5,100 crore rupees for roads and traffic department, 5,807 crore rupees for Mumbai Coastal Road project, 3,039 crore rupees for storm water drain department, and 650 crore rupees for sewage operation department. For key public services, over 4,000 crores were allotted to education department, over 7,000 crore for health department, 261 crore rupees for fire department, 309 crore rupees for disaster management, and 220 crore rupees for the garden department. BMC announced that it's going to start 250 new public clinics, also known as Apla Dawakhana, all over the city. One interesting initiative announced by the BMC was the introduction of cyber awareness program for students. It will serve.
Welcome back. You're watching News Center. The US president is likely to host a dinner for Prime Minister Modi on the 12th of February. Sources have said that the two leaders will have a bilateral and delegation level meeting. A trade agreement is also likely to be on the anvil. Prime Minister Narendra Modi will also meet a select group of American CEOs, including tech billionaire Elon Musk, during his visit. Sources have told CNBC-TV18 that the Tesla CEO is likely to seek a level playing field to sell cars in India. Musk would also ask for early approvals for Starlink to operate in India. Former Foreign Secretary Shashank and Kanwal Sibal are still with us on the program. Ambassador Shashank, what do you think will be the Prime Minister's big message? We've already said that we would take back all illegal Indians in the US if their identities are clarified. But in terms of trade, in terms of defense, what would we like to achieve from this visit?
Well, we have the agreement on critical technologies and emerging technologies. At the same time, we find there are a lot of delays which have been taking place in the supply of engines for our Tejas aircraft. That puts into jeopardy all the preparation that we have to make for our own aircraft and other equipment. Therefore, that would be another issue. And in the past also, we have been discussing with the Americans that when we want to buy any defense equipment from them, we would also prefer to have upgradation and transfer technology to the extent possible. Of course, they would have their own reciprocal requirements. So we'll have to keep that in mind, how best it is achieved. That's about the defense. As far as trade is concerned, we found out that some time ago when under some policies, the Americans cut out India's name from the GSP, their general system of preferences, and the duty-free import of handicrafts and handlooms. Prime Minister would like that most of our items which are exported to Americans are not the very highest quality, unlike the Chinese, but they are the items which are needed by Americans into their own production processes or for their own households. So therefore, we have to see that those items are allowed duty-free as far as possible, and we can sign some kind of duty-free reciprocal agreements with them. Second is that, yes, there are certain items which we don't want to buy, and there are heavy duties because there is a responsibility on the Indian government not to encourage consumption of those items which are not really required for our people. So therefore, we can try to reduce the duties on those items if the Americans are very keen that we should buy Harley Davidson, etc. So I think there is a kind of reciprocal thing which we need to follow. Third one is that most of the tariffs are these days imported are put on a uniform basis. There is no singling out. If there is a singling out of a country, then naturally there is a pressure on that country also to reciprocate. We would not like to enter that track with Americans.
All right. Let me put my final question to Ambassador Sibal now. Ambassador Sibal, where do you think India is going to come under pressure? Will it be cars? Will it be pharmaceuticals? Will it be buying more security equipment? Where is that tariff pressure going to come in? The sense that we get is that there cannot be any trade agreement or any kind of major deal, but this visit will send a roadmap of what we want to achieve, at least by the Trump visit to India this year.
Well, you know, during his first presidency, there were pretty intensive discussions on a number of items which they wanted to sell in India and wanted us to reduce tariffs on them, whether they were agricultural products and IT products, medical devices, and things like that. we engaged them in serious negotiations. But my understanding is that initially there were, let's say, 5 items. And then when we agreed that we will lower duties on those 5 items, then they added more items to the list. And when we were willing to look at that, then they added more items again. So this process went on because we had Mr. Lighthizer, the USTR at the other end, who is an extremely tough person when it comes to these issues and a great believer in tariffs. And so is the new US TR and the Treasury Secretary and Trump himself, who is a great believer in tariff wars and is using that now as a weapon against so many countries, even against his allies like Canada and Mexico, and he slapped 10% tariffs on China. He's not actually taken a decision on raising tariffs against India as yet. But even in the conversation Prime Minister had with him, he made his views known that India has very high tariff walls and India should buy more security equipment from the United States. So he's clearly made his agenda known. And these are the issues that he's going to raise with us. Now, we've already placed an order just before he took over office for these MQB, these $5 billion worth of armed drones from the United States. There are a couple of other items like this Striker, whatever it is, a vehicle, a military vehicle, and these Javelin missiles, anti-tank missiles. These are the issues which are already on the table, and this is something that he will try to put. But we cannot make this visit as some kind of a defense kind of relating to buying and selling defense. I mean, this is not the purpose of this visit.
Correct.
It can come out of the.
We've run out of time.
It can come out of the relationship as a relationship progressives, and there is more confidence and trust, as was rightly pointed out.
Okay.
The program has been delayed enormously by the delay in supplies of the GE 404 engines, and there's no movement on 414 engines. And then finally, a couple of things which is important. We want joint development and joint production in India as part of Atmanirbharta. United States under Trump wants everything to be manufactured in the United States. So there is a bit of a, let's say, clash in perspectives of how we...
Ambassador Sibal, I'm unfortunately completely out of time. I'll have to leave it there, but thank you so much to you and Ambassador Shashank for joining us on the program, giving us your views on the issue of illegal migration into the United States and also the big Prime Minister's visit to the US next week. That's all we have time for. Goodbye.
Key purposes. One will be to ensure that the students learn how to use the internet in a safe manner and to keep them safe from cyber fraud. BMC also focused on environment initiatives and projects like promoting eco-friendly cremation and proper disposal of residue from idle immersion. These are the projects which will take place under environmental related initiatives in the next few months. We also spoke to Bhushan Gagrani, the BMC commissioner himself. This was the first time that he presented the BMC budget. Listen to what he has to say about this BMC budget. So your budget also mentioned that you guys are planning on imposing a tax on the commercial properties in slum areas.
That's right.
If you can elaborate that. So from when this new tax will be levied?
It is actually not a new tax. In fact, we are enhancing our assessment net. Under the assessment net, the properties which are in the slum, however, which are being used for the purpose of commercial, they were not covered. So this is for the first time we are doing the survey and bringing them in the tax net. Not necessarily that we will be imposing huge tax. It's a normal tax. It's not a very huge tax. However, the coverage will be given to our commercial properties.
So BMC has not introduced any new project this time. In fact, you have focused. Correct.
Yeah.
But sir, does it mean that is there any cause for fiscal concern, sir?
No, there is no fiscal constraint. We have enough adequate cash flow as well as resources.
हमारे देश में एक प्रधानमंत्री हुआ करते थे, उनको मिस्टर क्लीन करने कहने की एक फैशन हो गई थी। उस प्रधानमंत्री जी को मिस्टर क्लीन कहने की फैशन हो गई थी। उन्होंने एक समस्या को पहचाना था और उन्होंने कहा था कि दिल्ली से 1 रुपया निकलता है तो गांव में 15 पैसा पहुंचता है। अब उस समय तो पंचायत से लेकर पार्लियामेंट तक एक ही पार्टी का राज था। पंचायत से पार्लियामेंट तक एक ही पार्टी का राज था और उस समय उन्होंने सार्वजनिक रूप से कहा था कि 1 रुपया निकलता है 15 पैसा पहुंचता है। बहुत गजब की हाथ सफाई थी। पंद्रह पैसा किसके पास जाता था, ये देश का सामान्य मानवी भी आसानी से समझ सकता है। आदरणीय सभापति जी, देश ने हमें अवसर दिया, हमने समाधान खोजने का प्रयास किया। हमारा मॉडल है बचत भी विकास भी। जनता का पैसा जनता के लिए। आदरणीय सभापति जी, आजकल मीडिया में ज्यादा ही चर्चा हो रही है, सोशल मीडिया में और अधिक हो रही है। कुछ नेताओं का फोकस
Hello and welcome to CNBC-TV18's Future Female Forward. I'm Shireen Bhan. We are into our 3rd season and we've of course been championing the idea of gender justice, gender parity and mainstreaming women's participation in the workforce. It is my pleasure and privilege to welcome on the program today Mary Ellen Eskandarian of the World Women's Bank. Many thanks for joining us here on the program. It's great to have you join us on Future Female Forward. You know, let's start by talking a little bit about the history of the organization that you lead today. It's a 45-year-old organization, started in 1979, and it's gone from strength to strength. You know, while there's a long distance to cover in being able to make access to finance much more of a reality across the world for women particularly, but what have been the big surprises? What have been the big wins so far for you?
Well, first of all, thanks so much for having me and congratulations on your 3rd season. India is very near and dear to that 45-year history. One of our founders and the first chair of our board of directors was Ilabat.
Yes.
And so just a legendary champion of women's economic independence. I think probably the single biggest exciting change and surprise is really what has happened with digital financial services. The speed with which it has really taken off. I'd say digital financial services and financial inclusion was probably one of the few silver linings, if you will, of the pandemic. You saw uptake of smartphone ownership, particularly here in South Asia. There was a real shift in women's access to the technology, women's ownership of the technology, and that has made all the difference. You can lower the cost of delivering financial services even to the last mile, even very small, taking small deposits, making relatively small loans. The cost of that becomes really doable with the digital financial service. You then combine that with the phenomenal digital public infrastructure that India has put in place, the Aadhaar ID, the Jandan account, the national payment systems, and you're just poised for tremendous growth. And we've seen, you were talking about gender parity.
Yeah.
We've seen gender parity in account access here in India for the first time, which is very exciting.
No, absolutely. You're right in pointing that out. But you talked about the pandemic, and what we saw through the course of the pandemic was that the burden of what happened, whether it was the sort of pressures that women had to deal with in being able to manage home and work at the same time, which of course has been something that we perpetually had to do, but it was felt much harder through the course of the pandemic. And the setbacks that we faced on that front, are we past that? Have we made up for lost time since the pandemic?
This is such an important issue. Women around the world really bear the burden of care, have lots of different names for it. The third shift, there's lots of, in some countries it's really 2 to 3 times as great on the shoulders of women. I think that with the pandemic, it shone a light on something that, as you say, we knew was there. Women in particular knew that was there, but it became so evident to everyone that this burden was falling much more so on the shoulders of women. I'm very excited that we've finally started to see a turnaround in women's labor force participation here in India, for the first time. I'd say, I come from the United States. We're still feeling that the impacts. We've had much more remote work made possible in the United States, and that's on the whole been quite good for women. But where unfortunately you're seeing women's rate of promotion in positions has started to lag a bit because they are taking advantage of those remote work options. So it's a little bit of a glass half full, glass half empty. Where I'm very excited is we're seeing across the global south, as well as in some of the developed countries, more and more women stepping up in an entrepreneurial way and setting up businesses that address these issues of the care economy, providing child care, elder care solutions. You're seeing companies that are providing transport for older people in to get them to doctor's appointments, all of the things that would keep a woman from being able to do a full day's work away from the home. So some very exciting development.
No, absolutely. And we need more entrepreneurial stories and solutions to be able to address this big problem that we face. But talking about entrepreneurial solutions, here in India specifically, and I know that you've raised 2 funds. You started with 50, you moved on to 100, and there's possibly a third in the offing. But what are you doing with that money? How are you deploying that capital? What kinds of businesses, what kinds of entrepreneurial ideas do you want to back with the money that you raise?
So the 2 funds that we've raised have been very much focused on inclusive finance institutions. The first fund, you get anybody to even give you money to raise a first fund is such a Herculean task.
How hard was it to do that?
Oh my gosh, the hardest money I have ever raised in my life. But we were known as a microfinance organization, and that was what people were willing to back us to do. So we made 10 investments, really very much in the microfinance space. The second fund, I think, is the more interesting because there are very, a range of different models. We've made we've made 11 investments to date. All of them are in the digital space. Some of them are very explicitly fintech solutions. We've had some insurance tech solutions, as well as credit savings. But we've also been looking at sort of other kinds of financial products and services. One of my favorite companies in the portfolio is here in India. It's an affordable housing finance company that requires the woman's name to be on the title to the property that's being financed, which is, in one fell swoop, you are giving her an asset ownership that is an empowering step forward that really nothing else equals that. We see, frankly, women's vulnerability to violence in the home declines when she has that asset ownership. We see her ability to raise other capital when she has that asset to pledge. So we're very excited about some of, as you yourself used the phrase, entrepreneurial approaches to women's empowerment.
You know, you talked about some of the companies that you are backing here in India, but I want to focus specifically on what you're doing with fintechs in the context of the kind of change that we've seen happen here in India specifically. What's most exciting on that front? I mean, you know, we've gone through this big UPI moment, which has changed the course of transactions. Microtransactions have made so much more possible today. What's been the most exciting aspect of that? And if there is a third fund, is it largely going to be deployed to back and fund fintechs?
So, first of all, thank you so much for raising this exciting, hopeful development on the horizon. We're actually hoping to expand a little bit beyond just the financial sector. So certainly the fintech space will be front and center in what we're trying to do, but we're really going to try to take a slightly wider look at what are the elements that are holding women's economic independence, women's economic participation back. So looking at, you know, future of work, some of these care economy solutions that I mentioned, we'd really like to put some capital behind those as well. But on the UPI specifically, we were so honored to be able to work with the National Payments Corporation of India on a really interesting piece of work that, despite the huge progress made in the universal payments, we still have 200 million women in India that own a smartphone but are not using the universal payment system. And we were really interested in looking at why that was and what some of the solutions would be to get them comfortable moving from cash to digital and really joining this, you know, tremendous development in the financial system.
When we talk about unlocking the power, so to speak, of financial inclusion and what gains we've benefited from over the past 4 decades, as you look into the future today, you know, given what we've been able to go through, what do you believe we need to prioritize today?
I would say it's that gender intentionality, it's that focus on what do you need to put into the development of a solution to serve that woman's need. One thing that we've definitely seen here in India, and actually some of the other countries we're working in, is the outreach, the channel through which the woman is reached can play an enormous role in building her trust, in making sure that the product actually does address some of her concerns. You were saying, what's going to get those 200 million women off the fence? We've spent a lot of time in the last few years training women business correspondents, this concept of the BC Saki, who comes out of the community. She's a peer to her clients, and they trust, there's a trust that's built right from the start and can really move that woman along the journey to becoming a financial institution client much faster.
You know, you talked about the RBI and working closely with the RBI in trying to get this done, but you know, any interesting sandboxing that's happened over the years where you believe we've been able to achieve the kinds of results that you were hoping for, and perhaps that's a way of us to take some of those examples forward here in India as well? Or are there Indian examples that we can export to the world?
No, I really am so glad you gave me the option to phrase it that way. I think the digital public infrastructure model is one that I am thrilled that so many other governments are finally starting to take on. I think it was done maybe more haphazardly. You'd see, you know, digital financial services and connectivity, but without the digital identification. You'd see parts of it, but the holistic nature of what India has taken on, and now that we're starting to see the universal lending platform, that will be a really interesting test of whether the next stage in this infrastructure is going to be as successful. But you've really started to see that the export outward from India to more and more governments. We're very excited about working with them.
जकूजी पर, स्टाइलिश शावर्स पर, लेकिन हमारा फोकस तो हर घर जल पहुंचाने पर है। आदरणीय सभापति जी, हमने ये जो अलग अलग कदम उठाए उससे लाखों करोड़ रुपए की बचत हुई, लेकिन उन पैसों का उपयोग हमने शीश महल बनाने के लिए नहीं किया। इसका उपयोग हमने देश बनाने के लिए किया है।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown, ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed. You talked about raising 2 funds and deploying them to back not just women-led businesses, but women-oriented businesses, if I could use that term. But, you know, world over, venture capital is hard to come by, especially when we talk about women entrepreneurs, and that story hasn't changed much, and it continues to be a global challenge, including here in India. What do you think is holding VCs back from investing or wanting to invest or back and support women-led businesses?
The patriarchy. I mean, this is just crazy. We have 2% of global venture capital going to women-led companies. The single most predictive factor of whether a woman entrepreneur is going to get venture capital is if there's a woman on the investment committee. And then they're not sitting there. So that's absolutely, we need more women in those decision-making rooms.
You know, do you believe that there is more political appetite today world over to try and prioritize this as an issue?
Oh dear.
That side
yeah,
tells me everything.
I was going to say, you really got me on that one. I travel a lot throughout both the developed and developed markets. I am quite worried about backlash that we may be seeing, certainly in my country, in Europe. I'm very hopeful, though, throughout the global South. We've have, you know, Indonesia and then India as G20 presidents in recent years. They put women's entrepreneurship, women's labor force participation right at the front and center of their presidencies. We're seeing South Africa doing very much the same thing. They have put, you know, right at the top of their agenda, not just access, but usage of financial services by women. So this may be an opportunity for the BRICS countries to be leading the way, which would be really, really exciting.
You've done one book. Is there a second in the making to really you know, to dig deeper into the stories that you've seen and your own experiences? Is that likely to be in the form of another book?
Well, again, thank you so much for asking that question. I'd very much like a second book, if I could carve out the time to do it, to be on this subject of gender lens investing. We have you know, an extraordinary team of people who are providing advisory services to companies here in India. But I have to say, in places where we are a shareholder, where we are at the board table, where we're bringing, you know, with the larger of our 2 funds, we were able to lead capital rounds in several of our portfolio companies. And so we were able to bring other capital to the table with the same kind of gender agenda that we had. That's really powerful. We can be inside a company for a longer period of time. We have more control over whether they're going to actually buy into our solutions. So I'd really love to write about and talk to some of the women who've had women investors who've seen the value of a gender lens investment. I hope that we don't have to have one day we don't have to have a separate category called gender lens investment, but everyone will see that that's a really smart investment thesis.
Well, I certainly do hope so. But you know, you talked about the patriarchy and how that gets in the way of many things. But you know, our own conditioning as well, on the back of what we've seen around us, and sometimes even subconsciously picking up on that. Have you had to unlearn some of that yourself? And what's been the big change for you as you've changed and grown and evolved in your role? I mean, are there things that you do differently today than you did maybe 20 years ago?
What a great question. I think, you know, we do a lot of work on unconscious bias. Most of it is in credit scoring algorithms, so it's not necessarily all that personal. But I'm always amazed by something as simple as many of the credit scores we look at give sort of extra credit or assign a level of creditworthiness if the entrepreneur is spending more time at the business and not time at the home. But if you've got women with a home-based business, they're missing that entirely. And so I think where it relates to in the personal is just where are your blind spots? Where are you unconsciously biasing yourself? I think one of the things that has been such a joy at Women's World Banking actually is making sure that our organization remains gender diverse. And the men who work at Women's World Banking are the most enlightened, incredible allies and believe wholeheartedly in the value of diversity and in women's economic participation, and never losing sight of that. It's funny, whenever we're recruiting new board members, and I ask people for recommendations, they'll always say, well, let me think of a woman I know. It's like, no, don't only think of a woman. So remembering that diversity sort of applies both ways, I think, has really become a mantra for me.
You talked about unconscious biases. We're now in an era where algorithms are going to control everything that we do. Is this going to be better, you think, for women, or perhaps even worse?
It's a truism that the algorithm is only as good as the human who has built it. Where I take the most comfort is an increasing number of companies are recognizing that and are kind of stopping when they see that, for example, there are more rejections of women-owned companies. What's that about? What is coming out, or what is playing itself out in the algorithm that's yielding that result? So recognizing that we are human, we all bring our biases, but then at least questioning ourselves, and that's an unalloyed good, I think, for men and women.
So let me end by asking you, what's the one thing that gives you the most hope today? And what is the single biggest thing that continues to frustrate you, 20 years on of doing this?
Well, I'll start with that one, since I can't
believe... That's the easier one to do.
I can't believe I used the word patriarchy on CNBC. That's kind
Why?
of...
What's wrong with using patriarchy on CNBC?
But I do think that, so many people say, make the business case and, show me the business data. And yet time after time after time, we see companies, collecting data and then not using it, or maybe even worse, having the data and then making a decision that isn't supported by the data and based on, misconceptions and bias. Where I do have hope is that we're seeing a female wealth transfer unlike anything we've ever seen in world history, where women are inheriting wealth, where women are creating wealth at a rate that they've never had.
And women
before.
are giving away wealth.
And exactly.
Yeah.
And women believe very strongly that philanthropic capital has to be part of the way they manage that wealth. They do tend to care more about the social elements of their investments. So I'm very excited. Our funds have had some amazing women investors who've supported us and who've really believed in what we're trying to do and see that as consistent with their own values. So I'm optimistic as more women deploy their wealth in ways that may benefit other women.
And let me ask you about the plan for India. At the end of this visit, on the back of everything that you've seen, on the back of the work that's already been accomplished here, what does the next 5-year horizon, the 5-year plan look like for you and your work here in India?
Well, I think that one of the really unique elements of our program here in India is really being able to leverage the infrastructure that's been built. We are not creating new structures. We're not advising companies that we're working with to create new structures, but to build off of what. So, you know, I'm having conversations with SIDBI and NABARD where they say, don't talk about a pilot. This is phase one and we're going to go roll out. So there's a real drive for scale. And so I'm very excited about the kinds of numbers. We've already reached 52 million women with this Jan Dhan Plus program. There's such possibilities for scale here in India, and I'm really excited about driving toward that.
Mary, thank you so much for joining us here on CNBC TV18 to take us through where things currently stand for you in India, as well as some of the important learnings and insights from the work that you're doing globally. Appreciate your time. We wish you all the best, and we hope to see you back in India in 2025. Thanks very much.
Absolutely. Thank you so much.
Well, with that, it is time for us to wrap up this edition of Future Female Forward. From all of us here on the team, for now, goodbye and many thanks for watching. India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty failed to hold early gains amid cap sees sharper cuts. Rupee falls to a new low. $1 is now worth more than nearly 88 rupees. 70% of market participants polled by CNBC TV18 expect a 25 basis point rate cut from the RBI tomorrow. 70% also expect rate cut of at least 75 basis points in this cycle. 60% are betting on the RBI to announce additional liquidity measures in what will be the new Governor Sanjay Malhotra's first policy. China challenges the new US tariffs at the World Trade Organization and accuses the Trump administration of bullying. Stock markets across the world attempt to rebound. Gold prices remain near record highs. Uproar in Parliament after US government releases a video of Indian nationals in handcuffs and chains being deported. External Affairs Minister says India is engaging with the US to ensure deportees are not ill-treated. Also promises to crack down on the agents facilitating illegal immigration. Shares of State Bank of India decline after third quarter margins shrink to a 30-month low. Deposit growth rises by just 2% sequentially, but asset quality improves and slippages drop to a 2-year low. Hexaware all set to return to the Dalal Street with the 8,700 crore rupee IPO, the largest by an IT company till date. Private equity player Carlyle will be diluting more than 20% of its stake, taking its shareholding to just over 74%. More than 100 employees at the Samsung plant on the outskirts of Chennai are up in arms once again, demand the reinstatement of 3 workers who were suspended for alleged connections with the workers' union. Madras High Court has allowed the union to register workers. The head of United Nations warns against ethnic cleansing after US President Donald Trump proposed to own the Gaza Strip and resettle Palestinians elsewhere. Even US allies like Germany, UK and many countries including Saudi Arabia, Turkey, China and Brazil have rejected Trump's proposal. All right, let's start with the market action. Sensex and Nifty failed to hold early gains to end the day in the red. Sensex lost over 180 points and is barely clinging on to the 78,000 mark. Nifty lost nearly 100 points. Mid-caps saw sharper cuts, with the mid-cap index losing 680 points. Financial stocks managed to buck the downtrend, with the Nifty Bank index ending in the green. Right, in the money market, the rupee hit a new low against the US dollar. The rupee weakened by about 11 paisa today. $1 US is now almost worth 88 rupees. 10-year bond prices and the yields remain largely flat ahead of the RBI monetary policy decision tomorrow. 70% of market participants polled by CNBC-TV18 are expecting a 25 basis point rate cut from the RBI tomorrow, while 60% are betting on the RBI to announce additional liquidity measures in what will be the new governor Sanjay Malhotra's first policy. Now, Ritu Singh is here with the report.
For the first time in nearly 5 years, the Reserve Bank of India could kick off a rate-cutting cycle, making Governor Sanjay Malhotra's debut policy meeting one of the most closely watched in recent history. Now, RBI has been injecting massive liquidity into the banking system in recent days, which some interpret as a precursor to a rate cut, despite the relatively high inflation. So the CNBC-TV18 monetary policy poll shows 70% of market participants and economists are betting on a 25 basis point rate cut this time, driven by the need to support growth. But ignoring the rupee's depreciation can prove tricky, which is why 30% of the respondents still voted for a dovish hold. Now, liquidity remains tight in the system, but a cash reserve ratio cut at this point seems unlikely. But 60% of the respondents do expect additional liquidity easing measures like more OMOs, longer duration repos, or a cut in the incremental CRR for NRI deposits. Of course, markets will also watch closely for any clarity on the new LCR norms, which are set to kick in from the 1st of April. Now, external factors are going to add a lot of complexity to this policy. RBI is likely to acknowledge the risk from the tariff threats and stay nimble, but a small section of the market believes that inflationary tariffs and a weakening rupee could be used as an argument to push out rate cuts. But the broader consensus is RBI will allow a gradual rupee adjustment while ensuring stability. Now, markets are already pricing in steeper rate cuts beyond February, with most expecting anywhere between 75 to 100 basis points cut in this cycle to give a helping hand to growth. Now, despite these expectations of rate cuts, the monetary policy stance is likely to be left unchanged at neutral. But as for the tone, 40% do anticipate a dovish tilt, while the majority expect it to be neutral. Now, growth expectations are softening. 90% of our respondents predict that RBI will lower its FY25 GDP forecast to 6.4 to 6.5%. That could further strengthen the case for easing. But the inflation forecast is unlikely to be tinkered with in this policy. So all eyes are going to be on Governor Malhotra's debut policy move. Will he pull the trigger on a rate cut or stay cautious amid global risks? The stakes are high and the markets are going to be watching.
Right, the markets are going to be watching. Thank you, Ritu, for that. Lata Venkatesh is here with on what we can expect from the governor's first policy.
Well, it's one of the most awaited monetary policies, and the rate cut is priced in. The ubiquitous question is, rate cut hai aur kya? That's the question. Will there be a CRR cut? More than a CRR cut, the market is going to watch for whether he says, I will give liquidity as and when required, or whether he says, I will keep the liquidity surplus. So the difference between adequate and ample liquidity will be very much watched. Another question that people will watch is there a rate cut in April? Is he signaling more dovishness? That's not priced in yet. And then about the regulations. You know, the RBI has been pulling banks from not growing credit too fast till deposit catches up. They have been unhappy about the credit deposit ratio being high. Do they say, okay, now the credit deposit ratio is fine? That will be much watched. And then, of course, the three big regulations that are expected: the liquidity coverage ratio LCR rules, the ECL, expected credit loss rules, and the higher provisioning for infrastructure projects. Does he postpone all of them in no uncertain terms? That's what people will watch out for. And finally, an expectation, a hope, that the higher risk weight on NBFC loans, it was raised from 100 to 125%. Will that be reduced? These are the things people are waiting for, much more than the rate cut, which is priced in. Well, my own two-bit, the governor is unlikely to say, I will keep liquidity surplus. He has to worry about the rupee. Nor can he easily signal a rate cut in April as well, because then people will short the rupee. It becomes cheaper to short the rupee and go into dollars. He will, of course, clarify on LCR, saying that, this is wartime. You don't bring out structural reforms at a time like this, so he will definitely defer them. But asking for a reduction in risk weights on NBFC loans, which banks give NBFCs, I doubt that will be there. So looks like the market will have something to cheer, but let's see.
Thank you, Lata, for that. Moving on, China has accused the United States of making false allegations about its role in the fentanyl trade to justify tariffs on Chinese products. The complaint has been lodged with the World Trade Organization. In the filing, China said that the measures were discriminatory and protectionist and violated trade rules. WTO's settlement framework allows 60 days for dispute consultations, after which China has the right to adjudication by a panel of judges. And staying with China and the US Postal Service has agreed to resume accepting shipments from China and Hong Kong. This comes less than 12 hours after announcing it would stop doing so. The Postal Service said it's working with Customs Department to implement an efficient collection mechanism for the new China tariffs to ensure the least disruption to package delivery. Now, the move comes amidst tariff war between the two countries. All right, the big story back home, uproar in Parliament after the US government released a video of Indian nationals in chains and handcuffs being deported back to India after trying to enter US illegally. A video posted online by the US Border Protection Force showed Indians being boarded into the military aircraft. The video has music overlaid on it and shows people in chains and handcuffs. The head of the US Border Patrol called it successful deportation of illegal aliens to India. This was the farthest deportation undertaken by using a military plane. Opposition parties protested what they called inhuman treatment of the Indian nationals by the US. Now, opposition lawmakers, including Congress leader Rahul Gandhi, protested outside the parliament. Some wore handcuffs and carried placards that read, "Humans, not prisoners." External Affairs Minister Jaishankar said India is engaging with the US to ensure deportees are not ill-treated. He also promised to crack down on the agents facilitating illegal migration.
Deportations by the US are organized and executed by the Immigration and Customs Enforcement ICE authorities. The standard operating procedure for deportation by aircraft used by ICE, that is effective from 2012. I repeat, that is effective from 2012, provides for the use of restraints. However, we have been informed by ICE that women and children are not restrained.
जब हम वहाँ पे पहुँचे, वहाँ की गवर्नमेंट ने कोई भी एक्शन, जैसे हम कोई भी एक्शन लेते हैं, लीगली एक्शन लेते हैं, हमारी सुनवाई होती है, ऐसे कोई सुनवाई नहीं करने दी है। कोई हमारे बयान नहीं हुए, कोई हमने लॉयर वगैरह नहीं हमारा हुआ, तो उन्होंने हमसे बिना पूछे कि तुम क्यों आए हो, क्यों अपनी कंट्री छोड़ी है, हमसे कुछ नहीं, हम शरण मांगने गए थे, कुछ वैसा नहीं, हम क्रिमिनल नहीं है। उन्होंने ऐसा ट्रीट किया, हमें एक जंजीरें बांध के, जैसे हाथों में जंजीरें और पैरों में जंजीरें, लेडीज़ बच्चों जो 18 साल से हैं, 18 साल से ऊपर हैं, सबको जंजीरें बांध के।
बहुत बातें की गई कि मोदी जी, ट्रंप जी बहुत अच्छे मित्र हैं और मोदी जी ने ऐसे क्यों होने दिया? क्या हम अपना जहाज़ नहीं भेज सकते थे उनको लेने के लिए? इस तरह से क्या इंसानों के साथ बर्ताव किया जाता है कि उनको हथकड़ियाँ पहना के, बेड़ियाँ पहना के भेजा यहाँ पे?
Shares of State Bank of India declined after third quarter margins shrunk to a 30-month low. Now, deposit growth rose by just 2% sequentially. However, asset quality improved and slippages dropped to a 2-year low. Abhishek Kothari is here with more. Abhishek, tell us more about the bank's performance.
Well, SBI's result was weak on the net interest margin front, and that disappointed massively. So overall net interest margin is at 14-quarter low. The domestic net interest margin is at 15-quarter low, while the international net interest margin is at 7-quarter low. What's not worked in the net interest margin is that despite loan growth being healthy, they have not been able to command on the yield side, and that's impacted them. So the deposit growth was only 10% YOY and about 2% sequentially, but their interest outgo or interest expense growth was much higher. So cost to income ratio is at 4-quarter high of 55.1% versus 48.5% in the previous quarter. On the positive side, the credit deposit ratio is at 23-quarter high. The annualized slippage ratio, that is the quarterly annualized slippage ratio, is at 9-quarter low of 0.4% versus 0.5% in the previous quarter. Analysts were working with a higher slippage ratio this time around. So their asset quality is the best in last 10 years or even more. Gross NPA ratio has declined to 2.07% versus 2.13% in the previous quarter. Robust fee income growth. Fee income has grown higher than the overall loan growth also. So it's grown at 16.4% YOY and close to 6.5% sequentially. With reference to the PNL to ARPOL, the NII was 2.7% below ARPOL. However, the profit was higher by 5% to ARPOL. Back to you.
Right, thank you, Abhishek, for that. On that note, we'll slip into a short break. Coming up next, more than 100 employees at the Samsung plant on the outskirts of Chennai are up in arms against. And more details when we return.
TV18 weeknights at 7 p.m.
For the first time in nearly 5 years, the Reserve Bank of India could kick off a rate-cutting cycle, making Governor Sanjay Malhotra's debut policy meeting one of the most closely watched in recent history. Now, RBI has been injecting massive liquidity into the banking system in recent days, which some interpret as a precursor to a rate cut, despite the relatively high inflation. So the CNBC-TV18 monetary policy poll shows 70% of market participants and economists are betting on a 25 basis point rate cut this time, driven by the need to support growth. But ignoring the rupee's depreciation can prove tricky, which is why 30% of the respondents still voted for a dovish hold. Now, liquidity remains tight in the system, but a cash reserve ratio cut at this point seems unlikely. But 60% of the respondents do expect additional liquidity easing measures like more OMOs, longer duration repos, or a cut in the incremental CRR for NRI deposits. Of course, markets will also watch closely for any clarity on the new LCR norms, which are set to kick in from the 1st of April. Now, external factors are going to add a lot of complexity to this policy. RBI is likely to acknowledge the risk from the tariff threats and stay nimble, but a small section of the market believes that inflationary tariffs and a weakening rupee could be used as an argument to push out rate cuts. But the broader consensus is RBI will allow a gradual rupee adjustment while ensuring stability. Now, markets are already pricing in steeper rate cuts beyond February, with most expecting anywhere between 75 to 100 basis points cut in this cycle to give a helping hand to growth. Now, despite these expectations of rate cuts, the monetary policy stance is likely to be left unchanged at neutral. But as for the tone, 40% do anticipate a dovish tilt, while the majority expect it to be neutral. Now, growth expectations are softening. 90% of our respondents predict that RBI will lower its FY25 GDP forecast to 6.4 to 6.5%. That could further strengthen the case for easing. But the inflation forecast is unlikely to be tinkered with in this policy. So all eyes are going to be on Governor Malhotra's debut policy move. Will he pull the trigger on a rate cut or stay cautious amid global risks? The stakes are high and the markets are going to be watching.
I'm still generally pretty constructive on the Indian market. Obviously, the valuations are higher than many other EMs, but generally speaking, stronger fundamentals, at least long term, to go with those higher valuations. India is also, at least at the current time, less in the crosshairs of some of these potential tariff announcements. There's lower overall export risk to the U.S. in terms of the size of the numbers compared to China, compared to Canada, compared to Mexico. And so that keeps India fairly well positioned in this year where there's a lot of headlines that investors can wake up to and find various disruptions on their positions. It doesn't mean that there's no headline risk, but overall, I think it's rather well positioned and still has all the structural uptrends.
I think the underlying innate technology is just right on the threshold, and we'll get there with the next models. But now people have got to go off and build all these services. So someone in this room hopefully will figure out what the AI tutor of the future looks like, and that'll be a population scale thing, and it'll think what that would do if every kid on Earth, this year got an AI tutor that was provided like a better education or helped to provide a better education than anybody could get last year. Think what it would mean if we could have like an AI medical diagnosis system that was better than anyone could get last year.
More than 100 employees at a Samsung plant on the outskirts of Chennai are up in arms once again. Now, protesting employees demand the reinstatement of 3 workers who were suspended for alleged connections with the workers' union. Now, Jude Saneth has more details from the protest site.
The latest face-off between employees and management at Samsung's Sriperumbudur plant just outside Chennai have surfaced days after 3 employees of the plant were suspended by the company for allegedly engaging in activities deemed detrimental to the interests of the South Korean electronics giant and its operations in India. In fact, we're coming to you just a few meters from the plant itself, where, as you can see, a line of company buses and barricades have been erected so as to ensure that members of the public don't quite see the scale of the sit-in protests occurring just beyond this line of vehicles. But what we have been told is that well over 100 employees have been sitting in on protests demanding that these 3 employees be reinstated after their suspension itself. Now, interestingly enough, employees and members of the Samsung India Workers Union have claimed that the suspension has taken place not on account of disciplinary reasons, but simply because these employees were members of the recently registered Samsung India Workers Union. They've also claimed that Samsung does not quite want any on-ground representation of their employees engaging in any union activities, at least on campus. However, in a statement, Samsung said, and I quote, "The employees in question violated the company policy and have been suspended temporarily and will be subject to appropriate disciplinary action following a formal inquiry," end quote. Remember, this isn't the first time that issues have cropped up between Samsung's management and employees. Back in September, well over 1,100 employees staged a protest outside the plant, demanding for better representation, better pay, and privileges that they said every employee deserves, post which Samsung agreed to some, if not many, of these demands. However, what we are picking up from the ground is that a breakdown between Samsung and its employees has now taken place with regard to these demands, and more importantly, with regard to representation by way of the union, these employees allege, while Samsung says this is more on account of a disciplinary issue which will be resolved, or a verdict will be passed by a disciplinary committee in a few days from now.
Right, with that's a wrap on this edition of Business 360. More news and updates continue right here.
Scientists could go cure every disease faster. And so, we've been waiting for this moment for a long time. I think we're going to deliver something that can help with it, and now people have to go build with it. Other side of it, the cost for a given unit of intelligence 1 year later seems to fall by about 10x. Moore's law was a 2x every 18 months for the number of transistors on a chip, and that changed the world if you waited a few decades. But what's happening with the reduction in cost in AI models is extraordinary. Now, I don't think it means that the world's going to need any less AI hardware, because you bring the cost down and just the people are going to use it for a lot more things. The total number of dollars will go up. But that's a really exciting thing happening.
We've had a lot of evidence so far that Trump's tariffs are looking transactional rather than actual tariffs. In other words, we've seen tariff announcements for Colombia, for Mexico and Canada, all either reversed or delayed. And the only country where we really do have increased tariffs with retaliation, of course, is in China. And so I think that's generating a huge amount of uncertainty. I mean, investors do not like uncertainty. Companies don't like uncertainty. It's very hard to say where we go from here. I do not assume that we've seen the end of any possibility of tariffs on countries like Mexico and Canada. But my word, the speed of events is very confusing, and investors, I think, are therefore very nervous about it. And it's interesting, the US is underperforming the developed markets this year. As you've noted recently, the dollar's lower. So this is all, I think, creating a lot of uncertainty, which I think will have an impact on investor behavior.
The union budget has rejigged the income tax slabs to put more money in the hands of the middle class. Will it spark a revival in consumption, and can the government stay on the path of fiscal consolidation as promised? What about the capex push? CNBC-TV18 and India Inc. quizzed the top architects of the budget at our annual budget verdict. India's top bureaucrats who are in charge of the economy were in attendance at the interactive session, which was the first dialogue between the government and industry after the budget's presentation. US President Donald Trump's tariff threats are rattling the global markets, but India's finance secretary is not perturbed. Tuhin Kantapande believes the apprehensions over tariffs is unwarranted, but the bureaucrat also asserted that India must build a domestic value chain to insulate itself.
We should not really anticipate something which is not really stated. The kind of thing which you say, tariff against India. This has not been stated. I mean, if the US admin or anybody has not really stated, so why should we really be saying so? So that will be premature and not warranted, because, it's these are different grounds on which the tariff is being put in. So far as we are concerned, we are a very open economy. If you really look at the US imports into India, most of them are into a very, the tariffs are very low. They're in the range of, up to 10%. They are in 2.5 category, they are 0 category, 0%, 5%, 7.5, 10. Incidentally, if you look at our industrial goods, out of 8,400 odd tariff lines, 6,000 tariff lines are already below 100, close to the ASEAN rates. And these are MFN rates, which are equally applicable to US as well. So therefore, India is not protectionist and neither intends to be protectionist. And therefore, I would say that this is an apprehension which is probably.
I think it's right now a wait and watch perspective. I mean, on the one hand, straight away you could say that it might be advantageous to us because tariffs may come down more heavily on other trade rivals, so there could be that issue. But if you look at it from another perspective, you could have a scenario where if the sourcing is from the same country, then will you have a problem in further exports? So we are not yet clear as to how this will play out, and we need to be prepared for all scenarios. I think there is reason for hope, and I think there is reason to assume that electronics as an export from India, which has suddenly become very big in especially what we send out to the US, we need to sort of ensure that we build the domestic value chain more significantly and increase domestic value add so that we protect ourselves against any possible pushback on the value addition point of what happens in India.
India is all set to flex its defence manufacturing muscle. Rajesh Kumar Singh, India's Defence Secretary, told me at the budget verdict yesterday that the ministry intends to end the fiscal year with orders worth 2 lakh crore rupees or more. This would be close to double of last year. Also, the Secretary said that India is willing to procure more from the US if the US meets the requirements on quality and indigenization. Here's the Defence Secretary in this.
We are on pace right now to sign the largest number of contracts ever in our history. Okay. The largest last year was another high of 1,08,000 crores. This year we've already hit 1,15,000, and my intent is to double last year's number before the end of this financial year, and the result in terms of expenditure will follow thereafter.
So doubling by the end of this financial year, sir?
Yes, I intend to cross 2 lakh crores and maybe even more. Coming back to the other issue of reforms, from day one, after I've joined this ministry, my focus has been on procurements. That's an area which has always been bedeviled by delays. We've identified where the delays are. The delays are in a lot of, in 3 specific areas essentially. In terms of the delays in finalizing the documents, the RFPs, delays in the field, what they call the field evaluation trials, and thereafter the delays in what they call the cost negotiations. All of them take years at a time. And those are the areas where we are going to ensure accountability in terms of much shorter timelines. And that is why, as I said, I intend to ensure that our contracts this year will be double, if not triple of last year. And we intend to ensure that order books are full across the board in the defense industry so that everybody has visibility, everybody from the OEMs down to the component manufacturers, that their order books are full for the next 4 to 5 years and everybody is on the same page when it comes to fulfilling our capability gaps.
Well, that's quite a headline, sir, when you're talking about doubling and tripling and order books being full for the next 4 or 5 years. But if I may extend this conversation to react and respond to what has happened globally, and the comments coming in from President Trump saying very specifically that India needs to do more by way of procuring security equipment from the United States. I was just taking a look at the numbers, sir. India's already bought defense technology worth over $25 billion from the US since 2007. So when you hear President Trump saying that we need to do more in terms of procuring US security equipment, what does this mean? What should we realistically expect? What's on the table?
So first of all, of course, this has nothing to do with the budget.
No, it doesn't. But it's linked to the overarching landscape that we're dealing with.
Sure. So we do have some procurements which are on the anvil where American companies would be in the picture. And as long as they are able to meet our requirements in terms of quality and in terms of certain levels of indigenization, of course, we'll be, those are carrots that we will be able to dangle before the Americans, and hopefully we'll be able to give some of those contracts. Let me stress that India has already ordered some 1,500 odd civilian aircraft from both American and from Airbus about one and a half years back, over the last one and a half years, which means in a sense that we've lost some leverage there. We've also already ordered these Predator drones a few months back. So yes, we are already, meeting a good proportion of our requirements from capable American companies, and we intend to continue doing so. There will be significant buys, and some of that will go to the US as well.
Electronic and IT Secretary S. Krishnan confirming that OpenAI CEO Sam Altman expected to meet Prime Minister Modi and Minister Ashwini Vaishnaw when he lands in India. Krishnan did not rule out a potential tie-up with OpenAI, but added a big caveat. AI models will have to be built on open source foundations, and OpenAI is not.
He is expected to visit New Delhi, and he is expected to meet hopefully the Prime Minister or the Minister for Electronics. We presume it is to discuss on, what OpenAI can do for India and the kind of applications of OpenAI in the country, and how well India is equipped and what we can do to benefit from this. OpenAI's model is not an open model.
Yes.
Right? So the ChatGPT is not an open model. So if at all we are going to build on models, it has to be on other open source models which we pick up and work towards.
There is a need to recalibrate the RBI discussion paper on crypto assets. That's the word coming in from India's Economic Affairs Secretary Ajay Seth. Remember, the RBI in its discussion paper last year had flagged cryptocurrencies as a negative force when it came to India's financial stability. However, the Economic Affairs Secretary conceded that several jurisdictions had changed their position on cryptocurrencies, or digital assets as they're called, since that time, which necessitates India re-looking at its own stance. Take a look.
Cryptocurrency, as we are aware, we have done a discussion paper, including at the senior level participation from the Reserve Bank of India, and the committee had finalized the discussion paper. But thereafter we find that when it was about to be issued, that several jurisdictions, and you named one, but more than one jurisdictions have changed their position on crypto assets in terms of their scope, where they see the utility, including for settlement, multilateral settlement of payments, cross-border payments. So there's one side, they're saying that much stronger use of crypto assets as a stable coin, which will have a large implications for an emerging economy like ours. The second one, using it as a multilateral settlement mechanism, which will again has a very major implications that how the global systems are organized. So in that context, we are recalibrating the paper, because the purpose of that paper is to pose the right questions to the stakeholders so that we get the right answers in terms of an appropriate answer to inform our policy making.
But what does the recalibration mean, sir? Because at this point in time, the RBI was very clear. They don't believe that cryptocurrency is the road to take at all. Is there a change in approach, given the fact that countries like the US are now full-fledgedly moving forward with cryptocurrencies?
So I will mention it that in 2023, when India had the G20 presidency, at that point of time, the stances of various jurisdictions, and I'm using the word jurisdictions instead of using the word countries, was fairly well known, and there was a stable position each one of them have taken. And this is one asset class which doesn't believe in the borders. We have to, what others will do, we have to be fully conscious of before we decide our own policies. It is not just a stable coin. At the 2023 issue was only different jurisdictions were looking for crypto assets as a stable coin. Right. Which is not a stable coin, doesn't have any much value. But a stable coin can cause a significant risk for our economy, for all emerging economies. Then a new element has come in. Some jurisdictions talking about a cross-border settlement doing it here, which is altogether a new dimension being brought in. So that requires to getting back not from the ground zero, but certainly going to the last stages of the drawing board and saying that do we have to recalibrate few of the questions so that we understand the risks very clearly and what can be the possible policy responses.
So by when do you believe this recalibration exercise will be over? And I'll get Mr. Nagaraju to comment on that as well.
I'll say that soon, but it may take a couple of months, but not longer.